Good morning. Good morning. Thank you so much for joining us for day 3 of our 6-day MetaStock Traders Conference. It's quite an event. We do it once a quarter, and it's just awesome that so many of our partners and friends are willing to come together and make such a great event possible. Thank you again so much for joining us. If you haven't registered for today's event, it's really simple. Well, let me say this first. If you're watching this on YouTube right now, you may have not registered for this event. If you're watching on GoToWebinar, you probably did register for this event. At any rate, having a little bit of a freezing issue here. I wonder if that's just on my side. Yes, okay. We're still going good. Sometimes the old studio here down in South Texas doesn't work as planned, but right now it seems to be doing okay. Anyway, so if you've registered for today's event, that's great. If you haven't registered for today's event, the reason you might want to register is we do have prizes, door prizes that Jeff gives away during the day, and the only way to get on that list is to register. There's no purchase necessary. Just go to metastock.com and click on this. You'll find this page, and today is Wednesday. This page shows you the entire schedule for the whole 6 days. Today's, of course, Wednesday, February 28th, and you can check out today's speakers. They include Rahul and Scott Brown and Jeff Tompkins and others. You can go check that out yourself, but the thing you want to do to register for today's event and for the entire event, just once, you don't have to register multiple times, you just click here where it says register now for free, and it is absolutely free. But the information, as we say, is priceless. Hey, we are MetaStock, and if you haven't heard of us, I'm going to play really quick a little video that tells you all about us. And stick around because we'll be starting our main event in 7 minutes and 23 seconds.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
All right, so much going on today. We really appreciate you joining us. Again, today's speakers include Rahul Mohindar, a great speaker from India, quite a personality over there as well. Our very own Scott Brown, the CEO and president of MetaStock, I should say the owner of MetaStock. And just a great, it's 8 hours long today. I believe it's 8 hours long tomorrow, and then 8 hours again on Friday, and then I think 6 hours again on Saturday. But if you want to check out that whole schedule, again, just go to metastock.com, the homepage, and click on the banner on the top, and it'll take you to the registration page, which also includes a schedule. Also, if you are on our email list, you've received an email every morning telling you what's on today's agenda, so there you go. Hey, and make sure you say hello to us. I see now we've got Serge and Tavanda and some others already online right now. Make sure be vocal. Chat in, say hi. You're not going to break anything. I don't think so. We've never broken the chat yet. Let's try today. Questions, comments, anything you want. We just ask you to be respectful of the presenters and your co-watchers. That's really it. Hey, so we have 2 minutes and 16 seconds before we go. Another thing that I would love for you to do is go ahead and like and subscribe and not ring the bell, select the bell so that you'll be notified every time we have a live event, which this sort of live event is about once a quarter. The multi-day events, we have full day events about once a month, and about once or twice a week we have 1 hour webinars. They're always very informative and educational and generally fun to watch, and we really do appreciate it when you join us. Okay, I got about 1 minute and 45. What else do I need to tell you? If you haven't yet, you might want to go ahead and register for today's event, because when you do register, then you become eligible for the door prizes that Jeff gives away periodically throughout the day. No purchase necessary, and you don't need to be even in attendance. You just need to have registered for that. And if you receive an email from us in response to that, all you have to do at the very bottom is say, please stop sending me emails, and we will. That's my job. I take it very seriously. All right, we got about 1 minute left, so I'm going to go ahead and play some jazzy music and make sure that Mr. Gibby, coming at you from Salt Lake, is good to go. It looks like he is. I can see him. I see that he's talking. Successful trading, and thanks again for joining us.
Hello, everybody. It's good to see you. Welcome. Just a couple notes. If you're watching us on YouTube, we would really appreciate it if you like and subscribe. We're just getting up to about 78,000 subscribers, and it would make Greg happy if you subscribe and like. So it made me happy too. And I understand there's karma involved, but I'm not sure about that. So if you are watching this on YouTube, make sure to like and subscribe. I got a comment from a person in the email last night, and he's like, I was going through some of your videos, and I'm 76 years old. I think you might have infinite content for me up there. And I thought that was, hopefully you'll be able to watch all of the videos, but we've been doing videos forever. There's such good content up there. So subscribe to the video. We're always doing new videos. Subscribe to the channel. It helps a great deal. So I was just talking about how great the lineup looks today. Let me go ahead and get that out of the way. Let's go ahead and kick off day 3. So I hope you're doing well. You're joining us today. We're right here in Salt Lake City, Utah. Rahul Mohindar is going to join us from Dubai, I believe. He might be in India too. But tell us where you're at this morning. Where are you joining us from? Let us know in the comments. We love to see kind of you guys talking, and it does help. So let us know where you're from. Salt Lake City is sunny. I had to close the blinds a little bit, but anyway, let's get to the legal disclaimer. Today's demonstration is designed on using MetaStock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security. We're not paid for the promotion of securities. No information contained in this presentation should be construed as an investment advice or solicitation for you to buy any security. So, hello, Bernadette from Australia. Thanks for saying hi. Dennis, thank you for letting me know the audio's working. All right, I better get out of the way. Before I do, though, I do want to thank some of our sponsors. We've got AAII, sponsoring AAII, American Association of Individual Investors. Great organization. I should have a slide here, and I don't know where it is, but I'll figure that out later. AAII.com. CMT Association, cmtassociation.org, another great, well-respected, well-reputed organization that can help you get a CMT designation after your name. And you can find out more about them from cmtassociation.org. Our last sponsor that I want to mention today, and our longest running sponsor, is the Technical Analysis of Stocks and Commodities magazine. They've been sponsoring our event for, I think it's 12, 13 years now. All of the events we've done in the last decade have been sponsored by Stocks and Commodities magazine. It's a great magazine. You can actually find them at traders.com. And I'll make sure to have some slides after Rahul to kind of talk about our sponsors. We really appreciate the sponsors. They help us make the event work, and they're all great to work with. So all of that important stuff out of the way, I do want to introduce to you a very, very good friend of mine, Rahul Mohindar. I know when I talked a few days ago, I talked about how I've been at MetaStock for like 27 or something years, like it's been a long time. That whole time, Rahul has been a partner of MetaStock. He runs offices in India where he trains people how to trade. He's been a guest speaker in CNBC India, CNN India, and he's the only presenter that has the distinction of designing the first trading methodology that I ever traded my own money with. So we love Rahul. He does a really, really good job with this. And it's going to be his turn to speak. Rahul, how are you doing today? Hello, Frank from the Netherlands. Sorry, let me go ahead and make the presenter over to you. How are you?
Doing great, Jeff. Always very kind of you to give me that introduction. Thank you so much. I have to say that you guys do a great job. What a lovely lineup of speakers. I mean, 3 great days of learning. It's hard to digest all of this. So great show.
It is. And that's why I put it on YouTube for everybody to see anytime they want to. So Rahul, I can hear you though, and I can see you, and you sound great. Are you in Dubai or India? Dubai, I bet.
You got it right.
All right. It's all yours. I'll get out of the way. Take it away.
Thank you so much, Jeff. All right, folks, limited amount of time, but a lot to talk about today. And, I would love to dive into some of the uh, studies that I have to show to you because at the end of this short presentation, I also want to make sure that you go back with some learnings which you can practically implement and trade upon. So let's dive right into the inbuilt RMO for starters, and I'll kind of build up from there. So the inbuilt RMO is inside of MetaStock, and it's not an add-on; it's the built-in RMO. I will talk about the ATM in a few minutes, but just to start with, it all started when the RMO was introduced into MetaStock and became a very popular template. This was a template I designed around my own trading. Uh, I trade for a living. I'm not somebody who is a stock market, uh, advisor. That's not my main business. In fact, that is not my business. The only thing I do is really trade and invest into stocks, commodities, forex. Pretty much do it in global markets. So one of the reasons I'm in Dubai is it helps me trade globally and track the world. It doesn't restrict me to a particular geography. We're literally the center of the world. And I think the RMO is one of those tools which aims at working in any time frame and any asset class. So, I get this question very often. I trade Forex. Will the RMO work? I trade commodities. Will it work for me? I trade the options market. Will it work for me? I think we all have to understand that, the markets move in a very similar fashion. The whole cycle of fear and greed is very similar. The nuances are small, but I think the similarity is extreme when I say that it's demand which drives the stock up and it's supply that drives it down. So one of the things which is important for me is to measure this movement of demand and supply or get an idea of direction because fortunately or unfortunately, there's a lot of jargon out there. And my job here is to simplify that jargon as to, is this market looking bullish or bearish? And I think it all comes down to direction. The biggest issue is today we're reading about EPS, we're reading about reports, we're reading about technicals, we're reading about astrology, we're reading about gut feel, fundamentals, historical data, statistics. There's so much there. There's an information overload there, but nobody's giving you that clarity of direction. I think at the end of the day, what matters is can you look at a chart and conclude very clearly that this stock is poised to go up or down? And I think that's what is translative action. And I think that's where I want to dive in. So the RMO is all about helping you identify the primary trend. And when I say primary trend, I mean the long term trend. Let's define what I mean by long term. Well, anything beyond 60 bars, 60. The reason I said 60 bars is you may be on a 5-minute chart, and 60 bars could just mean one trading day. You may be on a daily chart, and 60 bars could mean 3 months of data. So, as long as you have a horizon of beyond 60 bars and you're trying to trade in the major trend direction, that's what I mean by long term or primary trend. There are internal trends, what we call secondary trends or shorter term trends, which are within the primary trend. And that's not something I care about too much. I'm more trying to understand the essence of the long term, the powerful trend that exists, and try and trade in that direction. So, in other words, if the long term trend of a stock is up, I am going to try and look for opportunities to buy. I'm not going to try and fight the current where the river is going upstream and I'm going to try and go downstream. So it's a simple setup where we're trying to go and find that primary trend and trade in the direction of the primary trend. The quest for building the RMO, I love talking about this a little bit because this is just something which is very dear to my heart because when I built this for my own trading, it was all designed around the fact that I was using a lot of conventional tools and nothing against the MACD or an RSI or a stochastic. They're classic indicators. But I think the markets are far from working on perfect classic basis. For example, a stock goes up, price makes newer and newer highs. You see the RSI giving you negative divergence. And what happens is the entire trend is going up, up, and up, but you're keeping on extending that divergence line over here. So uh, it worked as a deterrent for me. It kept scaring me on this uptrend rather than giving me the confidence that you're still good to go. So I decided that it doesn't matter as to is there divergence or not. The real question is the divergence ending? Can I have something which clarifies that trend to me? Right? The MACD often would have several crossovers, sell crossovers, buy crossovers, multiple ones, sell, buy, sell in quick succession sometimes. And that would often confuse me. So even in a stage where I'm taking you way back into data pre-COVID, 2019 to 2021, where we had this big run on Apple. Look at how Apple kept making newer highs, even from values of $40, $50. You went to newer highs, and every time, what happened to the RSI? Kept giving you a negative divergence, and you would keep stretching that line to the right on the top and saying, oh, the price is making a new high, but the RSI is not, it's overbought. So all of this really perplexed me that I need something simple. I can't deal with so many divergences and crossovers and crisscrosses. If I look at the RMO, which is the Rahul Mohindar oscillator, which is the green histogram on this chart, if this is above a value of zero, don't worry about the shape. If you look over here, it's below zero and above a value of zero here. I am constantly looking at where do I buy, right? I'm not bothered about the sell arrows or the red bars. I'm only looking for the blue bars and the buy arrows on this price chart as an opportunity to enter that longer term trend direction. So I'm being extremely focused of trying to be with the long term trend. So yes, that does mean I would miss out on a 5 day, 6 day down move within that bigger uptrend. But the point is, the bigger money, the bigger strength, the greater probability of success lies in trading in that long term trend direction. So this is absolutely critical, that we need to understand that trading in the direction of long term strength increases our odds of winning. If you're going to try and buck the trend, and this is what a lot of people try and do, I've been watching, a lot of people who say, oh, the market's gone up so much. I mean, think of someone trading a stock like Nvidia. He could be trying to top pick it every time, and he'd probably be wrong 10 or 15 times, and the 18th time that he might be correct, he's beaten up so bad that he won't even attempt that trade. So the point is, don't try and buck the trend. Don't try and top pick. It's not about being heroic in trading. It's about being successful in trading. It's about trying to understand that if the longer term trend is up, let's keep trading in that direction. Another word of caution: I always tell users that have a toolkit which addresses short term, medium term, and long term trends, all three. I said a lot in that one sentence. I'll again repeat. Have a toolkit which addresses the short term trend, the medium term trend, and the long term or the primary trend. Right? We need to understand all the three, because after all, it's when short term, medium term, and long term are in a synchronized fashion telling you to buy that we have greater confidence in going long. You don't want to buy something where you say, oh, short term this looks negative, but long term it looks bullish. That's not something which is going to give you that confidence or agreement to buy. So you want a system or a toolkit which really tells you that there's an alignment of short term, medium term, and long term. Now, why do you need all the three elements? You need the three elements because biggest fear that a trader has is, the minute I take the trade, what if it backfires on me? And what does this trader do with this fear? He starts looking at multiple time frames. So let's say you're someone who trades a daily chart or an end of day daily chart. And let's say the trade backfires on you. You took a buy trade, it didn't work out, it starts going against you. You start saying, oh, no, 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 but the weekly chart looks good. When the weekly goes down and you're really, you know, uh, perspiring on that trade, losing on that trade, you say, oh, but the monthly looks good. So what tends to happen is, when you start losing a trade, you start looking at different time frames. So you look at daily, then you look at weekly, then you look just more in the effort to give your trade a chance. And when you have a system which does this all for you, which does the short term analysis, the medium term analysis, and the long term analysis, I don't need you to be hopping between time frames. So I always tell traders, if you're using the RMO system or my ATM, methodologies. The RMO ATM is the next suite, which I'll get into. I do not expect you or do not even want you to look at daily, weekly, monthly, or 5 minute, 15 minute, 30 minute. I don't need you to look at a plethora of time frames. I want you to stick with one system, one time frame, the same symbol 10 times in a row to realize that you're 7 out of 10 correct on it. For example, on this chart, you will notice there are three elements. There's the uh, oscillator, which is the green oscillator. There are arrows, which is the short term trend. And then there's a bar color, which is either red or blue. That's the medium term trend. So you can see that the short term signal comes first, followed by the medium term. So, in other words, let's look at you've got here, let's say, a sell arrow, a red arrow. Then comes the medium term trend, which is red bars. So you see the bar color paints to red. And then look at the RMO. The RMO is still bullish. In other words, it's above zero. So you may want to think that there'll be some short term pressure or medium term pressure, but really the long term trend in essence is a buy. So, in other words, where do you want to buy? When you see a blue bar and a buy arrow and the RMO is bullish, you'd rather want to concentrate on the buy trades, right? So, just looking at the RMO trade model, which is an inbuilt template inside of MetaStock. So, you right click, apply template, click on that RMO trade model. That's what you would get. So the RMO clearly establishes my primary trend. We've got to this point where we understand that trading in the direction of the primary trend gives us greater odds of winning, gives us a much better focus on the longer term direction of the stock or the big picture, as I would like to call it. And most importantly, enforces that we trade in the direction of the stronger force or the stronger trend, not trying to buck the trend. So, what we need to understand is first, you might find the arrow which comes. So you can look at this one again. A buy arrow comes here. The blue bar comes a little later, and finally the RMO goes positive when it goes above zero. Now that is also depicted on the bottom on that x-axis where you see RMO bullish. There's a ribbon which is either red or green. So you could actually just look at that ribbon and understand, okay, that's the point where the trend changed for the very first time. So where you see that vertical line is the point of change where all three trends are in alignment. Short term, of course, came the first, followed by the medium term, and now even the longer term signal is intact. So in other words, from here I can go long, and I always say buy above the high of that breakout bar. Don't just buy looking at it. I always say use a filter, buy above the high, and then move forward, right? So every subsequent buy that you get, notice you get another arrow here, another arrow here, another arrow. In other words, these are really add-on or secondary signals. They still have the blue bar, they still have the buy arrow, they still have the RMO above zero. So those are the three rules: to have an arrow which is pointing by, a bar color that's blue, and the RMO right on top, which is above zero. So when you have all three with you, that is an indication that this is an add-on. Now, why did I use the word add-on? Because the first breakout was here. This is an add-on. This is a confirmation to the same trend. What can you do with every confirmation of trend? You can go back to the immediate bottom, and one easy recommendation is count back the last 4 or 5 bars and see where's that immediate bottom. Upgrade your stop with every add-on. So I got a buy here. What's the immediate bottom? If you can afford it, try and lift that stop up and continue with that same trend. So the good thing is every add-on can not only be used to chip in to your position, in other words, add on to your position, but most importantly, I want you to focus on the first breakout and use these add-ons as a model to elevate your stop loss. So to recap, there were three things I looked at: a buy arrow, which is a blue bar, which is the medium term trend, and finally the oscillator on top, the green oscillator, which is the RMO. It needs to be above zero. If you prefer looking at the x-axis ribbon, that works equally well. So like you can see on this chart, I've cleared up all the indicators, and what I have for me is simple bar color. So again, here arrow comes first, bar color comes second, and then finally the RMO goes bullish. That's the point where you buy. This, my friends, is an add-on, and I can use this to lift the stop, right? So if you feel that you want to use the add-on and you missed out that first breakout, you can certainly come in and use that add-on to come in if you missed that first breakout. But as I told you, if you could maintain the discipline of continuing with the system, you do the next 10 trades with the same rules, same stock, same time frame, you won't have this issue about missing a trade. Right? I often get that question, I missed it. Well, you won't miss it if you're disciplined. If you're missing it means you're trying to enter midway, right? Similarly, over here, if you're on the sell side of the market, equally important. And selling short, I keep reminding traders, is exceptionally important. In fact, I would say more important than understanding where to buy, because by nature, I find and I would say it's kind of safe to generalize that wherever I've been all over the world, and I've been fortunate to travel to various MetaStock conferences across the globe, be it in Singapore, Australia, India, America, Canada, and I think I've seen that most traders by nature are bulls. They only know where to buy. They're looking only for that buy. They're not looking at where to short. Where can I go short sell? Where can I go buy some put options? Where can I get into a strategy where I can make some money on this downside? If you're going to be only a buyer, you're like a boxer with one hand. And I don't want you to be that boxer, because half the time this market is also going to go down, right? So it's equally important you understand where to exit, where to sell, where to go short. And that's important. So same rules apply. Red arrow, short term sell. Red colored bar comes in over here where my mouse pointer is. That's the medium term change. And then finally, when you see the arrow, as you can see, from bullish to bearish, in other words, positive to negative, that's where it lines up. And I've marked a vertical line. These are all points where you've got an alignment of a sell signal. So there are three rules to buy, three rules to sell. Let's recap. Arrow is the short term signal, bar color is the medium term signal, and the RMO oscillator is my primary or long-term trend signal, right? When I see an alignment of these three, that's when I'm going into the market. So it becomes very easy for me to take a decision on a chart. Let me just jump into a chart and, let's say if I opened up a chart of, which stock do we have here open? This is a chart of Meta or Facebook. And again, this is not real-time data. It's slightly delayed, but this is just a daily chart. If you can look at the RMO has been bullish for probably a good year. So you can see the RMO has not been in a negative zone for quite a while. And all it means to me is I need to be looking at where do I buy, not where do I sell. So this alignment would mean that from December of 2022 till now, which is almost 14 months, if not more, we're talking about only one question: where to buy. Would draw trend lines, they twist their trend line, they turn their trend line, they try and make that support or resistance fit into their mindset or fit into their trade. For example, if I'm bearish, I'll probably draw a line that shows you that look how it's breaking down, right? So my point is it takes out the subjectivity of various indicators and puts in an objectivity or a rule based method to come into the chart. Now, I also would like to talk about, uh, you know, a rule of trigger, which I just briefly mentioned. Often you get a buy arrow, blue colored bars. Notice the RMO went bullish here. I say use a trigger. In other words, I said buy above the high so of that bar or maybe the previous bar. Look at that high point. Unless we go past that, don't get into a buy. It's the simplest confirmation or qualification to any setup or signal. Similarly, when I get a sell, if I look at this as a red bar and a red arrow and I see the RMO is negative, don't sell just randomly. Let's sell below the low. If not this low, you can even use the previous bar's low. I'm fine. But that's the simplest confirmation of understanding, yes, this signal is validated. So I'd like you to please bring in this concept of buying only past the high or selling below low. These are very simple qualifications. And I'd say go back to the principles of the Dow theory: buy strength, sell weakness. Simplest test of strength, if you got a buy signal, just go above the previous day's high. Simplest test of weakness, go below that low, right? So follow those principles. These are the core elements which we have to keep in mind. Sometimes you can see it comes right there, so deep. You got red arrows over there, short term sell, medium term sell. By the time you got that long term sell over here, that didn't fire. Now, if you're thinking that the RMO is a system where it'll be a top picker and a bottom picker, you're wrong. It's not going to do that. That's not what we're shooting for. It's more a long term system. In other words, it's trying to align you with that long term trade. Now, nobody is giving you, an extra credit for catching the top or bottom. But yes, if I could keep you on the right side of the trend 7 out of 10 times, that is what is important. Catching the day's high or low is not that important to me, right? So my personal opinion is try and be on the right side of the trend continuously or majority of the times. That's how I'd like it to be. So you can see over here two or three things which I've done here. You've got a buy signal here which fires. You got a blue arrow, a blue bar, and then you've taken that high out. But what was bad in this? The RMO was bearish. Now sometimes you have a signal like this where you got all three over here, right? So you got blue bars. Again, you have a bullish signal. So the point is now, if I bought above that high, or should I buy above this high? I keep saying try and look for a point where I don't just buy above that one bar's high. If you can see an immediately preceding high, see if you can filter that out. But again, if you did, you get stopped. And let's look at the final point, which becomes the perfect buy point. You got the blue arrow, the blue bar, the armor bullish, and now it takes the high out. And not only does it take this high out, but it also takes out that previous high, this high, all of that. So that makes it so much more relevant. So coming back to this, what stops me from it is you notice this bar is what we call an inside day, a bar that's very small, which is tucked inside the previous bars. So usually inside days are very low volume bars which show you a lack of price action. So I always recommend avoid trades on inside days or bars that are too small in size or volume. So low volume and low volatility bars do not really help confirm a trend, right? So try and look at the back. Is there a point? So even if you get this signal as a buy and you say, look, I'm more happy buying above that, I'm absolutely fine. I mean, you're just adding a next level of filter. But I think that's what's important is you're trying to align up. So if you look at the add-on buys are not that interesting. If you kept buying above this high, it comes much later, right? They're not that interesting. It's more interesting to raise the stop. So with every add-on buy, lift the stop up is what I'm trying to tell you. So again, let's recap. First or add-on is something you need to assess. Use the first for the trade, the add-ons to build up the stop. I talked about how you need to trigger with a filter, not just trigger a trade. I want you to stay disciplined with the rules. And why do you need to stay disciplined? Do not be the type of trader that changes his time frame or changes his symbol continuously. Give yourself a fair shot on any system. Even if you want to trade a system, with diligence, till you do 10 or 20 trades in a row, same stock, same rules, same time frame, you're never going to understand how it works if you keep switching the ticker, keep switching the symbol, right? So if you started trading Apple and you need to do the next 20 trades on Apple, don't say, oh, now I'm going to jump to this and jump to that. Particularly if you're new to the system, try and establish yourself. Of course, I talked about how volume can be used as a confirmation. So if you see bars which are terribly small in volatility or volume, try and avoid those bars, look behind for higher confirmation, right? Now, the great thing is with the ATM, we have a scanner which finds these opportunities for you. So it'll automatically find out where there's an RMO 3D buy and give you those stocks in a ready list. Now, I'm not going to run the power screener, but it's a separate application on your desktop, works with both end of day and real time. If you have the real time, that's ideal because that updates absolutely live and you can see where you have a new buy signal. So in this case, if it's writing RMO 3D buy, it's already checked your blue bar, a buy arrow, and the RMO is bullish. And that's why the 3D buy. If you're someone looking for the first breakout, it's going to give you a signal like RMO 3D buy with an arrow. So when you see an RMO 3D buy with two arrows on the side, that is equal to this. And just an RMO 3D buy is equal to this. So what's the difference? A 3D sell with an arrow is the first breakout. In other words, you had an RMO bullish behind it, and it's the first sell. An RMO 3D buy with two arrows is the first up breakout, where you have red bars behind it, are more bearish behind it, and therefore is the most important point. So you're really looking for the ones with the arrows, right? The 3D buys are really add-ons, and you may use the add-ons either to build on to your existing trade or, as I was explaining, to lift your stop. So intelligent sorting is something we added within the power screener. So you could just double click on the RMO column over here, and this would automatically, in a real-time fashion, give you a block of bullish versus bearish. So maybe on this list, I've got, the top 30 or 40 stocks which I track. And of course, this is not current, but just taken a quick screenshot some time back. And you can see that majority of the market is green, which is bullish. And you could set this to any time frame. For example, this was set on a 30-minute chart. You could set it to an hourly, a 10-minute, a 5-minute, a daily, a weekly, whatever works for you. I mean, the idea is stick to one time frame. I'm exposing you to a plethora of time frames today because I understand a lot of you trade different stocks, different time frames, and my job here is to educate you and give you that exposure of various time frames. But in reality, I personally like to focus on one time frame, and I too suggest to you stick with that one time frame, right? So please look at using the Power Screener as an application. And if you still prefer using the inbuilt MetaStock Explorers, that's also a great option. When you have the ATM add-on, we give you the integrated buy and sell. So where you're looking for, where do I have all three aligned? So if I don't have the ATM, I have to scan for which are the stocks in bullish or bearish, then use those results to further scan for blue bars and further scan for swing trade buy or sell arrows, right? So that was getting a tedious task. So in the ATM add-on, we added a concept of integrated signals, where you get a signal where all three have aligned right on that bar, which you are, right? So finding these trades becomes really easy. And finally, let's talk about the ATM RMO super filter, which is my favorite. The super filter is a filter to the existing RMO that you have. And the super filter, what it does for you is it tweaks the RMO and adjusts it to the stock. So let's talk about how theory versus practicals work. When you look at theory and you read the books, these are the kind of trend lines that you draw. But when you come to your real world of charts, you sometimes can't draw that line. It's too zigzagged, it's too jagged, it's too difficult to even draw a line. You need to do something to, smoothen that chart out. So, in other words, there are times where the RMO goes from bullish, bearish, bullish, bearish, bullish, bearish. You look down on that x-axis. And I've tried to take something difficult here where you can see it's gone from bearish to bullish a couple of times. So when you look down on that axis here, you can understand that there's a lot of action. But when you look at the bar colors now, and mind you, earlier we were talking about just two bar colors. Now I've got four bar colors. And that's the super filter, these four bar colors. The four bar colors are orange, red. Orange is bearish, red is extremely bearish, light blue and dark blue. So as you can understand, light blue is bullish and dark blue is, of course, the strongest form of strength. So in other words, it's filtering the inbuilt RMO itself. So notice the RMO was bearish, bullish, bearish, bullish. But what was the color here? Just bearish. So it smoothened out the existing RMO. It slowed down not to give you the chop, right? So even though the arm was a great setup, I wanted to make something that was tailor made. So think of it as this is an armor that's not just working to static formula, it's working to dynamic formula, it's working to uh, the volatility of the chart that you're looking at. So the super filter only comes with the ATM add on. And the beauty is it works, it tailor makes the formula for the stock that you're in, right? So if you have an extremely volatile stock, it would give you a quicker signal. And if you have, a stock that's getting sideways, it would slow down the signal. And how it does that, it keeps measuring the volume and volatility elements to come to that conclusion. So in other words, when you see a deep red, that's the full form of selling. You want to use that bar as low as a sell point and go short on it, right? So the super filter is a great way to iron out some of these, sideways or patchy areas. Look at this area of about 30, 40 bars towards the end of this chart. There's some blue, there's some red. There's a bit of noise here, and maybe you trickled into a bit of a buy. There's always that little iota of doubt. It creates a disturbance in the mind. The minute you use it with super filter, that whole area is so clean. It's just a different experience altogether. And the point is, uh, this really tunes things up for you on that chart to give you a much more clarity, because I think that's the power of computing and automation. Earlier we couldn't do things like this, and now you can. So the ATM does a fantastic job of tailor making the indicator, where you just see the red even here comes much quicker than the original RMO. It's only 3 days after that the RMO slips into a negative region. So it's faster and it's slower. It's faster to give you the signal here, but it slowed down over here and didn't turn into a buy. And thankfully so, because that would have been a sideways patch. So the beauty is the dynamics are wonderful. And when you look at a slightly bigger chart, you can feel what I'm saying. This whole area where it goes from negative, positive, negative. Look down at the axis. You understand it cleans up the existing RMO. Now you could say, okay, I'll manually do that. I'll check for, is there volume, is there volatility, is there support, resistance, all of that. But the point is, there's some lovely automation out there we've done with the super filter, where you can see it gives you a buy in this case much quicker. Notice this blue, dark blue buy is much before the RMO goes bullish. Similarly, you got a sell on the RMO. It didn't let you. It finally gave you the sell much later. So alignment and timing is really significantly improved. It's almost like me running down my own thing, but I'm not ashamed of it, and I'm not. In fact, I'm actually very proud of the fact that we've elevated and moved to a more dynamic and a more realistic approach with the ATM, because that really takes the RMO next level. So it's fantastic the way it works. Earlier you'd have to wait 3 or 4 bars for a signal to come. Here, when I see the red, I can at least dive out of my buys, if not start going short, because it's red. It's not even orange, right? And you get a lovely pulse for it, because dark blue kind of shifts into a light blue then tapers into a orange or red. So you can get a pulse for it in a much better fashion. You feel the charts more if you can hear where I'm coming from. So that's an important feeling that you need to develop, is the super filter will take your trades a notch up. So let's look at how you could even scan for this. So you would probably like to see, where do I have a new dark blue or a red? And that can also be scanned. So everything that I talk to you is within the ATM power screen, where you can see these shifts. So you may say, I want to know, when do I have the first dark red, or when do I have the first. So when you see the word upshift or down break, these are points where they've just turned to a deep color, a dark color. And that's what you would do. And here too, we introduced intelligent block sorting. And what I mean by intelligent block sorting is, it would automatically mark the various colors. So here, red or orange, blue, light blue. And you can see that 60% of this market is towards light blue or dark blue when I screenshotted it. And there's just a small set of stocks which are in that red and orange. And even within that, you may like that the ones with the new signal come right up on top. So you can see, for example, whenever I took that screenshot, and this of course could be months and years ago, don't worry about that. If you see the word up break, the idea is it finds you the stock which gives you that first dark blue, right? And that's what I mean by getting the trades. So finding those trades, grading those trades, is what I wanted to talk about today. Is when you have a dark blue signal, that's a top class trade, and that's what you're looking for, and that's what it delivers to you. And this whole understanding of the market, just looking at this building block, you can understand how majority of this market is light blue or dark blue. There's just a set of stocks which are in that orange and red. So the beauty is, you can run this on real time, be it 5 minute, 10 minute, 15 minute. You can run it on a custom stock list of your choice. Does it work on commodities, forex, futures, whatever you look at? You can just put in any symbol out there. It seamlessly connects to the real time Zenith data, and you'd be able to get that. If you use the end of day, you don't need to download your data on your PC and configure it one time, but that is a process that we would explain to you and get you going on. Now, another very interesting study which I like to use is the trend decider. And let me go through this briefly. I could probably talk about this suite for a good number of hours, but as you can see, there are four trend decider levels: the daily, the weekly, the monthly, and the 15-day. The whole idea is, can I have a level for the week or for the day which tells me that I've broken this, so therefore this week is bearish or bullish? So this red line is the trend decider weekly. If prices trade below it, I'm bearish for the week, and this is a 30-minute chart. If prices trade above it, I'm bullish for the week. So that's a great way to understand where I'm looking at strength or weakness just based on that. Now, you may say, I don't trade for 1 week. I'm a very short term trader. This green line is just the day. So this is a 5-minute chart now. And you say, look, whenever it crosses the green line or breaks out of the green line, I'm bullish. Similarly, if I break that green line, I'm bearish. So it's bearish for the day when I breach that level, right? So if you're just someone looking for the day, you look at the green line. If you're just someone looking for the week, you look at the red line. But the way I like to use it is to put these together. How about if I could find a stock which is below both the daily and the weekly? So look at this. Look at the vertical lines. Wherever I've got these four verticals, price is trading below both the daily and the weekly, and that gives you a fall. Price is trading above daily and weekly, gives you a rally. Price is trading below both, get a drop. Price is trading above both, gives you a rally again. So it's an excellent way. You may say that this one didn't work out too great. It fell a little bit, not too bad. I mean, that's still a decent, you know, 225 going to 221, not too bad, 2 or 3% of a drop, and that too on a 30-minute chart. But even if you look at that, that buy comes in and that claws into a nice uptrend. So the beauty is, if you can understand, if the green line is above the red line, that's another big plus. So notice wherever I've got these verticals, the green line is lower than the red line. So I'm selling. The green line is above the red line. I'm buying. The green line is below the red line. So now this whole explanation that I just did, it should be above both the levels. The green line should be above the red, is programmed into an expert advisor, which is stamping bullish and bearish for you on that x-axis. So friends, when you're using this, you have these inbuilt templates. You don't have to do this. It's automatically calculating this bearish and bullish, and that is that precise point where it turns bullish is where it's closed above both and the green line is above the red line. So the beauty is this too is done. That's the idea. Why is it called ATM, automated trend modules? The idea is to automate your analysis of trend detection so that you are focused as a trader. I think we need to all understand, we need to walk out from being just a analyst, and we need to become a trader. Our primary job is to trade, make money, invest, make money, not be an analyst, because that is more statistical in nature today. We need to get practical in terms of implementation. It's all about money management. It's all about trade monitoring today. It's not about trend detection, because there's some amazing tools like this which help us do that. It's all about our mental alignment. I think the biggest enemy we have is our own discipline. You see these charts and you say, this all looks great. Well, it will be great if you did it 10 times in a row. It's not great when you don't do it 10 times in a row. You do one trade and it goes sour, then you change the time frame or you change the stock. You're never giving yourself a fair shot. Give that indicator the space to perform, and that's when it'll work for you. So all of these studies, be it the trend decider, be it the super filter, come to you with an expert advisor, with a live scanner. So even if you're in a doubt, is this bullish or bearish, it's stamped for you. You can even read through the text where it gives you that ATM TD or trend decider is bullish, and that talks you through it. So you have the expert advisors to give you that commentary. And mind you, when you start using this program, we obviously would give you a manual. We would educate you. We would handhold you right from the installation process to helping you understand the various systems. That's something we're more than happy to do for you so that you can get up the curve very easily. And as I told you, it's largely automated. We're not asking you to input any values. For example, if I plot an RSI, you can always debate, Rahul, why did you choose 5 period and not 14? Or why not choose a 21 period, right? We're not asking you to put in a value. You're not choosing which average to use. You're not drawing a line. The great thing is the subjectivity is out, the objectivity is in. It's all about discipline and automation from here. So trend decider weekly versus monthly. So like I did earlier, daily versus weekly. The longer term trader, those who are on the end of day version, they may like to use this because they're not into real time trading. They're more interested in a slightly longer term setup, right? So again, I feel the markets are very fast, so I'm much better tuned with shorter time frames. But again, I totally appreciate there's a large set of people who do not wish to do, very active trading, and therefore you could use the weekly versus monthly and get a similar picture where you say, okay, if I'm trading above both the trend decider weekly and monthly, I'll go long, or trading below both, I'll go short, right? So you could do the same technique and adjust it. So trend decider, auto signals, trend direction, these are all custom built into the power screen. And when I say custom built, basically it allows you to choose your own set of stocks, your own set of symbols. It allows you to scan on any time frame of your choice, daily, weekly, monthly. It allows you to even decide, okay, do I want to decide a daily versus weekly, which is the original model, or do I want to tweak it and do it my way? Maybe I want to do weekly versus monthly because I'm that longer term trader, right? So trend decider is another great way. Let's dive into the last tool for today, the SWI, which is again an absolute must have for me. Is the strength weakness index. It uses the ingredient term of volume alone. A lot of indicators there use price and averages and things like that, volatility. But the SWI totally gauges volume data. In other words, it's checking that balance of volume. Is the price moving up with volume or the price going down with volume? So every time you plot the SWI, it literally dissects your chart into bullish and bearish. So that red line that you see there is something which gets plotted automatically. It shades the bars also, blue and red. And if they're blue bars, it means that if bullish, red means bearish. And this is just on the basis of volume. Now, let me explain to you very briefly how this works. We all say that if price goes up and the volume is also going up, that's a positive sign. So, in other words, an increase in price with supporting volumes is a confirmation of that uptrend. Similarly, a decrease in price with increasing volumes is a confirmation of the downtrend, right? So, in other words, volume confirms a trend. And if you can understand that statement, volume is equal to money, volume is equal to the commitment of people in real dollars onto that stock. So, if you can see that this price has been going up and suddenly this down move has occurred and the volume on this down move is enough to topple the up move, that's when you get a sell. So the beauty is this indicator is working entirely on volume. It is not using any other piece of data but volume. So the great thing is when you plot these indicators on real charts. So let's say if I have something open, say this is a chart of NVIDIA, and again, this is on a 30-minute chart, just to briefly take you. The swing was down here, the SWI gave you the bull trend, and today on that 30-minute, or yesterday rather, it gave you a signal that it broke that trend. And now this is just volume alone. Now you imagine if you couple this up with the RMO, you couple this up with the trend decider, that's a that'll probably give you an added confirmation if it's also in sync with that. But the SWI is a great way to understand how the movement of money with the trend is working. So strength, weakness, index, and that's why SWI. So the SWI is there to help you understand the strength and weakness of the stock, and this too has an automatic scanner which is in the form of an explorer and a power screener. Now you may say, why do we have the explorer and the power screener? Well, there are some users who are very comfortable using the inbuilt Explorer, so that's totally there. But we also have the power screener, which is absolutely click free. And when I say click free, your hands free on it. You don't need to worry about running a scan. So the thing with the Explorer, which I felt was every 30 minutes, suppose I'm a 30-minute trader, I need to run the scan every 30 minutes, right? And keep a track of it. In the power screener, it's always on, right? Whenever the signal matures, I have it for me, and I can get an absolute live alert. I could even get an email alert and get a heads up that I've got a SWI buy or sell on that stock, right? So all of this, be it the super filter, the trend decider, the SWI, these are all programmed into that power screener to give you that buy or sell trade setup so that you can get these signals. So let's do a quick recap. Today, what I talked about was trend detection through the RMO and through the super filter study, where I said the super filter is the most superior one because that's a tailor made fit. That's something which is optimized for the stock that you're trading or symbol that you're trading. Momentum is gauged through the trend decider, where you see the weekly and the daily level, or the monthly and the 15-day level, because that's something which helps you gauge is price breaking out a barrier of support or resistance. And for the volume, you've got the SWI, which is doing a wonderful job for you. So any good system or any complete system uses all three elements: trend detection, confirmation of price momentum when it breaks out supports and resistances or trend decider levels in this case, and final confirmations through volume, which are really the pure representation of money on a symbol. So any complete system should use these three elements, and that's the philosophy behind the ATM systems. And the whole goal is all of these tools are built around automatic identification. In other words, you don't need to even run a scan, it's all pre-built, right? You just have to put in a stock list and decide which are the indicators or which are the setups you want to follow. And therefore, it makes you focus on the next stage is how to manage my trade better and how to weight my trade better. As I told you, for example, first breakouts deserve greater weight. A dark blue signal is better than a light blue signal, right? So you start concentrating on the qualitative and practical aspects of trade taking and trade management, or trade initiation and trade management, rather than just focusing on, oh, is it looking up or down? That's something which is fairly easy and organized. And therefore, I say you move to a more rule based and a more effective approach that works across various asset classes. And I'd say in one simple line that it's all about optimization and adapting to the stock or symbol that you are trading, because this does not work off static formula. It is adjusting to the stock that you're trading, and you're literally getting a tailor-made fit. So the great thing is I haven't covered elements like the counter trend indicator, the breakout catcher. There's more to this add-on. It comes to you with over 35 different fields in terms of the power screener, comes to you with built-in explorers, 7 different templates, and these strategies are beautifully explained through various videos, manuals, and of course, for those of you signing up on the annual, we even do one-to-one hand-holding in terms of explaining these systems. Even if you're on the monthly, we'd love to answer any questions. The whole idea is to automate it to a level where it becomes highly actionable. The power screener can have multiple columns. You can actually put in your positions and it would calculate your mark to mark profit or loss, even. So it's a beautiful system. It's like my go to screen. I look at that screen, I understand what the trend is. I have the indicators that I'm looking for. It works seamlessly, live. And, I never have that situation where I miss a trade. I think that's what we have time for today. I'm trying to wrap up today, so I have a quick few minutes for questions, and then I leave Jeff with a few minutes to round it up and move to the next one. So over to you, Jeff, and let's get on to some Q&A if there are any.
For sure. Kenneth wants to know how much focus do you place on overbought or oversold conditions when you look at stocks?
To be honest, I've kind of left that boat of looking at overbought and oversold. And let me explain it to you. I love this topic because I've researched an indicator like the RSI for a couple of years now. And I think one of the biggest myths is if something's overbought, it's going to go down. It's overbought for a particular reason. Maybe it's actually that bullish that it's being bought into so excessively, right? There's stocks that have stayed overbought for years. So I don't believe in that aspect that if something's overbought, you got to sell it. You need to look for divergence, and you need to more focus on where that divergence shifts and moves out. So it's a slightly more complex answer, but to simply answer you, I would not bother if a stock is overbought at all. It won't influence me today.
It's always slightly more complex for the answers, right? So here's one that Mr. That would like to know if RMO works for scalping 1 minute, 5 minute, or 15-minute timeframes. And maybe also, while we're talking about that, which of your systems would you say is best suited for kind of those lower timeframes? Is it RMO or is it something else?
So if you're someone looking for quick movements, in other words, the immediate breakouts, and you don't care what the long-term trend is. So when you're a scalper, you're worried about the next 5 or 10 bars, maybe, or maybe even less sometimes. You're not too worked up about the long-term trend. So you don't want to use the RMO in that case. There's a lovely study in the breakout catcher. So I would probably tell you to look at that study. We've got videos up there for you. And, if you're interested in it, look at that more carefully. The super filter is more designed around someone who wants to follow that bigger picture trend. So yeah, if you're looking at shorter time frames, I'd urge you to look at the breakout catcher.
Would that answer be the same? This one comes from YouTube for intraday trading options.
Now, the intraday trading could be on various frames. So if you're someone who's trading the options just for one day, then yes. But I've seen that it pays off to kind of hold an options trade for something between 3 days or more, right? That's my past experience. I've traded both the Indian markets, the Australian markets, and the US markets on options. And my assessment is it's only when you hold through an options trade for beyond 3 or 4 days that you really get the most out of it, be it on the downside or on the buy side. So I would urge you to probably look at the super filter on those option charts. That would make more sense.
All right, and this is another one that's always really popular, but Rob asked the question, does this work with indices, Forex? I'm going to add a little bit to that. International stocks, ASX stocks. Can you talk a little bit about where you can apply the ATM and where they work well in your experience?
In fact, I'll give you a very direct answer, yes. And I'll clarify that by saying that I'm primarily an index trader. Personally, I prefer trading the indices and ETFs. And that's because I believe in the fact that I don't want to track down one company, because sometimes you have a stock that opens 20% up or 10% down. And I'm not into those shockers. I just want something a little more consistent, which gives me volatility and gives me that opportunity to trade right through. So I personally love trading indices, and I think that's the way to go if you're really thinking on those lines. So I'm in absolute agreement with you.
Cool. Kenneth wants to know, and I think this will be, there's two more questions, and I'll answer the last one. So, but does the system monitor volatility? Does the system monitor volatility, and is it important?
It's absolutely important to monitor volatility, and I'll tell you why. If the volatility has dropped, it also indicates at times that the volume has dropped. And if those two have happened in tandem, your market has gotten sideways or dormant. And this measurement is done by tools like the SWI and another indicator called the zone detector, which is in the breakout catcher template, which I haven't shown today. But again, you could look at the zone detector study as well. But that tells me to stay out of the market. If the market is in dormant, if the market gets into that phase, it helps me stay out. So monitoring volatility not only adds weight to your existing breakouts, in other words, volatility plus volume together reconfirm the signal, but a lack of volatility also indicates there's no point trading.
Very good. There are a couple questions that come in where people want us to look at specific charts like Tesla, indices. And I just want to point out, we probably won't have time for that just because we're almost out of time. But if you contact our sales chat, here, I'll put it in the chat, www.metastock.com/sales chat. We'll be more than happy to send you any chart you're interested in and send you any kind of example you want, send you more information, et cetera, et cetera, et cetera. So the last question is, how can we get access? And I'm going to answer that, Rahul. But before I do, I want to thank you for coming in, spending some time with us. It was great to hear from you. You always do a great job, and I appreciate you being here.
Thanks, Jeff. Likewise, you guys do a great job. Thanks for putting these together.
Of course, it's fun for me, especially this part. I can just help. I just cheerlead the whole thing, so it's cool. Thank you, Rahul.
Thank you.
All right, let me go ahead and do this. We're just going to kind of the last question, the one I promised that I'd answer, is how can we get access to this and what does it work on? So I'm going to go ahead and make myself the presenter, show my screen, and kind of get everything written up for it. The amount of work that Rahul has put into this is fantastic. With it, you get your own Power Screener application that allows you to kind of monitor those alerts in real time. It works great with the data feed that you need for MetaStock and all of the methods and systems that have put into it. What Rahul has created with this particular product is one of our most successful subscription add-ons. And he just does such a really good job with everything that's included. And so let me talk a little bit about access. So he talked about the indices, the information that's included and all the stuff that's included. And what we're going to do here at the event today is normally RMO ATM is going to cost you $149 per month. And in addition to that, we're going to bundle 3 months of that and a masterclass that Rahul did with us over the course of several Saturdays, where he kind of talks about RMO, how it works, how to put it together. So you're going to get 3 months access to the RMO plus the masterclass that we had put together. And in addition to that, we're going to give you a permanent discount on the ATM subscription. So you'll pay $99 a month forever for the ATM subscription. You'll get the masterclass that you can go through that's going to have all the training videos with it. All of that's available for $4.99. So $4.99 will get that to you. This isn't a special that you can do online. You have to call in to get it, or you have to chat in to get it. But you can call us at 800-882-3040. You can go to metastock.com/sales-chat where you can chat with us and we'll help you get it. Lifetime discount at $99 a month instead of $150 per month. Live training classes, a great boot camp that we actually put together as part of that. And do it. I just love the fact that it has its own screener. And it also has all of the scans, all of the systems. It's a really, really good toolkit that's available from Rahul. So again, call us 800-882-3040, metastock.com/sales-chat. And either one of those will get that for you. For Jan, your question is, this is compatible with our award-winning MetaStock. It's a product that's been built around MetaStock. So, and if you don't have a copy of MetaStock, you should get one. We'll give you a free trial as part of this. We'll give you one of our extended trials if you prefer a little bit longer time to get it. But this is a good way to get started and a great system to use. So thank you for the questions, everybody. There you go. Let's do that. Okay. And then there you go. 99 is your promo rate. You'll keep that forever. You can actually just do the RMO if you want. I'd recommend you do it with the class, because one of the things that's very, very helpful is being able to do it. So either way, you can just subscribe to ATM. You'll get that 800-882-3040, or you can do it with the class at $4.99 with 3 months of ATM included. The class almost pays for itself with the additional free time. So there you go. Thank you to Stocks and Commodities Magazine for sponsoring the event. I really appreciate their work over the years. 17,000 articles over the years, 1.3 million subscribers, been publishing nonstop since 1982, been supporting the MetaStock Trader Summits and conferences that we do for over a decade, and they're super helpful. We do definitely appreciate appreciate them. So it is going to be prize time. But we are going to do a prize real quick, and then we're going to move on to our next one. Okay. So Pravani asked, how often does the conference do it? We do the conference, I think it's 4 times a year now. And we do a summit every month. So, and the difference is one of them lasts all week and one of them lasts all day. So, but I hope you're enjoying it. Thank you for the question. We're going to give away a prize. What I need you to do is I need you to give me a number between 1,900, 1,000 or 1 and 9,425. The prize that we're giving away to start kicking things off with our prize grab today is a book written by a good friend of mine, the late Steve Bigelow. It's High Profit Candle Patterns, and a very, very good book. Very, very great technician, very well written. Talks about the patterns that he likes to trade. I'm going to give this to you. I'm also going to give you a mouse pad that'll remind you of all the major signals in the market. So what I need from you is go ahead and type in a number. You can type in any number between 1 and 9,425. If you would do that, that'll help me pick over here exactly what number we should be putting down. So thank you for typing in the numbers. While we do that, I'm going to say we're MetaStock. We've been very, very fortunate with all the customers that we have, and the fact that they vote us the best software in the price category for 31 years in a row. We're going to talk a lot about MetaStock, but I think one of the best things we do is scanning. I run scans every day. Sometimes I run them 2 or 3 times a day, but I think we do scanning super well. We can also test trading ideas. We can help you with our patented forecaster that can help you identify what price is likely to do. We have the real-time commentary, alerts, all that kind of good stuff. If you want to get a copy of MetaStock, pricing for MetaStock is like $69 a month for our DC, our end-of-day version. That's it. But not only are we going to do that, we'll give you our 2nd and 3rd month for free, which means your cost will be about $23 a month. So we throw in a one-on-one session with one of our support reps where they show you how to use the program. They do a great job. Unlimited tech support, a home study course. There's just so much that's included. That I don't really have time to talk about it all right now, but we'll talk about it all day. So metastock.com/conf promo to sign up for that. Metastock.com/sales chat. If you have more questions, you want to know, hey, why is this been rated so highly for decades? You can call us. Also at 800-882-3040. So I see all the numbers coming in here. Let's go with thank you, Bernadette, Kathleen, Neil, Richie, Barb, Jerome, Steve, Mike, Edgar, MetaStock, B. Wyatt, Senki. I appreciate all the numbers, Steve. I'm sure there's more that I missed. Let's go ahead and go with the first one that came in, 2233. So what I got is I have a list of everybody that registered for the event over here. I'm going to go to the cell A2223. And whoever actually registered in that spot is going to win this prize pack. So let me go ahead and do that real quick, and then we will move on. Our winner comes from the USA, and his name is Elfam. So Elfam with a msn.com email address, not a Gmail this time. So if your name is Elfam and you're in the chat and you have an MSN address, you probably just won. Say hi to us. I love it when we give away prizes to people that are watching, but you don't have to be present to enter, or you don't have to be present to win all of the contests. If you're watching this on YouTube and you haven't registered, make sure to click on that pinned comment, come in and register, and that way you can qualify to get the prize. So we are going to move on. All right. Our next guest is Jeff Tompkins. I talked about Jeff a little bit before we started the show to the GoToWebinar. Jeff is such a great technician. I know when he started, we started with the trade trend, and he had trained just, I can't remember the exact number, but a ton of people on a platform called Udemy.com. He's a great instructor. In the time that I've known him, he's really taken off. He actually manages a hedge fund, maybe 2 right now, but he's one of those guys, and where he can explain something to me in a class like this, and I understand everything he talks about. I get it, And I think that's one of the things that makes him a great instructor and a great technician as well. So Jeff, let's go ahead and bring you on here. How are you doing?
I'm well, Jeff. How are you?
Good, good.
Great to be
Go
here.
ahead and set the presenter over to you.
Excellent.
Do you have a nice sunny day up there in Idaho? It's sunny here.
We did a few days ago, and we got a 20-degree drop in temperatures, and actually had some brief snow over the last couple of days.
Well, oh yeah, we had a little bit of snow yesterday. Anyway, the sun came out. It's really nice. I won't brag though. I'll turn it over to you.
Hopefully that's headed this way.
Yeah, for sure. Let's see. I can see your screen. I can hear you. I'm gonna go ahead and get out of the way. It's all your turn.
All right. Well, thanks so much, Jeff. Always a pleasure to be here. Welcome to all of you for joining. Great to have all of you here. Today we'll talk about my proprietary Slingshot setup. We're going to look at a couple different indicators, how to apply them to various charts and market scenarios, and then we're going to combine the two and look at them together. So you're going to learn a full strategy here, and then learn how we use these indicators in a very unique way, which again I call the Slingshot setup, which helps us buy low and sell high across any market, any asset class, any time frame. So let's go ahead and dig in. I'll read you a quick disclaimer and then we'll get started. We know that trading securities and options, of course, involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options that must meet suitability requirements. Well, we're going to be going over some various results today, both real money and some hypothetical results, mainly to reinforce the training today so that you can get a feel for how this has worked in actual live markets. But just know that anything I share, while they might be based on actual trades and even real money results, are no guarantee that anyone will mirror the performance. Obviously, the time critical nature of trading, brokerage fees, activity of other traders, all impact that. All right, so I'm going to start out with something, kind of a thought experiment here. So these are probably faces that many of you recognize: Carl Icahn, Warren Buffett, George Soros, Mark Cuban, right? So these are all very well-known, famous, and highly successful traders and investors. So you probably think, well, that's the commonality between all of these guys, and it is. But there's another one you might not guess, considering that they've been so successful over their trading and investing careers. They're actually human, right? They've all made mistakes. They've all bought high and sold low. And so even though they're professional investors and they're wildly successful, they're still human and they still make mistakes. They buy high and sell low. But ultimately, like when you look at some of the big names like Warren Buffett and the success that he's had in the markets, often boils down to this contrarian approach where they take a different and sort of opposite approach than most retail traders do. So they're vulnerable to their mistakes, and the market is not any easier for them to trade than it is for us. But they use sort of this contrarian approach. But let's look at why the market is difficult to trade, because in reality it is. It's not an easy thing, and there's of course a lot of causes of failure and difficulties that we encounter as traders and investors. A lot of that can be boiled down to psychology, and this is maybe a familiar psychology curve that you've seen in the past. Specifically, in this case, relates to the markets and in the psychological process of fear and greed, or high levels of financial risk versus relatively low risk, where it may be an opportune time to trade, to buy, to go long or invest. But basically the way this process works is when we enter a trade or investment, we start out with some degree of optimism, right? Obviously we're putting this trade on with the expectation that it's going to be successful. And that may turn into enthusiasm, exuberance, even euphoria as we get into the trade and we're anticipating this directional move. Here's what I want to point out. Often when we're in this stage, there's a high level of financial risk. Okay. often we hear this as FOMO, fear of missing out. We're actually seeing this play out in the markets right now with big names like NVIDIA. They're making these parabolic run-ups, and people don't want to miss out on any potential future gains, right? So this is kind of where that process starts. Now, ultimately, like any other market, stock markets or financial markets in general are built around supply and demand, right? So when the demand dries up, right, and there's unwinding of positions or profit taking, or even a negative news catalyst, something is ultimately going to drive the price back down. Okay, and then that process flips and goes back to the upside. Now, during a sell-off, right, we feel a lack of control. So there's this anxiety, denial, fear. We have uncertainty. We don't know how long if this is going to happen. This is where you get panic selling in markets. And most of us, while that happens, we're experiencing a loss. We get discouraged, right? And interestingly, this can create really good opportunities, but we're on the wrong side of the psychology curve at this point. And if you've ever noticed during a market sell-off, a market crash, a black swan event, it eventually subsides. It creates demand. Buyers come in and drive prices back up. And that can then transition into hope, relief, and back to optimism. So this is the typical psychological process that we all experience as traders and investors, as market participants. But we're really psychologically wired to do this and go through this repeated cycle. So anytime we enter a directional trade, of course, our goal is to buy low or sell high, assuming it's a bullish trade. It could be a bearish trade where we're trying to sell high, buy low. But that actually goes against our human instinct. Instead, when a security is going down, we tend to sell it. We tend to experience fear and panic. And when it's already gone up, we tend to buy it. And then, of course, when prices are falling, that's when we really panic, right? We're afraid of losing money if we have a long position and it's moving against us. We buy when it's rising because we're afraid of missing out, right? FOMO. To compound the problem, we're wired to repeatedly make the same mistake. So we buy high and sell low because that's what our emotions tell us to do. Even with a solid trading plan, this can happen. But without one, then you're really vulnerable to this process. So if you're lacking a strategy that can identify momentum shifts, in other words, you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. All right, and it's a very difficult cycle to break. So what we're going to do today is we're going to turn the tables, right? And instead of being greedy when there's a high level of financial risk and fearful when it may actually be the best time to invest, we're going to turn this on its head. And we want to be fearful, and I use that word in the sense that hopefully we're not fearful, but we want to be cautious or contrarian when there's a high level of financial risk, right? And if we're going to be greedy, again, I use these terms cautiously, but if we're going to look for opportunities in the market to buy, we want to do that when it's really the best time for investing. And that's often when other people are fearful. They're panic selling. Okay, that's what creates opportunities. This is where the slingshot comes into play. And we'll be looking at some charts here that tie into this psychology curve and using it to our advantage from a contrarian perspective. So what I'll give you on our session today to make this easier is, number one, we're going to discover the slingshot trade. And it's so incredible. It's actually worked 100% of the time on the major indices, going all the way back to the dawn of the stock market. So when we apply this setup to, the S&Ps, the NASDAQ, the Russell, you name it, in every possible, any like terrible scenario you can imagine, like black swan. We'll look at crashes like from back in early 2020. Any of the bad market scenarios that you can possibly imagine, this setup has worked out. So I'll show you how to identify it first, okay? And then we're going to look at how to trade the setup, how to profit from the setup, right? That's the whole goal. That's why we're learning this and implementing it. We're going to look at how this setup can help us get in near bottoms and out near tops. Okay, it's not going to get us in right at a top or right at a bottom, or out right at a top and in right at a bottom, but we can get pretty close. Okay, it gives us some pretty reliable levels to help us do that. We'll look at how to apply the setup to any market in any time frame. So this is completely fractal in nature. You can use it on a 1-minute chart. You can use it on an hourly chart, daily, a weekly. We'll look at both examples. So we'll look at some daily charts and intraday charts. I'm going to show you a trick on how to eliminate a lot of your losing trades. This is using just a very simple order technique. In fact, it's one that is built into one of the indicators we're going to look at. And it can actually help us just stay out of a bad trade to begin with, right? So most of our bad trades can be mitigated by just avoiding them to begin with, right? Not getting into them. So we'll look at that. We'll look at some trade examples, and then stick with me. And you can learn how to copy my success and get the trade signals that I use to make a living in the markets. So we're going to start out looking at the slingshot. And imagine if we could actually buy low and sell high without using any guesswork. And that is a real challenge, right? All too often we use some degree of intuition or guesswork or gut feeling, right? That we're getting in and out at the right time and in the right place. But that's difficult to do. So we're going to look at a couple tools that can help us do that. One is a volatility study that's made this, like as I mentioned earlier, possible since the beginning of the markets. So if we go all the way back to the dawn of the stock market and look at all the major market crashes, bear markets, black swan events, this has worked out with 100% accuracy. And it'll become clear to you why I call this the slingshot here very shortly. But it's how markets work, and it's where supply and demand points are created to generate trends. All right. So not only can it help us identify buying opportunities, it can very reliably warn us of potential market sell-offs. All right. And we're going to be doing this with what I call volatility bands. And these volatility bands can tell us when the market has been stretched too far, because it can only go so far before, right? It's supply and demand. Before it creates demand, buyers come in and drive it back, price back up. Okay, so they have to bounce back, right? Otherwise, all assets would go to zero. That rubber band effect can make it possible to accurately identify tops and bottoms in the market. Okay, and here's an example of what this looks like going back to the crash of 2020. All right, this is the daily chart of the S&P. So we're hitting new all-time highs on the market back at this period of time. Okay, now think about this in the context of that psychology curve. So where are we? Well, we're in the euphoria phase. We're in the fear of missing out phase. We're getting over-enthusiastic buyers at high levels of in the market, right? So as S&P's hit new all-time highs, right? We're in the midst of all this uncertainty around COVID. Okay, it's still in its infancy. We don't yet have vaccines or viable approaches to deal with this. Not only that, we don't really know the global impact at this point, right? So it creates all this fear and uncertainty and results in a black swan market crash. Okay, so S&P's lost like 35% in just a matter of a few weeks. And then we get the panic selling, right? But what did that do? Well, it created a really incredible opportunity back at that time to buy. Now, most retail traders are not buying, right? Back in March of 2020, right? They're taking heavy losses. I mean, the data clearly suggests that. But there were buying opportunities, and institutional money obviously was coming in here with enough force to drive prices back up. Okay, but again, this is where most retail traders are going to be selling. What happens over the coming months? So April and May roll around, and interestingly, the S&P's returned right back up to that initial volatility breakout level. Okay, and that's where, again, most people are selling. So we're going to come back to that chart and apply the slingshot and show us how we could actually sell, or at least hedge or exit long positions before that crash ensued, and then buy when markets rebound. So we'll get to that momentarily. I'll give you just a quick background on myself, and then we'll move on. So again, I'm Jeff Tompkins. Welcome. Thanks for being here today. I serve as the Chief Investment Strategist of Altos Trading, have over 2 decades of experience trading the stock, options, and futures markets. Received my professional training as an intern at the trade desk at Morgan Stanley back in the early 2000s. And about 8 years ago, founded Altos Trading, where we currently have over 60,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager. So the strategies I'm going to be revealing to you today, but the Slingshot and the indicators that I use around that are tools and methodologies that I deploy in my hedge fund, and has allowed our fund, since it was launched in January of 2020, to have now 4 consecutive years of returns, right? So we haven't had a losing year, and I owe a lot of that to what I'll be sharing on the session with you today. I'm also the founder and creator of the Trade Trend Signal software, which we're going to be looking at today, along with the Slingshot. So by the end of our session, you'll discover one trade setup that, believe it or not, never failed going back to the beginning of the stock market. So it's so reliable that when we apply to the major indices, it's worked 100% of the time. It's not failed once, not the recent Corona crash, the 2022 bear market, you name it. So it happens repeatedly with astounding predictability. Whether you're just starting out or you're a seasoned pro, this is must-have information for today's markets. Markets are becoming more erratic, more volatile, and frankly, less predictable. And so we need some reliable tools to be able to navigate these types of scenarios. So you'll discover why volatility is one of the oldest leading indicators of market direction. We'll look at how to identify when markets may be vulnerable to a sell-off. And this alone really can turn your trading around, because fear is arguably the predominant emotion we feel in trading, right? It often overrides logic. It overrides the initial optimism and euphoria we feel when we enter a trade, and it causes us to make decisions that might not be appropriate to our system, to what the markets are doing, the market environment, etc. So this can help tremendously with that. It can help us identify when the market is likely to go up as well, right? After there's been a rotation lower. We can look at how to determine exactly how far the market is likely to go up. This alone is a valuable tool. It addresses what I call the trader's dilemma. So if you are in a successful directional trade, it's made a move, maybe you have an open profit in the position, and then now you're left with this dilemma of, do I take the profit and miss out on potential future profits, or do I let it ride and for that reason and hope to get potential future profits, but then risk a reversal back to the downside and potentially watching my profits evaporate in front of my eyes and even maybe turn into a loss? Okay, so this is a dilemma, and the Slingshot will help us address that as well. And again, as I mentioned, stick with me to the end. I'm going to show you guys how you can get your hands on a tool that will change your trading forever. And that's a bold claim, I realize, but it's changed my trading forever, and in a very positive way. And I think you'll see that as we go through the Slingshot setup, and I share some of my results with you using it. So let's start out by imagining a slingshot. Okay, so as we pull a slingshot back, the muscle energy is transferred to elastic energy in the bands of the slingshot. All right, so we can only pull those bands back so far, right, before they snap or break or rebound. After the slingshot is released, that elastic energy is transferred to the stone as energy of motion. In physics, this is referred to as kinetic energy. Okay, well, interesting, kinetic energy in kind of more of a metaphorical sense plays out in the markets, okay, in the form of supply and demand. So like when we look at it in the sense of demand, we get buying pressure, right? And this is where you can, again, imagine a slingshot once those bands become overstretched, right? So that would be during a sell-off as the bands are getting pulled back. It gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. This is kind of what that looks like and how we're going to determine this using volatility. So number one, volatility, and specifically implied volatility, is a forward-looking predictive indicator. So it's one of the very few forward-looking tools that we have available to us, implied volatility. All right. So volatility bands, okay, and we're going to be using the Bollinger Bands here, tell us when prices move too far from the mean or the average and is likely to reverse direction. All right, and the Bollinger Bands are an incredible indicator. They were developed decades ago by John Bollinger. We'll kind of talk about what they are. They're available on any retail trading platform. They're on the MetaStock charting platform. And we're going to look at how we can pinpoint turning points in a security with astounding accuracy using them. But this is kind of what that looks like. So we've got the bands here, right? And we've got this price chart showing that there's a rotation lower in the asset. Okay, so we see this downward rotation. And notice how price is kind of trailing that lower band. It's a 2 standard deviation band. We'll get into the settings as well here momentarily. There's a rotation lower, okay, but then there eventually is demand that drives, that attracts buyers and drives prices higher, all right? And price returns back up to the initial resting point of the band. That's what the slingshot looks like, okay? And we're gonna now walk through the steps of how to identify these opportunities. So we'll just do a brief overview on the Bollinger Bands if you're not familiar with them. They consist of 3 bands, three lines on your chart. So we take a simple moving average of the securities price. That's the center band that you see there. We then take a standard deviation of the securities price. And now standard deviation is simply a mathematical measurement of average variance. So this is where it gives us information on volatility. All right, we won't go into all the nuances of standard deviation measurements, but it basically tells us how spread out numbers are from the average value. And because it's a measure of volatility, when the market becomes more volatile, we see the bands widen. And when the market's less volatile, the bands contract, okay? These are the settings that I use. So there are adjustable inputs on the Bollinger Band indicator. Typically, most charting platforms, and I believe this is the case with MetaStock, will default to a 20-period SMA, simple moving average, and a 2 standard deviation setting for the outer bands, right? So we can just leave it at that default if that is in case how it shows up on your charting platform. If not, you can adjust to these settings. Okay. Now there's a reason we use the 2 standard deviation setting, because when there is a market sell-off, that is where the variance is going to predominantly occur, and markets can only sustain themselves at a 2 standard deviation move from the mean for so long before it mean reverts. All right, but we'll get into that in more detail in a second. First, let's look at the Bollinger Bands in practice. So some common ways that this indicator is used and some of the drawbacks to those. And then we'll look at a unique way that I call the slingshot to apply the Bollinger Bands. So one common way to use the Bollinger Bands, and just like any other indicator, right? There's, you pick one trader and they've got this specific way they use the indicator. Pick trader B and they've got a completely different approach, right? So same thing with the Bollinger Bands. There's a lot of ways to use these, but these are some of the more common ones. And that would be to buy at the bottom band and sell at the top band. Okay, and that can work out occasionally. But the problem is price can hug the upper or lower band for extended periods of time. And this is really a common threat in terms of being problematic among a lot of indicators. I think our previous speaker, I heard him mention the RSI, right? The RSI can give an overbought reading for very extended periods of time while the stock continues to go up, or conversely, oversold reading for extended periods of time as the market crashes. So it's kind of a similar thing, right? There's a major limitation there. And for that reason, I don't prefer to use this approach. Another one is band contraction and expansion. Now this does give us very valuable information because it can be a good indicator of an impending big move in a security. And we're going to elaborate more on band contraction and expansion here in just a second. But the problem is we don't know which direction the move will occur. So it might tell us that we're in low volatility conditions or high volatility conditions, but we don't necessarily get information on the directional movement. Okay, for that reason, we don't use this purely for a trading decision. Another common approach is buying or selling at the middle band. So this is kind of a mean reversion strategy. Remember that middle band is the average of the security of the asset. And that can work in strong trending markets, right? So if you've got an upward trending simple moving average and prices above it and it's mean reverting back to the average, a common strategy would be to buy when price mean reverts to the center band. Now, again, that can work in strong trending markets, but it can fail miserably in sideways ranging markets. And historically, markets tend to, range or even move in a sideways fashion much more frequently than they trend. Okay, so for that reason, they don't prefer this method. Now, the slingshot setup is a unique approach that actually incorporates volatility as it relates to the price action of the asset. So this is where we wait for the lower band to break. Okay, and I'll explain what that means. But basically, price will hug the lower band and ultimately rebound to where the breach initially occurred. All right, and this is the slingshot that we're going to now get into. And it occurs with astounding predictability, really across multiple time frames, financial markets, asset classes, right? You can do this with equities, ETFs, currencies, futures, you name it, right? In fact, the major indices have returned to the initial volatility breakout with 100% accuracy, going all the way back to the beginning of the market. That's the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 08 mortgage crisis, right? The market lost over half its value in the second half of the year, I believe it was. The 2000 .com bubble, even the Corona crash, right? That was kind of our most extreme recent market crash. Every black swan event, market correction, major crash, bear market, you name it. Okay, and we're going to look at those now and apply the setup, right? So how do we identify this? How do we trade it if we just choose to do so? So I'm going back to this daily chart of the S&P back from 2020. I've got the Bollinger Bands plotted. Now, what do we notice on the left edge of the chart in the month of February? We notice that the bands are relatively close together. They're relatively horizontal. So they're narrow, horizontal, and so that tells us we're in low volatility conditions. We can see that from the price action too, right? You notice the narrow high-low range on each of the candles, right? Relative to what happens later in February and into March. The candles widen, the high-low range is much wider. But what happens to the Bollinger Bands? Notice right here when price touches the lower band, remember that was a common approach I mentioned where people will buy at the lower band and sell at the top band. Well, back in February, that would have worked out kind of nicely, right? That one time, right? Until it didn't in February. So price is touching the lower band, okay? So, but that's not all we need to know, okay? The other critical thing to notice here is the outer two standard deviation bands, the upper and the lower band. What are they doing? They are diverging, they're widening, simultaneously price is touching the lower band. This is a volatility expansion. This is the start of the slingshot. So this is where the slingshot band gets pulled back. Notice what ensues, right? The market crashes. S&Ps are down like over 30% in just a few weeks, all right? But as we looked at earlier, and again, remember that psychology curve. So we've got panic selling, we've got all this uncertainty. It created a buying opportunity, right? Interestingly, so this was like around the third week of March. Okay, this is only about a month after this crash occurred. When you think about the catalyst of this crash, COVID, was there any resolution at this point, right? Did we have any viable treatment options? Did we have, it was chaos, right? We're shutting governments down, quarantining, all these things are happening that in no way suggest that this issue has been resolved or even improved to any degree. In fact, it would go on to get much worse, but the market didn't say that. The market rebounded right back up and was back at that level by June where the crash ensued. Okay, this is the slingshot. All right, so we get volatility expansion, price trailing the lower two standard deviation band, creating buying opportunities. So there's now excess demand when there was previously excess supply. Enough demand to attract institutional money, drives prices back up right to that level. Okay, here's an example on an individual stock. This is Apple. Okay, this is a past chart, that's not a current chart. But notice that on the left half of this chart, Apple's in a strong uptrend. Okay, it's trailing the upper band. And by the way, this works in reverse as well. We're looking at this from a bull, like the bull case scenario, on a lower band break. But notice that how price is trailing the upper band on Apple. It was in a strong uptrend. Okay, but what happens here? Okay, price comes down into the lower 2 standard deviation band. And in fact, we get 2 very convincing bullish reversal candles right at that lower band. Okay, imagine, number one, the day that these bullish reversal candles happen, you can think about, you know, the price action behavior here, right? Price is coming down into that lower 2 standard deviation band. It's no coincidence that that first bullish reversal candle, the low perfectly touched that lower 2 standard deviation move. Okay, and then buyers came in and drove the price back up intraday for a bullish close. But then the next day, right, price actually breaks outside of that 2 standard deviation band. This is the clue, okay? Because while that happens, what are the outer bands doing? They're diverging. This is the volatility expansion. Notice how they widen while price is trailing the lower 2 standard deviation band on the sell-off, okay? This is, again, the beginning of the slingshot. Price comes down into this well-defined support area right around the 168 level, creates a buying opportunity. Price comes right back up to the initial volatility breakout. And in this case, it exceeded it. This is actually an extension or advanced concept as it relates to the slingshot setup. When we break out, when we get a sustained breakout through this initial volatility expansion level, there's often opportunities for the asset to go and make extended big moves, like it did here with Apple. Okay, that's more of a nuanced part of it. I just want you to understand the basics of this here. So this is Apple. Here's an example on the Qs, the NASDAQ 100 ETF. Okay, notice on the left edge of the chart, so again, this is from back in 2018. Okay, so in September, we get low volatility conditions. So price is just kind of moving sideways. The bands are horizontal and relatively close together until October 5th, right? Price breaks through the lower 2 standard deviation band, we begin to get a sell-off, right? And while that's happening, we get volatility expansion. So the outer bands are diverging. Okay, we get a big sell-off on the Qs all the way down to roughly the 143.50 level. So we come into the support level, we get buying opportunity, and what happens to the Qs? They go right back up to where the initial volatility breakout level occurred, right around the 180 level, right? I mentioned this works on any time frame, right? And the reason is it's all built around volatility and psychology, right? So markets have to behave this way in order to create opportunity. This is a 5-minute chart of advanced micro devices, AMD. Okay. What do we notice here on the left edge of the chart? We see relatively low volatility. The 2 standard deviation bands are horizontal and relatively close together, right? And price is oscillating back and forth. So like here's a scenario where that approach that I mentioned earlier of buying at the lower band, selling at the top band would have worked out probably fairly well for 2 or 3 trades until it didn't, right? So what changed here? Well, price broke through the lower band and we got a volatility expansion, right? So in fact, we got a couple of them on the way down on this sell-off. There was actually a mini slingshot in here. I don't know if you can spot it kind of between the 18 and 1900 hour. There are also mini slingshots within larger slingshots, and this is an example of that, right? So we get this in the context of the larger slingshot opportunity to sell it down into the 52 level. Creates a buying opportunity. What happens to price? It rebounds back up to that initial volatility breakout level. So a lot of you are probably wondering now, how to identify the buy zone? So the initial slingshot part of the setup, right, where there's a potential sell-off ensuing, is relatively easy to spot, right? We just need price to come down to the lower band, breach it, and simultaneously the outer bands diverge as price breaks through lows, creates new lows, and sells off, right? Trails the lower band. So that can help us, give us some comfort in, okay, this market might be vulnerable to a sell-off if I see all of these factors line up. But how do I know when to buy? And that's really the trick, is to identify when the bands are overextended and ready to snap back. And there's a number of ways to do this. I'll just give you some some kind of examples of opportunities, like using price action or candlestick patterns, for instance, support and resistance levels, right? So often, I'll look for price to come down into a key support level, look for confirmation that level is going to hold, and there's a rebound beginning, and that can be combined with candlestick patterns. Maybe you get a bullish engulfing pattern, or a doji or something that might line up with a support level. So there are some various approaches you can use to identify this. But the problem there is then we're involving discretion, right? We're vulnerable to emotional decision making, all of these things. And I didn't want to have that vulnerability as it relates to the Slingshot setup, because I used to trade this manually in that way. But then I realized, I need something reliable that can actually give me a buy and sell signal. And number one, do that reliably outside of the Slingshot setup. But when I combine it with the Slingshot setup, I want it to be like this real powerhouse. So I spent well over a decade, thousands of hours trying to determine when momentum shifting, when a new trend is starting. And I had to do this in some sort of an algorithmic formula that could work across all time frames. I could duplicate it across various asset classes because, as I mentioned, I traded options, equities, ETFs, futures. And I needed something that could actually reliably forecast market trends, okay? And after all these thousands of hours, developing this and testing it, I got it dialed in. And I actually originally developed this with MetaStock, and they helped me build this into an algorithm that can provide accurate buy and sell signals near the outer channels of the Bollinger Bands, and in a unique way, up to 3 candles in advance of the anticipated move. So I didn't want to know, like, okay, right when or the market starts to reverse, do I know that's the actual reversal, or is this just a fake out? I didn't want to know on that candle. I wanted to know like 1, 2, or even 3 candlesticks before that likelihood, okay? And this is what was developed using a combination of momentum algorithms, volatility studies, price action setups to identify buy and sell signals near the outer bands of the Bollinger Bands into a product called Trade Trend. So Trade Trend, number one, gives us accurate buy and sell signals up to 3 candles in advance of a trend. What that means is if you're applying it to a daily chart, right, you have somewhere between 1 and 3 days of advance notice of a buy or sell forecast, right? So you could get a buy forecast up to 3 days before the move actually takes place. On a 5-minute chart, right, you can have up to 15 minutes of advance notice. So you get that buy or sell popped up right on your chart before you would take action and enter a trade, okay? And this has really been accomplished using a proprietary momentum algorithm that, number one, it reads the market in real time, right? So it's gauging volatility, momentum, and other metrics that can help us accomplish this. And if there is a triggered entry, okay, trade management then becomes critically important. So, okay, great, I got into a long trade, or I got into a short position. When do I get out of it? Well, the Slingshot can help us pinpoint levels like I showed you. We'll look at those in more detail. But I also wanted to develop a trailing stop algorithm that can actually manage the position using volatility. That was critical. And it had to work for short-term, long-term trends, right? Trends can last very briefly. They can last for very extended periods of time. It had to work, as I mentioned, across asset classes, equities, ETFs, futures, currencies. We've also built a screener into the product on the MetaStock platform. So you can scan for these in a matter of seconds or minutes across thousands and thousands of assets and find the forecasted buy and sell signal that gives you up to 3 candles of advanced warning in time to make a decision on a trade entry. Any time frame, as I mentioned. I use this indicator in the Slingshot setup, and many of my options trades. I do a lot of options trading. The indicator doesn't repaint. So when you get a confirmed signal, it is on the chart. It is set in stone. It does not repaint. If you're not familiar with what that means, it means that when you get signals, they can look really great, right? But they can change on you. And when you look at these in hindsight on a chart, they look amazing likely because they've in some way repainted, right? When market conditions changed. Okay, so we don't repaint. We have built-in protection to avoid whipsaws. This helps us capture most of the trend before it reverses. We can never capture the exact top or bottom to the penny, right? But it can help us get close. And it's really designed to limit losses and let profits run. They're always going to be losing trades. And in fact, I'm going to share some of my real money trades with you here in just a second, using the trade trend and the Slingshot. There are losses. I'll show you where I've had losses. I'll show you where I've had gains. This tool helps us limit our inevitable losing trades, which is of course what we want to achieve a positive trade expectancy, which means that we need to have an edge over the long run, which is what we call positive expectancy. That is actually a formula you can Google and look up, but it basically tells us if we have a profitable system. I also wanted it to be useful in combination with other indicators, right? So we're going to look at this in combination with the Bollinger Bands. Okay, so a lot of our members use this as added confirmation. They use it as the forecast. Maybe before other indicators they're using give them the information they need. So a lot of really cool things here. Now I mentioned that I would give you a trick for helping eliminate a lot of your losing trades by simply not getting into the trade to begin with. And this is actually something we built into the trade trend indicator on MetaStock. So it's a specific type of order called a buy stop or sell stop order. If you look at like actual order data from the major brokers, predominantly the bulk of orders are limit orders or market orders, right? So that's the large percentage of how orders in the marketplace happen. But there's also a type of order called a buy stop and sell stop order. So a buy stop order would be where you're expecting a bullish directional move to the upside, and you place an entry order, so a long entry order, at a price that's higher than the current market price, right? So you need to have follow through to the upside to get triggered on your order. Or conversely, if you're shorting, you could use a sell stop order at a price level that's lower than the current market price and enter only on a follow through of that move. So what trade trend does is it gives us, when we get that forecasted buy or sell signal, it gives us a forecasted precise entry price level using a buy stop order, or on a bearish signal, right? So we get a sell signal, it gives us a precise price level using a sell stop at a lower price than the current market price. Okay, and then if we don't get the follow through, it helps tremendously with whipsaws, false signals, false breakouts, all of those kinds of things. So I'm gonna give you some examples here of where I've used this. This is my actual real money TD Ameritrade brokerage statement from back in 2020. This is at the end of February, and I traded the Slingshot, right? So as we looked at on that S&P chart where the Slingshot was ensuing back in February of 2020, I use the Slingshot and the trade trend indicator. So I get a sell signal, right? I get the volatility expansion, the market rotation lower, the sell-off accelerates. So I saw this all occurring right at the time, and there was obviously uncertainty for me too. I had no way to predict how long this was going to happen, what the magnitude of it was going to be. I just knew that all of those factors lined up. So I began shorting, right? Short selling, right? You can kind of see I was taking my long positions and starting to go short with a lot of these positions to take advantage of this rotation lower, the Slingshot setup, and the trade trend sell signal. By the end of February, I did a little over 13,000, right? Just trading very small position sizes, 1, 2, 3 contracts. Now, as March rolls around, I get a trade trend buy signal, okay, around the 3rd week of March. Well, that's also where the slingshot was indicating that the market reversal was happening. So again, all the factors are lining up. So then I start to allocate more capital, right? So I'm still doing small positions here, 1, 2, 3, 4 contracts, but I'm putting on more of them because I want to take advantage of the slingshot buying opportunity. So by the end of March, as the markets are rebounding, I do over 27,000. And I start to get out right where that volatility expansion level printed, right? Like we looked at. So between February and March, all right, think of that psychology curve. We have panic selling, huge losses being taken by the bulk of retail traders. Most of the most of the money that was made on the rebound was institutional money. Okay, but just using these two indicators in the slingshot setup, very small position sizing, over $40,500. Okay, so this is real money example of where I use these two indicators in an actual really difficult market condition. And I've used it across all markets, different time frames. This can be used with any size account. Obviously, that's totally up to you. Oops, sorry, I think I went backwards there. Sorry about that. Here's what sets it apart. Okay, so as I mentioned, you get the forecasted buy and sell signal before the forecasted move, right? So up to 3 candles in advance. So again, on a daily chart, that could be up to 3 days of advance notice. You at least get a full day of advance notice. On an hourly chart, right? You get at a minimum an hour's of notice and up to 3 hours of advance notice with this buy and sell signal. And it's forecasted every market crash and rebound in the history of the market, right? Trade trend. If you go back and look at every market crash, every black swan event, every market rebound after those, you'll see the trade trend buy and sell signal. Here's the flash crash from August 2015. Notice low volatility conditions, narrow bands, horizontal, price oscillating sideways between upper and lower bands. Trade trend prints a sell signal August 19th. Look at that slingshot. Price breaks the lower 2 standard deviation band. The sell signal comes in. The candle before that even happens. The outer bands diverge, widen, market sell-off ensues. We get a nice double bottom here. Trade trend prints a buy signal early October as markets rebound. This is the 08 mortgage crisis. Once again, we've got markets in FOMO mode, right? They've run up due to this big housing boom. People are afraid of missing out. Now, in May, we get a sell signal from trade trend and we get a slingshot, right? Major market sell-off. Market lost over half of its value in the second half of the year. But trade trend prints a nice buy signal towards the end of November as markets make their historical rebound. This is the 2000.com bubble. Now we're going back over a couple decades. Once again, notice what happens on the left edge of the chart. We're in FOMO mode in August of 2000. Markets are hitting new all-time highs at that time. What do you notice? In this case, the trade trend signal came in, the sell signal came in a little bit after the slingshot started, because you'll notice that happened early in September here. So price is trailing the lower band. The bands are diverging. The sell signal comes in to confirm, and there's a huge market sell-on. 2000.com bubble. Also got a buy signal towards the end of September, early October on the rebound. So you could probably pick any indicator, any system, any methodology, any strategy, and if you can stay in it long enough, stick with it long enough, right? It will hopefully produce some winning trades. But the problem is most of these don't keep you out of the market when conditions aren't favorable. So you end up giving back your profits on the losing trades. And this is another major component of the algorithm that I wanted to have, is that when conditions are not favorable, we do not want signals, right? And when we apply this with the slingshot, it gives us the added confirmation, right? So if we get the buy signal, is it in the context of a slingshot? Is it not? Now, trade trend can be used as a standalone outside of the slingshot. And there are actually many more of these combination strategies using other tools. But I wanted to share with you today one of my best, and that is the slingshot with the trade trend indicator. Here's some, again, real money example of that, where I've used the slingshot setup and the trade trend indicator in combination in the futures markets. and did over $8,000 in a day with over 27,500 in open profit, over 6,500 in a day with over 400 in open profit, over 6,000 in a day with over 8,100 in open profit. It goes on and on. But once again, notice, yeah, there are some losing trades in here. But what I want to point out is those were well contained due to the trade algorithm, right? And my winners far outpace my losers, both in frequency and magnitude. Here's another really good slingshot setup I did on in the futures market in the E-minis. I did this in the ES and I believe the NQ. So exactly as I demonstrated today, I traded the slingshot, used the buy and sell indicator from trade trend on MetaStock, and did over 26,600 a day with over 115,800 in open profit on 3 positions, 3 of them. All right. Okay, so these are real money results. So I want to now make a promise to you and give you some more education. I want to help you guys have days like this. I'm going to give you access to the exact indicator that I use to achieve results like I've shared with you today. Again, I can't guarantee anybody's going to mirror my results, but I'm going to give you the tools that I use to accomplish what I've showed you and what I've demonstrated today. So I want to invite you to discover how I make consistent income in the markets day after day, week after week. I do this consistently, and I do it with special techniques and indicators that I'm going to now offer you. I don't hold anything back. Okay, so I'll give you the exact tools. You're not getting like a lower version of it or you know, some subpar components of what I've shown you. You get everything, right? You get an entire year of trade trend for whatever market you like to trade, equities, ETFs, futures, Forex. You get the exact entry and exit signals. You get live interactive trade sessions. So we got to spend about an hour together today. I do this with our members at Altos every Tuesday at 7 Eastern. It's added benefit of the package that I'm rolling out to you now, where you can actually join us on a weekly basis live. If you can't make it, that's fine. We do record and provide replays in our members area of any sessions you miss. But we go over different strategies, different markets, different timeframes, all these things on our weekly sessions. So kind of like we did today, we do this every week for something new. So you'll get access to that. And I host those myself. So you get the full support and coaching from me on those sessions. We also teach a lot of option topics on these. We teach trade adjustments. So if you trade options, we teach how to use the trade trend tool around different option strategies as well as adjustments. I show you what am I trading, if anything, at the time on these sessions. I give you a list of the tickers that I'm trading. You get all of that on our weekly sessions. But this is all designed. So this package that we developed with MetaStock is really designed to help you cut the learning curve and start trading with more confidence, more consistency, and less guesswork, right? So that you can apply these things in a contrarian fashion, the way that Warren Buffett and Carl Icahn and Mark Cuban do, right? And what's allowed them to be so successful in their trading and investing careers. But there's more. So I'm going to run through now everything you get. Again, you get the 12-month subscription of Trade Trend on MetaStock. That retails for $14.99. You get our weekly live trade sessions, which retail for $5.50. You get personal coaching from me on this. You get direct access. You get direct live access. You get to ask me questions. Only limitation is I cannot give you personal trade advice. I am not licensed to give individual investment advice. But any strategy questions, these sessions are actually very fun. I love doing them. Again, we do these on a weekly basis. Normally coaching with me starts at $97 and goes up from there. But you're going to get access to that as well as our invitation only Facebook group. This is a private group of over 800 members currently, rapidly growing. And these are Altos traders who trade a lot of the methodology strategies and use the tools and indicators like I've shared with you today. So you guys can share ideas, success stories, etc. You get our additional training on trade adjustments for options trades. That course retails for $900. I'm also throwing in 2 bonuses. So you get our professional trading series online trading course. That's over 10 hours of content. and goes through, again, a multitude of other strategies and tools and indicators that we use at Altos. You're going to get access to that as well. It's all online. You can watch it at your leisure. You get my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that goes through different strategies and tactics for mitigating risk in trades, and even in some cases eliminating risk in your open trades. This retails for $97, but we're throwing it into the package as well. So this is a very robust package where you not only get an indicator for the year on MetaStock, you get a bunch of training and support to go along with it, as well as everything that MetaStock offers on their end. So it's a really great package at over $5,000. We're taking 92% off for today only. So for today, Summit, you get this at $397. So you get everything you see on the screen, you get the entire year, and it's 92% off. So it's a screaming deal. We are gonna limit this to 25 seats because number one, we wouldn't stay in business very long if we took 92% off of what we offer. Number two, MetaStock, as well as Altos, are committed to providing white glove treatment. So we have our team get you set up on the platform, get you set up with the indicator. MetaStock will help you with that, and then we'll help you on the education side and the implementation side, right? How do you use the indicator? What are some of the other strategies outside of the Slingshot and all these other things that you can use these tools for in the markets? And we have limited manpower to do that. That's why we limit it. It's not a trick or gimmick or anything of that nature. So you can still get all these after the 25 seats are gone, okay? It'll just go back to the retail price. So there's 25 available today for the 92% discount, only $397. This is the link to take advantage. So if you want to claim one of those seats, altostrading.com/slingshot will take you right to the page, and you get everything that you see on the screen here. I want to thank you guys all for joining. I know I think I ran a little bit over here. I'm more than happy to take questions if there are any questions and there's time for them. If not, let me actually throw up our contact information here. This is our support email and our toll-free number where you can give us a shout, 800-895-9348. Jeff, I will pass it back to you. Once again, thanks everybody. If there are any time for questions, I'm happy to take those.
Well, let's see. Let's do one real quick. After the initial break, there are often secondary or tertiary breaks before the final break that indicates a reversal. Is there a clean rule of thumb on how to ignore them, or
so that's
the best one?
I think that's referring to the mini slingshots. So yeah, if you look at those, you'll see there's a little mini slingshot in there. So typically the mini slingshots will revert back to that lower band level where the initial breakout to the downside ensued, but won't come back up to the mean. So if price doesn't rebound to the mean, then it's much more likely that that's a mini slingshot. You can also look at the magnitude of it. So if that slingshot occurs over, generally my rule of thumb is 5 or 6 candlesticks, and then you get the rebound, that's a mini slingshot. And and I'm speaking of the major indices here, the S&P, the NASDAQ, the Russell, is more likely to be, again, if we don't get back to the mean, an additional slingshot or more, a multiple sequence of slingshots. But that's where the trade trend indicator becomes valuable, because generally you're going to get that reliable buy signal when the slingshot has really played out. So you may get one on a mini slingshot, but when the big slingshot is played out, that's where you're going to more than likely get that reliable buy signal.
All right. Jeff, always a great job. Always great to have you. I appreciate your coming in and spending an hour with us. Thank you.
It's always a pleasure to be here. Thank you so much. Thanks to everybody, and welcome. We're getting you set up as you guys are coming in. There are, I believe, looks like 6 seats left, so they are going fast, guys. You want to take advantage, there's the link again, and thanks once again to the MetaStock team. Back to you, Jeff.
Awesome. Cool. Thank you, Jeff. Wow, that's also good price. Actually, it's a little bit lower than I expected, but I've let everybody know here on our end too. So $397 for 12 months of access, normally $99 a month. We're absolutely happy to help you get set up for that. And it is always it's the lowest I've seen him actually do that package at. So I'd recommend that you get it, of course. It does feature MetaStock. It does have one of my favorite things that you can do with a package in it, the ability to scan trading ideas, the commentary, the system testing, all of that kind of good stuff that kind of boils into MetaStock has made it the best software in its price category for this year, 31 years straight. So $397, that's crazy. You'll get the templates, the expert advisor, a system tester, a scanner, everything you need to run it. 12 months of his signals package, the live sessions, the personal coaching. This is really why I'm so surprised. This was normally $997, $397 here at the conference. Lowest price I've ever seen Jeff go on it. I would recommend you do it at $997, but you should do it at $397. Wow, supplies last. So we can help you get set up for that here. If you want to go to metastock.com/salespchat, we'd be happy to help you pick that up. You can call us at 800-882-3040, or you can go to outposttrading.com/slingshot, which should be in the chat as well. So big thanks to Jeff. Jeff's done a great job over the years. It's great to see him like getting us the hedge funds going, and just super nice guy. So we love working with him and appreciate that. So Outpost Trade, actually go to outposttrading.com/slingshot, or give us a call, 800-882-3040, or metastock.com/salespchat. You need to do that. That is such a discount that I'm shocked. I told our sales guys, and they're shocked. He's never gone that low on a price. It's such a good package for what, even at $997. So get in touch with us, 800-882-3040, metastock.com/salespchat. So another question that comes in from Amanda. Armando. Don't worry, I'm blind in this eye. I can't see out of this eye. It's all good. Armando wants to know, great presentations. I've missed some of them. Are they available? All you need to do, Armando, and anybody else that's interested, is go to metastock.com. I'm sorry, let's do it the other way. youtube.com/metastock. On our YouTube channel, we put all of our content, all of our events, all of our webinars, anything that we kind of create as a video content, we usually put up on youtube.com/metastock. While you're up there, subscribe. Right now, we're trying to get to 70,000 subscribers, and we're almost there. And I actually got an email yesterday from a gentleman that says, I just found your channel. There's so much content up there. And there is. We've been putting videos on how to trade and different ways you can look at the markets for over a decade now. And join the channel. It helps a lot. We appreciate it. Like the video, say things. It helps. And it helps us get the word out, and we appreciate it. So, all right, let's go ahead and kind of, right now I want to say thank you to one of our sponsors, AAII.com. One of our three sponsors, AAII.com, is obviously the American Association of Individual Investors. You can find them at AAII.com. I'm sure you've heard of like the AAII. And I'm laughing because it's kind of hard to say AAII, and it's kind of a bit of a tongue twister for me anyway. I'm sure you've heard of their investment survey sentiments. They do a lot of market reports. We work pretty closely with Ray Rondo, who's the head of their active investor division, but it's a great nonprofit. They've been doing work since the 1970s. If you want to kind of get involved with them a little bit more, go to AAII.com. So there you go. Of course, we're MetaStock. B. Wyatt asked a good question. B, I appreciate that question. Does this platform, does this Alto software include access to the MetaStock platform? If you want to do that, B. Wyatt, and you get in touch with us, we will do a free trial to MetaStock with any purchase. We're happy to let you get access to it. We'll also do an extended trial. If you go to metastock.com/salespchat, we can kind of walk you through the options. You can figure out the best one that's available for you. Thank you for your interest. Thank you for the question. Well, I'm talking about it, MetaStock. 31 years in a row, it's been rated the best software in its price category. I use scanning every day to trade, to find it and identify the trades I want to do. I believe, and I'm totally biased, I'm wearing a MetaStock. Oh, actually, I'm not today. I think it's one of the best things that we do is scanning. And you can scan any market that you want. You can scan any ideas that you want. If you're joining us from India and you want to find the signals that Jeff just talked about to you in India, with the market we cover, London, Australia, there's 300 different exchanges that we get through the LSEG group. And all of those are available for you. And I just, even after, decades of using MetaStock, for me, I still use it every day to ignore all the noise that exists in the market and just focus on those opportunities that are actionable. And I love scanning. I also think I could talk for another 10 minutes about our testing. Scott's going to come in and he's going to talk about our forecasting. He's going to do it right now. So $69 a month is how you, if you get our DC version of MetaStock. If you pay for a month today, we'll give you the second and the third month for free. We'll sit you down for what we call our white glove installation, and we'll show you how to do a lot of these tools. We'll give you training. It's $23 a month. So go ahead and scan the QR code with your phone. Go to metastock.com/comp promo, metastock.com/sales chat. Give us a call. We'd love to hear from you. And anyway, our next presenter is right here. He's behind me, 2 doors down. Actually, I think there's a song that's called "Two Doors Down." A gentleman by the name of Scott Brown. Right here, he's posing for his high school photo. Let me read this for you, Scott. I'm going to go ahead and kind of do this. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security. We're not paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or solicitation to buy a security. I'm going to go ahead and I'm going to go ahead and make you the presenter now, Scott, so you can share your screen. While you're doing that, I'm going to talk a little bit about you. Yesterday, when I introduced Kelly, I said, Kelly's one of the things that make MetaStock a great place to work. And I'm going to start the same way with talking about Scott. I think one of the things that, as a customer of MetaStock, that is apparent is just how much we care about the customers, how good the service is. And there's an environment here that has made a lot of us stick around for decades now, and myself included. Scott's right now, he is the president, or actually he is the owner of the company. And he's always fun to be around. He's always got a you can do it attitude, and he's always fun to be here. So I'm going to go ahead and turn the time over to him. I'm going to get out of the way. Scott, it's your turn. Go.
Okay. I appreciate that, Jeff. Thank you so much. I know I'm speaking for everybody that's out there right now. You know, a big thank you to Jeff. Can you guys imagine trying to put together a 5-day, sometimes 6-day conference where there's 10 speakers a day, and he, seamlessly does this, and it's free? Are you kidding me? Right? It's we get the biggest names in the industry. We're providing them to you guys, and it's a big deal. We've had a great lineup so far today. We've had Jeff Tompkins, Rahul, both of them doing such a great job, both of them having great offers with their plugins and that are attached to the MetaStock product, and super happy to have them. So Jeff, great job. Thank you. As always, you absolutely crush it. I love it. So he showed that picture and saying that was my high school picture, obviously as a joke. On Monday, I got mail from the AARP. That's one of those days where you're just like, oh man, I'm getting old. When you get your invitation to be a member and your card in the mail, oh wow. So if I have lapses of judgment here, you'll know why, because now I'm old enough to be part of the AARP pretty soon. But anyway, We're going to talk today about some really exciting stuff. We're going to talk about the forecaster, and let's go ahead and kind of dive into that. What we're going to talk about is really some powerful trade identification, and the way that we're doing that is through the forecaster. So one of the great things, there we go, is that we have inside the MetaStock forecaster is what does it do? The MetaStock forecaster, it really emphasizes the past in the sense of technical analysis, but the forecaster, in conjunction with technical analysis, really tries to look at the future. And what we're trying to do is show you guys how this works. And wouldn't you like to really look at something with a lot of statistics, probability analysis? And what it does is it's combined and blended into a cloud form right on your chart. And we're going to show you a little bit of that, you know, how to use it. If you're an options trader or you're someone that wants to see an idea about forecasting into the future, this is definitely something that you want to watch. This is something that, you know, you're going to gain a lot from today. And so let's kind of dive into this and we'll look at it. Jeff was great and already went through our disclaimer. And so obviously I'll just add on to that is that there's no guarantee in the markets, right? There's risk, and obviously you need to understand that risk and understand that there are losses as well as wins, but something that is just part of trading the market. So 31 years in a row, come on. It sounds like we tried to buy this award, right? Where you're sitting out there and you're like, really? 31 years in a row? But it's voted on by the readers. And the readers for 31 straight years voted us the best analysis software out there. And that's something we're really proud of. So what does MetaStock Forecaster do? It analyzes prices historically. It combines an indicator or trading idea with it. And then it's going to determine the probability of where it's going into the future, really inside of a cloud form. It answers that question, where are prices going to go most after, you know, most likely to be in the future after one of these events occurs. So if you're someone interested in candlesticks, or if you're someone interested in, you know, something like a MACD or a moving average, the RMO per se, we actually have those indicators in the forecaster, and it'll show you on the chart when those occurred. And then it will draw a cloud into the future to show you really the probability. Now, does that mean this is always right? No, absolutely not. It is not always right. But all of us are using tools, and these tools are really going to help you with your trading in the future. You know, it really is much like, you know, in the old days where if there was the gold rush, right? So many people use different tools, or if you're building a home, there's so many tools out there. You go into Home Depot, and what a drywaller may use, or an electrician or a plumber, all of them are going to use different tools in how they build and execute their plan. And it's the same in trading. You know, we are using tools here with MetaStock, showing you exactly, you know, when you should be getting in and out of the market and those types of things. Okay. Oh, hold on one sec. There we go. So the MetaStock forecaster, let me give you some history behind this as we're talking about this. We have Jeff just said, look, we've had employees stick around here for decades. Our average employee at MetaStock, which is a tech firm, right, has been here for about 16 years. Our average programmer has been here for about 20 years. We have a guy here, Ken Hunt. He's been here for over 30 years. One of the first programmers in the world to ever program backtesting decades ago. Well, you know, as any of us, when we're part of a large organization, before MetaStock went on its own, we were a part of Thomson Reuters. And as anyone can remember, if you've been a part of a large organization, it's really hard to innovate. And Ken Hunt did an amazing job innovating, and no one was really too happy about where these charts were going or what was happening. So Ken did something amazing. He quit and he wanted to create his own analytics. And so Ken and I would stay in touch, and we'd go to lunch about every 6 months and visit and talk. And well, when I found out back in 2013 I was going to buy the company of MetaStock, Ken Hunt was one of the first people I wanted to reach out to, because Ken is so brilliant. And we started talking, and he was creating and had created the forecaster. And so what I said to Ken is, hey, look, Ken, I need you to come back and work for MetaStock. I need you to be part of this team to grow and really provide our clients and customers with tools that they'll have into the future. And so that's really was my best probably sales job I ever did, was to convince Ken to come back and work for us. And so we did that. And now, he works for MetaStock, and we're looking at the forecaster today. And man, just a plug for Ken. He is creating some advanced analytics that are unbelievable, off the charts of what our users will be able to do. MetaStock is definitely a family you want to be part of. And you're going to see why as we explore the forecaster. So inside of the MetaStock forecaster, we actually scan for all of these different indicators that you're looking at right here on the screen right now. Okay. And what we do is, in this scan right here, is we come in and we say, hey, look, for example, let's look at this moving average 50 cross down. Every time this event occurs on the chart, you're going to see one of these yellow triangles, right? And you can click on that triangle and it will draw a map. It'll draw up what we call a probability map. And right here on this side, the darker it is, the less chance we feel that the future stock price is going to move there. The brighter the color, the more that you have a chance we feel that the stock price, or whatever you're trading, whether it be futures, this works on stocks, futures, indices, forex, crypto, whatever it is that you're trading. And as Jeff was saying, we have all that data. And so with all of that data, what we can do with that data is you can do, look, whether you're in Singapore, Australia, America, South America, Korea, wherever you are, you can get that data. And you can see right here that probability map. Now, this map can go into the future 30, 90, or 180 days. Also in here, back here, when we're on this screen right here, and I'll show you real examples here in a minute. This is a static image, and this will never change. But if you click up here on past performance, you get this right here, and this is where it gets really cool, because our screen, our chart, our stock performance, what happens every time we get a new bar, whether you're looking at a 1-minute bar, 60-minute bar, or a daily bar, you're getting new data, whereas your chart can be learning from itself, much like an AI case, right? And what happens right here is every new bar that comes in, this chart here actually evolves. So you'll not only have this right here where it's a static image and you can view off of it, but if you click there on that past performance there, you can see, is this still currently showing the right way that we're seeing? So for example, right here, here's Adobe when we're looking at the CCI overbought, oversold, and we clicked right here, right on the event marker, and it drew a cloud into the future. Now, again, let's say that you're an options trader. If you're an options trader here, you have a great thing, because let's say it's trading here at 52 and we think it can reach 60 because it's a brighter color there. man, there might be some cheap calls that you could buy there. And then if that does go through there, boy, you just created a great opportunity. Now, again, like I said, these things, this was a December 7th back all the way in 2012, but it's just an example. If you click here, it drew out a cloud, okay? And as you can see, the stock price actually mirrored that cloud pretty close. Okay, so let's do this. Let's jump inside of MetaStock. So I'm running MetaStock 18 right now. It's our latest version of MetaStock. And we're going to just quickly kind of jump into the forecaster and really see some things here that you can use to help out in your trading. So right here, when you get MetaStock 18, if you're a current user of MetaStock, this is what we call the Power Console. Or if you're actually going to try it out on one of our great trials that we have right now. So right here is in the Power Console is where you can do a lot of great things. You can bring up a chart. You can look at several different quotes. You can do scanning and explorations, much like a lot of the individuals that you're hearing in these conferences. They do a lot of explorations, and this is where you would do that at in MetaStock. Right here is where we do our back testing. We have an option scope, but we also have a forecaster here, okay? And this is where we can bring it up, and we're just looking in here, and let's say, oh, okay, hey, Wynn Resorts, Las Vegas. Let's go ahead and click Start Forecaster, or you could type in any instrument you wanted right up here. You click on it, and it will actually just bring it over, right here. So let's look at this. Here's Wynn, and this is exactly what it will look like when you bring up a security on your MetaStock version 18. So down here where the processed recognizers are, you can sort them, and you can sort them by the highest profit potential long, highest profit potential short, most accurate current forecast, the most pronounced current breakout, the most distinct forecast cloud, the most recent event, the most events, those types of things. Let's look at the most distinct forecast cloud. Now, look at this example. This is showing the LCI switch support bounce. Well, it's really only showing 5. It says it has 6 of them, but we're looking at 5 different ones here. There might be one underlaid there. We want to look at least, this is going back about 5 years of data. I like to look at ones that have at least, 15. So you can kind of scroll down these and say, hey, do any of these here have, some of these that are coming up? There's one with 14. And we'll just keep searching until we find one. Okay, here's one that has 19 of them. It's actually an indicator that I created, Scott's original pattern. And I'll actually show you how to create your own indicators very easily inside of the forecaster. But what we have here is you can see Scott's original pattern. If you come over to this little box here, it says, look, this event has occurred 19 times in the last 5 years. On average, the event occurs every 64 bars. And then it jumps into a lot of statistics. So, for example, right here, it says, look, in the statistically, oh, whoops, I didn't mean to hit that. Over the last 30 bars, the event occurs with a probability of 95%. The closing price appears to be about 2% higher with a standard deviation of 0.1393. The statistical margin of error is 22%. Now, let's go ahead and get to the strength and the meat and potatoes of this. So let's say you come in here and you're like, hey, I want to look at, one of these. We're going to look at a 30 bar cloud. I can click on it and you can see that instantly a cloud will appear. And I can scroll down here and go, okay, I want to click on the next cloud and look, and I can click on the next one. Now, let's remember how to read these, right? The brighter the color, the more we feel like the price will go through there. So let's say that on this day, back on January 8th, you were looking at Win and you were I was looking at my original pattern. I would come in here and click on that and it would show me this specific pattern, okay? And then I could come in here and say, well, I want to see it extend out a little more. Let's look at 90 bars. And then I want to extend it out 180 bars. Okay. So based off of Scott's original pattern, it kind of shows you what the color and where really the forecast for that individual price is going to go to. Hypothetically based on the forecaster. So that's a little bit about Win. I already have some up here. I thought I'd get a few. Let's look at the E-mini here, right? I know a lot of you love to trade the E-mini. Up top, here's the recognizer library. Every time I bring up a new security, every single one of these specific trading systems are being scanned per security. So at any time, I can click on one of them. It'll show me every single time when the event's crossed, and then I'll actually have an event marker, and that event marker, I can go ahead and look at it, moving here into the future. So this is the highest profit potential is what we're looking. We're looking at the MACD cross up. I mean, geez, look at this, man. Can you believe this? If you could have, told ourselves back in November, right? This is where we want to start buying. Look at this, and let's go ahead and we'll start looking at some of these, right? So we'll look at the bottom here, and it says, hey, look, in the next 30 days, we think this is going to kind of find the bottom, and it really did. Now we come up here, we can check the next one. Wow, look at that. There's a little purple there about 30 days out. And that stock price or the E-mini price went right through that. And we can click on this one right here. Look at that. Wow. It absolutely, the price of that went right through that specific cloud. Let's look at a 90 bar. Oh, wow. Look at this one. I love when these come up, and I haven't gone through this in every single bar and every event cloud, but out here, 90 bars, so 3 months later, right? We're trading in here probably about 3,900, and this is saying, hey, look, we think it's going to jump up to 4,400 in the next 90 bars, and look at that. It even exceeded it and went up to 4,600. But if you knew that 90 days prior, boy, think of all the opportunities that you would have, getting into that. So let's come in here. Let's look at some more of these. Wow, it's 30 bar there. And then let's take a look at this. I mean, it really jumped up. And look at that. It was calling that the whole way. So right now on 30 bars on that date, you can see and look at that. Even though the stock or the security price came down, look at that dark red there, and it just came right through it. So based on the MACD, right now, this is saying, hey, look, there's an opportunity maybe up at 5,200, right? So we'll see. And you could come in here and say, well, I want to see a further forecast based off of this. So it's pretty bullish right now. On the MACD cross up in the forecaster is pretty bullish on that. Wow. Let's go all the way 180 bars and see where it's going. Yeah, it's pretty bullish. If you are a MACD trader, that is the forecast right there. Now, let's remember, this right here is a static image. No matter where these bars go, let's say it crashes and comes back down to 4,000, it would still show the bars here at 4,000, and this cloud would be up here, okay? So the forecast cloud tab right here, it's explaining every time we get a new bar in, this cloud evolves. And it kind of shows you, oh, okay, where are we headed at the most current bar? And that's where this is. And this can be done in a 60-minute chart, a 10-minute bar, a daily bar, whatever it is. So that's a little bit with the E-mini. Let's come in here. We can look at the Microsoft. This is a 60-minute chart. And boy, I mean, look at these gaps, right? Anytime you're a trader, when you see gaps, that can be tough to trade because it's such a surprise, right? And so right here, we're looking at the most accurate current forecast that we have. And let's kind of start here. We can say, hey, here's 30 bars. A good example of it not working, right? There it is right there. But this image doesn't change. So we're not trying to lie to you. We're not trying to trick you. We're saying, based on our tools, our analytics, look, we thought it was going to be more sideways, and it wasn't. Microsoft absolutely, came up on that. So as we come in here, we can say, okay, we'll look at some of the more recent ones. This is an interesting one here because it had some really vibes on it that, look, it split the cloud. There was some that went above and some that went below, and it really had that gap down, and it went right in that. That's pretty interesting. It still has those. Wow, look at that. But look, that bottom darker cloud, it followed it pretty clear. And then right here, you have that purple, right? So back on February 23rd, you were trading at about 414. It says, look, we think you're going to be down to about 407. And in the next couple bars, it looks like it's going to hit right through that little bit of purple right there. Again, really, really quite interesting there. And this is a 60-minute chart that we're looking at. Okay, so if you didn't want to look at daily, you could look at that. Okay, here's one that I know a lot of people I'm pretty surprised. This is Bitcoin, right? It jumped above 60,000 again. Are you kidding me? Are you kidding me? Right? It's driving it up. And, a lot of people out there are very bullish on it. And you can see, I mean, shoot, look at that. Really, I mean, all the way back here, if you could have somehow saw this coming in November, jumping below 30,000 to over 60,000, that's a pretty significant mark there. This one is on most events, and you can come in here and click on these 30-minute or these 30-day bars. And this is one of the reasons I brought this one up. We're going to look at these. And I'll tell you, these are going to be a little bit below of where Bitcoin went. Well, it's starting to learn from it, though. Look at that. Because look at that sharp jump. So here will be a good example. You see this right here, and it was trading at what, about 52, 53,000. It says, look, we think it's going to get to 55,000. I mean, look at these last 3 bars. Are you kidding me? That is the moneymaker right there. The absolute moneymaker. Okay. Let's take a look here at Apple. I know a lot of people are interested in Apple, and a lot of people have traded Apple a long time. This is stochastics oversold. It's happened 36 times over the last 5 years. And let's just take a look at these last, 5 or 6 event markers when these occur, and look at these clouds and how accurate they've been. And hey, anytime a trader is in this type of environment where it's just sideways, it's really hard to trade that, isn't it? But as you look at these, it's kind of showing you that it's sideways. Not too much growth, right? And this is where it thinks it's going to be. It thinks it could come up a little bit, but it also thinks it could be right there, 185. And, today we're trading at probably, 182, something like that in there. These are, again, daily bars that we're looking at. Now, there's some really cool things that we can do inside of the MetaStock forecaster that nobody else in the world can do. And I'm going to show you the first one right here. We're going to come in here to the open new analysis. Or actually, excuse me. We want to come in here to the recognizer library and go to draw a new pattern. Now, a lot of you out there love patterns where it's a double top, head and shoulders, triple top, whatever it may be, and you would love to draw those patterns yourself. Well, MetaStock is one of the only software products in the world that can actually do that. So let's go ahead and take a look here, and we're just going to say, let's do a head and shoulders. So we'll name it head and shoulders. You just take your mouse and watch this, and you draw what you want it to look like. And then instantly, it'll have all of these little circles on here, and you can manipulate those. You can invert the pattern. You can reverse the pattern, and then you can easily save that pattern, right? And then this pattern that we've created will come in here, and it will absolutely, it will be scanned on every security that you bring up. It will have its own spot over here. So let's say we clear that. Let's say we come in here and we say, let's do a trending top type of, I think I just made that up. Something like that. This is a pattern that you love to trade. So we'll click save. Well, you can come down here to the bottom. It's all alphabetical. And you can say, hey, look, let's look at the trending top. Let's see if any of these have it. We'll click on it, rescan the selected analysis. And right now it's looking at Apple. And look at that. It's saying, hey, here's all these different times it's occurred. And it's got to be at least a 75% match. And you can come in here and then select it. And it will just go ahead and click on these. Oh, that is cool. Look at that, a 90 bar. And it really called it pretty well. So Scott's trending top. Are you kidding me? You guys can also do exactly what I just did. So pretty cool stuff. Now, there's something else that is really, really cool. Let's say you come into Bitcoin and you're like, oh my gosh, I love these 3 bars. I feel like they're super bullish and I want that pattern right there. So I can go click right here, user defined pattern select those bars, and it says, do you want to capture the selected price formation as a user defined pattern? I select yes. So then I say, let's call this our Bitcoin pattern. And we'll name it Scott's Bitcoin pattern. Save. We'll come right here and we're going to rescan the selected analysis. And this is on Bitcoin. And you can see all the different, wow, it happened 202 times. And you can come in here, click on our cloud, and it will go ahead and pull that cloud out. But it was that easy. I found the pattern on the chart that I want to trade, right? I can come in here to Apple. You just go to Recognizer Library, Scott's Bitcoin pattern, rescan that selected analysis, and then you'll have it on Apple, right? And you can see there, look at that. Wow. It happened 177 times. Man, let's see how this is doing here. Look at that. What a cool looking pattern. So it thinks that it's going to break out and go to about maybe 200. But again, if you're an options trader, and the latest one says, hey, yeah, it looks like it still might be a little under 200. But if you were an options trader, and you could get some cheap calls on this, wow, what a great opportunity for you. Okay. So that's a little bit about the forecaster that we've been looking at. Let's jump back into our you can also do explorations with so the way you would do an exploration is you would come in here, choose explore. We would choose the explorations we want. And right here, you can see all the forecaster. And then what this will do, it'll go out and show you if there's any opportunities currently right now. You know what? Let's go ahead and do one. We have the forecaster CCI oversold. Let's go ahead and select let's do the NASDAQ 100. So it's a quick one. And what we'll do is we're going to look at a daily chart, the last 1,000 bars. We'll start the exploration. And right here, how cool is this? So if you have your own, one of these forecaster event markers that you love to look at, well, you can easily open up your Explorer and scan to see if any of them have an opportunity right now. And let's go ahead and we'll just kind of peek at one. Let's look at Netflix. We'll open that chart. And then also something really cool inside of MetaStock. It's super easy to get this into the forecaster. If you right click and go to forecaster, it automatically brings it up right there. So, we're looking at those two because those were the last ones we said. So you would want to enable all the analyses. And instantly you have, all of those being scanned on Netflix. And you can then now do your analysis, and it would show you that CCI overbought, oversold. I think it was CCI oversold. It might not be anyway. But this is how you could easily scan the markets to do that. So let's go in here. We talked about drawing our own patterns right here. There's a double top. So, I know that we just spent an hour together. It was probably the best hour of your life, let's be honest. Thoroughly enjoyed it. Honestly, I've been with MetaStock for almost, close to 25 years, right? My favorite thing to do, no doubt about it, is to spend time with our customers and prospects, showing off MetaStock. I mean, you got to remember, MetaStock is being used by some of the biggest banks in the world, some of the biggest funds that are being traded in the world, right? And but that's about 25% of our business. The other 75% of our business is retail traders. So we really cater to both markets. And a software product that has been around for over 40 years is something that has truly stood the test of time. We're not a fly-by-night company that's not going to work well for you, right? We are the absolute standard in technical analysis. We're the ones that people come to when they want to be serious about trading, when they want to look at technical analysis. All of these people that you see over the next 5 days that Jeff has invited, we have great relationships with them at MetaStock. None of them are getting paid. We're not giving them some type of presenter fee. These individuals have no MetaStock. They trust MetaStock. A lot of them have created plugins with MetaStock. And so this is why if you're a current MetaStock user and you're not using MetaStock 18, you need to upgrade, because everything I showed today was version 18. If you're not a current user of MetaStock, we have the best deal ever for you. Right now, if you're a real-time user, to get MetaStock and the data, it costs $265 a month, okay? If you're an end-of-day user, it's $69 a month to get MetaStock and the data. But what are we going to do for all of our users out there? We are going to give you guys 3 months to try this out. You can buy 1 month, get 2 free, and this will give you the latest version of MetaStock 18. We also have great deals on upgrades. So if you're using MetaStock 16 or 17, chat or call in and we'll give you a great deal on our latest version of MetaStock 18. Call in 1-800-882-3040. Again, 1-800-882-3040. You can also get on our sales chat right on our website. We have individuals, our sales staff, real sales staff, not individuals working in some call center, that can help you right now upgrade or get this, buy 1 month, get 2 free. Also, we have a landing page that you can go to as well. But I would highly recommend calling 1-800-882-3040 or get on the sales chat. Our staff can easily help you. You're going to see why we've been the #1 rated software for 31 years in a row because of that. So I really appreciate your time. We just have a few minutes left. Jeff, are there any questions?
There's not. There's not a lot of questions. I did answer a few in the chat,
Okay,
but I
perfect.
do want to say it was the best hour of my life so far.
Let's go! I love it, Jeff. Seriously, before I get off of this part of it, a huge thank you. I know everybody out there appreciates this. Are you kidding me? A free 5-day conference with the best traders out there in the world and educators. I mean, come on. This is going up to our YouTube page and it'll be up there. And as Jeff said before, that individual, I think he was in his 80s, said, look, this is enough content for the lifelong unlimited content. So use that. Jeff, thank you. And we're back on schedule again.
Thank you, Scott. I appreciate that. I'm going to go ahead and kind of take over. Thank you for thanks for spending some time with us.
I need to get kicked out. Come on.
See ya. It's that easy.
Bye.
All right. We go ahead and make me the presenter. Okay. Cool. I'll go ahead and show my screen. It is great too. Like if you sign up now, just the end of day version, $69 a month. You'll be running until May 28th for $69. You'll be able to evaluate the forecaster, the tester, the scanning. You'll be able to see why it's been rated #1 31 years in a row. I wouldn't trade without it. You should try it. There is reasons. It's not software that we started making like last year either. Like we're doing a hidden gem series where we just talk about some of the things that are in MetaStock that you might not know of. And I think we're on version 3 or 4 of just different things that you can go in there and do. So again, scan markets, test trading ideas, forecaster, real-time alerts, commentary signals, all of that kind of stuff. Starts at $69 a month. MetaStock.com/conf promo, MetaStock.com/sales chat, 800-882-3040. or you can scan this fancy QR code with your phone if you want to. So if you do have questions as we go, let us know. I'm going to ask a question real quick. We are going to do a prize drawing, and we're going to do it fast. So what I need from you is give me any number between 1 and 9,425. I want you to do it now because I was told by Dan that he has a hard cutoff right at the end of his time. So very, very quickly, get some numbers in here. Tell me what the number. I'll pick a prize off right now. We are going to give a 1-year complimentary subscription to Joe Duffy's newsletter. With this daily newsletter, he came in yesterday. He talked about the neuroscience of trading. But he does analysis, updates, trade recommendations. It's a 1-year value at $348. We're just going to go with Travis. Well, we're going to go with Travis's number. So if you've registered, you're going to be on this list here. If you're on this list here, there's a number on it. So let me, 8888 is, let me just find it. 8888. That is Kane F. in the USA. Gmail address. Everybody has a Gmail, it seems like these days. So if that sounds like you may have just won. If you're watching this live, I know a lot of people just watch the recordings and stuff like that, and that's great. You don't have to be present to win, but sometimes you do. Depends on how we do the contest. But if you're watching this now and you just won a year of Joe Duffy, let us know, because congratulations. Before we go over to Dan, I do want to say thank you to one of our sponsors, CMT Association. You can find out more about CMT Association at cmtassociation.org. We're very happy to be partnered up with CMT. Tyler usually comes in, but he's traveling internationally. We usually have him in, and he'll talk about how having a CMT designation after your name can help you get a job with a bank, how it can help you increase your assets under management if you already have a job with a bank, how it can kind of do a lot of things to get you more responsibilities. And if any of those, or if you just want some fancy letters like CMT to put after your name, if any of that appeals to you, go to cmtassociation.org and get involved. So thank you for all of the numbers: Travis, Abjeet, Kathleen, Reed, Dennis, James, Mike. MetaStock has to help. But for the rest of you, I appreciate all the assist and the help. Let's go ahead and kind of get moving on. Our next presenter is Dan Passarelli. I love Dan. He is going to talk about a momentum resumption strategy that he calls the red-green knockout system. So without further ado, and with the idea that he has a hard cutoff in an hour, let me go ahead and kind of make him the presenter. How are you doing, Dan?
I am doing fantastic. How are you, my friend?
You sound good. We're doing great. All of us are doing great. It's been a great several days, 3 days, I guess, at this point. But the audience has had a lot of really good questions. It's going well. So far, so good.
Super cool, man. Super cool indeed. Love it.
All right. You should have just gotten a little bit of a screenshot that says, do you want to share your screen? Let me know if you didn't see that.
I do see it, and I am going to share it.
Okay, cool. I'll let you know as soon as we can see everything. I can see the speaker view. And now I can see the correct view. So I can hear you. I can see. I know you usually present with a webcam. It's fine if you don't want to, but I can't see you.
How is that?
I can. All right, you're good. All right.
My place.
Without further ado, I'm really good at getting out of the way. It's your turn to go.
All right, thank you. Dan Passarelli here. How you feeling today? I'm really excited to share this trading system I created with you. Before we get started, I need to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. Get a copy of that by emailing investor services at theocc.com. So I'm just going to jump right in here. Think of your usual trade size. Maybe it's a 5 lot, maybe it's a 50 lot, or a 1 or 2 lot. If you knew a trade was going to be a winner, would you trade your normal trade size? or would you trade bigger? What do you say? Well, bigger, of course, right? The more confidence you have, the bigger of a trade you can make. And that's how you make more money, right? So look here. On January 31st, 2,250 put credit spreads traded in Cisco systems. 2 days later, at expiration, the person who made that trade could have locked in a $157,500 winner. Man, that's a nice 2-day profit, right? That's a big trade. That's a lot of confidence in this trade. So look, who's making these sorts of trades? It's Wall Street traders, the professionals, the guys who people are always saying are taking their money. These are the people we love to hate. The professional traders that trade for the big institutions like Goldman Sachs, who made $47.3 billion last year. How is that remotely possible? $47 billion? So these institutional traders, look, I mean, they're the same people who made billions of dollars leading up to the 2008 financial crisis that left a lot of people out of work and at risk of losing their homes. And in fact, actually, a lot of them did lose their homes. When you're in Chicago or New York and you see that 27-year-old pull up to the valet at the steakhouse in the shiny new Ferrari, well, guess what that joker does for a living? And then there's the high frequency traders whose firms pay $10 million to build microwave towers so their order gets to the exchange before yours by 3 milliseconds, and guess who's left out in the cold? How can we compete? But one thing that's undeniable is that these guys are smart. You don't get to that level without having figured some stuff out. We still don't have to like them or trust them. We can still disparage them every chance we get, but they make money because they know exactly how to do it. The bad guys. Are these institutional traders our friends? Yep. Yes, actually they are. Yep. Why? From today forward, these traders are going to help us with our trading every day on a daily basis. Just imagine that for a minute. There's a way to have institutional traders share the trades they're making with us real time. They do all the work. We see their trades, and we're able to trade those trades right alongside with them. This is my promise to you. I'm going to share with you a way to trade high probability trades so you can boost your win rate by up to 53% more than your current win rate by actually seeing the trades professional traders are trading real time without them even knowing. Wow, that sounds great, right? And at the end of this presentation, I'll share how you can take the next step so you can start getting these results right now. What do you say? Let's get some feedback here. Is that a fair deal? Yes. Hit that questions box for me and give me a big old yes if you're liking that. Hit that questions box for me and give me a big old yes if you are liking this. Yes? Tommy says yes. Quentin says yes. William says yes. Brian says yes. Omar says yes. All right. I like this. I like it. I like it. Now, be sure to stay until the end of the presentation. The most important things I will share come later. And to keep the focus, I am going to hold all questions. If you have a question, write it down and I will get to it later. So that said, let's keep it positive and let's have some fun. Sounds great, right? Okay, let's do it. So once again, I'm Dan Passarelli. I traded for years down on the floor of the Chicago Board Options Exchange, wrote 2 of the most popular books on option trading, worked with every major broker and exchange in the US and even in the world, and get to be on TV a lot, which is kind of fun. But this is also who I am and what I do. And these are the important things. The most important thing to me is my family, my kids, my wife, Kathleen, who many of you know, she's been part of the Market Taker team for a few years now. Previously, she was a proofreader for some well-known publications. Now she proofreads our article. She catches our mistake. She's the one who makes authors look smart because anybody can make a mistake. In addition to Kathleen, there are 2 adult children, Sam and Isabel. One of the things we like to do together is travel. We enjoy new cities, learning about new cultures, nature, food, and wine. We've been literally all over the world together. We're also a musical family. We enjoy listening to music and playing it as well. And these are the things that are important to me, and trading helps me be able to do them. Now let's talk about you. I know some of you are just starting out, some are already doing pretty well, and some of you have been struggling for a while. Whatever your success level is now, you believe you can always do better, right? And maybe that means having a little more freedom to take some time off and play golf, or take that 3 to 5 day vacation to a dream beach home at an Airbnb with friends and family without having that big mortgage. Or maybe to give more to your family members, put your kids or grandkids through college. Look, here at Market Taker, I will never preach about how trading can get you that brand new Ferrari. It's not who we are. But if you could learn a life skill, trading, that allowed you to be able to go and purchase that Mustang convertible to joyride on a nice summer day, all this is possible. And I know Mustangs or Corvettes or whatever, not for everybody. A lot of people like practical cars, the simple workhorses. In fact, even the folks I know who have a fun, sporty car, they also have a practical one too. Something to drive the kids and all their equipment to soccer practice in. Something to get you from here to there that's reliable. That'll get you 200,000 miles over the years. That you can consistently use over and over again through rain, sleet, or shine, no matter what. And look, maybe you love flashy stuff. Maybe that's not your thing. Either way, life is easier when you have one thing you can rely on, one vehicle that provides consistency that you can count on. What I'm going to share with you today is exactly designed with consistency in mind. This is not a get-rich-quick scheme. I mean, we're not trying to do it slow either, right? But this is about drastically increasing your win rate with high probability trades to produce consistent profits over and over again, so that you have that one part of your overall trading strategy that you can rely on no matter what. Consistency is not guessing. It's measurable. It's using probability to increase your odds of winning and produce a positive return over and over again. And in order to do that, we've got to put multiple criteria on the side of every trade. And one of those things is time. Let's talk about option trading. In option trading, time literally is money, or at least becomes money. The reason is because time helps certain traders who know how to put time to cash. Creates money, which might seem counterintuitive, but that's only because a lot of traders, they like to buy options. But hey, I like to say, if you can't beat them, join them. Put time on your side. Instead of buying options and being at a disadvantage, many traders sell them. In fact, selling options is more popular than buying them, because that's how you make money from time passing. Now, one thing about selling options is that if I just sell an option, I could end up with small profit potential, but much bigger risk. So we want to be strategic. There are two limited risk, very strategic option spreads that are at the heart of all option trading. So much that I call them the mother strategies of option trading. The mother strategies of option trading are credit spreads and time spreads. If you can master these two strategies, you will have all of option trading mastered. And the reason is because nearly every option strategy is made up of one or two of those strategies. It's important to get credit spreads and time spreads. Right now, I will share the inner workings of credit spreads and walk you along the path to putting them to use. So there are two types of credit spreads: call credit spreads, put credit spreads. Call credit spread is when a trader sells a call, usually at or out of the money, and then buys a higher strike call with the same expiration on the same underlying. Put credit spreads is when a trader sells a put, usually at or out of the money, and buys a lower strike put with the same expiration on the same underlying. So let's go through a simple example so you can see what I mean. Let's say a trader is studying Citigroup stock and thinks it's not likely to rise above a certain point. Maybe there's resistance at $54 a share. Well, the trader can position him or herself to make money as long as Citigroup doesn't go above $54 a share over the next 10 days by selling the 54 calls that have 10 days to expiration, and at the same time, as part of the same trade, buying the 55 calls in the same expiration. So they sell the 54 calls here at 49 cents, buy the 55 calls at 28 cents. So this trader collected a total of 21 cents. Now, 21 cents of option premium is $21 a money. This is a 10 contract trade, so that's actually collecting $210. See how this pennies turn into dollars real quick? As long as the stock stays below $54 a share for the next 10 days, this trader can make up to $210 on this 10 lot and do so with limited risk because we're protected by buying the 55 strike call. Think of it this way. Short call is where one makes or loses money. If the stock is below it through expiration, you get the max profit. If it goes above it, you can start losing. The long option is the protection. It's what limits losses. This is a probability curve. The horizontal axis here is the stock price, and the vertical axis is the probability of the stock being at that price. What I have here is a bell curve. Now, most finance professors who just love getting technical and using fancy terms, well, they'll say stock prices are actually log normally distributed, which is closer to the truth. So this graphic of being a bell curve is not technically exactly correct, but hey, it's close enough. Now, to make it simple, here's what this shows. The middle is where the stock price currently is. The higher part of the curve here says smaller moves are more probable than bigger moves. If we look at the past 30 days or whatever of closing prices or for forecasting for the future, if here is today's stock price, most recent or future prices would fall here. Would fall. Hold on a second. Would fall here, right? But a smaller number of prices, they would fall here. Now, another huge implication that this has is that finance professors assume that the stock price has about a 50-50 chance of heading higher or lower. There's a slight interest rate component there giving a small bias to the stock going up, but this is basically how professors think about it, 50-50. That said, we are going to talk about how we can change those odds more in your favor later in this presentation. Now, because in this case, the stock was at 52.61 when the trade was put on, and we sold the 54 strike calls, we have a head start in making money. So let's go back to that professor math. If the stock is at 52.61, and there's about a 50% chance of it being lower at expiration, well, that 50% of occurrences would be winners. Then for the other 50% of the time on the left side of this line, when it goes up, well, some of that time the trade would be a winner too. Only if it's trading far enough above the strike does the trade lose. That's why credit spreads are naturally high probability trades. And that has huge implications. First, the objective is not to do this once, make one trade. It's to do these trades that have a much better chance of winning over and over again every day. More wins compounded over time can grow your account exponentially. And that's great if you have a small account and want to grow it into a bigger one. Even if you have a big account and want to grow it yet bigger. What if you only had 30 minutes a day to trade? There's some trading styles that would be impossible to trade with that time constraint. Day trading, gamma scalping, momentum trades on short time frames. Those are all impossible to trade for people with busy schedules. But credit spreads, they make money as time passes. They're not urgent like momentum trades or day trades. They're ideal for traders with busy schedules or for traders who have the time but want to spend it more efficiently. With our trades, we have to look at more than just the win rate. We need to talk about the risk. Every trade is a balance of probability of success versus risk reward. Let's look at that Citigroup trade again. If a trader sold this credit spread and collected $210 and held it all the way till expiration and the stock ended up below 54 at expiration, the options would expire and the $210 would be the final profit as shown by this blue line here. Now, if the stock rises above 54, the trade might still be a winner. The credit from selling the spread was 21 cents. So the actual break even is 54.21. Below 54.21, the trade wins. Above is where the trade loses. And we're going to talk more about that loss in a second. Now, first, as you see here, the stock is currently at 52.61. There's about a 50% chance of it going down. And if it does, and the stock's trading lower at expiration, well, that leads to maximum profit. Then there's a 50% chance of it going up. And some of that 50% would also lead to maximum profit. Only till we get above 54.21 a share, that's where the trade starts getting worse. So your odds of success are overwhelmingly in your favor. But I want to be clear about something. You stand to lose more than you stand to win. While the maximum win is 21 cents of option premium or $210 on this 10 lot, the maximum loss is 79 cents. We calculate that by taking the difference between the two strikes, 55 minus 54 minus the credit. So that's $1 minus 21 cents is 79 cents. So in this case, the risk is bigger than the profit potential. So like I said, there's this balance between probability of success and risk reward. So we need an edge above and beyond just the regular old probability of winning. And this is what is different about our approach to trading credit spreads. We get that edge. So the odds are overwhelmingly in your favor above and beyond the simple approach that everyone else uses on credit spreads. What if we could find a bunch of credit spreads that are high probability trades to start out with? Then we take all of them, see which meets certain criteria that would make it an even higher probability of winning above and beyond the simple professor math. And then we take only the trades with the best probability of risk reward of those. That would be powerful, wouldn't it? All right, remember the professional traders? Let's talk about this guy again. I used to be this guy, or at least a guy like him. In fact, I know this sort of guy so well. I actually have a picture of him from when he was a kid. Do you want to see it? Wait for it. Yeah, that's probably him, right? They take your lunch money, eat your lunch, make you do their homework. Now these jerks dominate the financial markets. Are they mean? Absolutely. Some of these guys will take and take and take. Do they cheat? I don't know. Maybe they do. But you know what? Like I said before, they're smart. You can't be a professional trader, not for very long anyway, without having figured some stuff out. Say what you will about them, and you're probably right, but they know how to make money. So I have a question for you. What if you knew what the professional traders were doing? They'd find the good trades, they do all the research, they would trade them, and you know exactly what they were doing the moment they do it, without them even knowing it. It's kind of like having the bully do your homework for you. Wouldn't that be great? The one thing we know is that sometimes the smartest people, they make mistakes. After the bully does their homework, we're going to proofread it to make sure it's right. This whole system is predicated on them being right. But you know what? They're not always right. But you know what is always right? Methodology. Our methodology proofreads what they're doing. So not only do we have trades from super smart people, but we're only taking the best of them. Now, this is what I call the genius method. After seeing what professionals are trading, we verify the technical setups using support and resistance, that we can sell options that are overpriced only, and there are no planned announcements that can cause the stock to lose. And this is how we gain an unfair advantage. We see what the professional traders are doing right there on our computer, so we're getting all of their unfair advantages. Plus, we screen them with our time-tested methodology to take only the best of the best. This does what no computer or human can do alone. It combines algorithm technology with hands-on screening. Now, before I get into see how these trades the institutions are making, to see them all, let's first take a look at what this looks like in real life. So here is a simple example. On February 8th at 9:35 and 57 seconds in the morning, Alphabet, an institutional trader sold 351 of the February 9th, 144, 145 put credit spreads at 24 cents. So that means the trader sold short 351 of the February 9th, 145 strike puts, and at the same time, as part of one trade, also bought 351 of the February 9th, 144 puts. So that's a put credit spread. Same expiration, two different strikes. Because the 145 puts are a higher strike, they had more premium. Thus, the trader takes in a credit when the trade was made. Now, in this case, that credit was 24 cents per contract. 24 cents of option premium is $24 of money times 351 contracts. So if this trader held this trade all the way until expiration the next day, he or she could have made $8,775 at that time. What if you were alerted to this trade the second it happened? Well, a small trader following along trading just 5 lots could have added a quick $120 to his or her account. Now, $120 may not look like a lot compared to $8,775, but imagine doing this many times over and over again. This is what leads this to being a wealth building activity, even and especially for smaller traders. And bigger traders might consider trading somewhat bigger trades. 10-lot trader could have brought in $240, 20-lot trader could have made $480, and that's just holding it for one day. Here in Carvana on January 5th at 12:14 and 24 seconds, 300 of the February 35.45 put credit spreads traded at $3.12. So this trader sold 300 of the 45 strike puts, and at the same time, as part of one trade, also bought the 35 strike puts. The trader took in a total credit of $3.12 a contract. So this is a put credit spread, right? Its advantage is that it's a not very bearish trade. As long as the stock is above $45 at expiration, this trader would make $93,600 profit. Now, imagine. You see this trade, the millisecond it happens. A trader trading a 5-lot credit spread could add $1,560 profit. 10-lot traders could have brought in $3,120, and that would be $6,240 for 20-lot traders. Now, we get these every single day. In Netflix on February 8th, at 1:03 and 36 seconds, a big trader traded 600 of the February 9th, 550, 555 put credit spreads at $1.36. It's a pretty big trade. Again, these are not super time sensitive like day trading or anything. The price often doesn't change all that much over short periods of time. Now remember, you make money by time passing. So even if you don't see it right away and notice it an hour later, it's still possible to participate in this trade. Now, if this trader held this all the way until expiration and the stock stayed above $555, at expiration, he or she would have made $81,600. That's a pretty great day trading, huh? Because that was just in one day, overnight. Even a small trader following along, trading just a 5-lot, could have added $680 to his or her account. 10-lot traders could have made $1,360. On a 20-lot, that would have been $2,720 profit. And these are just a few examples so that you get a feel for how this works. I have dozens of examples of how this all works that I'll be sharing in even greater detail in a boot camp video class. In just a few minutes, I'll share how you can get access to the video recording of a half-day boot camp that we've already recorded for you. If you're like me, you get a lot of messages, and some of them are important. If you didn't open the email or text that Jeff sent you about this training event, you could have missed one of the best opportunities that I've ever shared. But you know what? You get some noise too. What if you could just get the most important messages and skim them over like your lunch break or whatever? And you just get all the information you need all in one place without the noise. You see just what's important. What I like to call purposeful notifications. Whew, wouldn't that be great? Well, that is what I'm going to share with you right now. Credit Spread Genius is officially here. Every day, you will get real-time alerts when traders are trading a large volume of credit spreads to open a new position. You'll be the first to spot these trades so you can participate in the best trades in the market using my proprietary trade triggers to see exactly when the trade is happening live real time. Then you just follow a simple checklist to proofread it. And it is all extremely simple. I'm sharing this now so you can start getting the results that you deserve. Like this one on January 16th in NVIDIA. A trader could have followed the institutional traders, traded a 5 lot of the January 547.5, 560 put credit spreads. And a 5 lot trader could have made $1,625 holding it till expiration. A 10 lot trader, that would have been double that, $3,250 profit. In Wayfair on January 11th, a trader could have traded a 5 lot of the 50-55 put credit spreads and made up to $775 on just a 5 lot. On a 10 lot, that'd be $1,550. And the best part is, Credit Spread Genius reveals trades that you would never find without it. Like in CYTX, who trades? I don't even know what that is, right? But on January 11th, a trader could have seen this trade and traded the January 115, 125 call credit spreads and made up to $650 on just the 5 lot, $1,300 on a 10 lot. Meet Chris from Mobile, Alabama. Chris was one of the first people to use Credit Spread Genius. And Chris said, as a busy professional, I like the credit spread alerts because they save me time researching trades. The nature of credit spreads also means these alerts are not as time sensitive. I can check the alerts in between patients or at lunch, then quickly formulate a plan to execute a trade. So let's talk about who this is not for. Just to be clear, this is not for people looking for a get-rich-quick scheme. It's not that kind of strategy. This is about having a system that drives consistent overall profits. This is also not for people who love spending hours and hours going through thousands and thousands of charts to hopefully, fingers crossed, find a halfway decent trade. It's designed to save you time. Your time's valuable. These trades can literally be made with a couple of minutes, not hours, because all the information just pops up on a browser window. This is also not for wishy-washy procrastinators, overthinkers. Wishy-washy people who see a good investment but can't make a decision to save their lives. Well, they don't make good traders, right? And I know that's not you because you've invested your time being here today. So let me tell you who this is for. This is for you if you want an edge over the market. This is for you if you want your trading to be easier and less time consuming. This is for you if you have a busy schedule and can't look at the market all day long. This is for you if you can follow a few simple steps. And this is for you if you're willing to invest in yourself. I want to invite you to join us and start using the Credit Spread Genius system right away. So first, you're going to get the Credit Spread Genius scanner. So every day, you'll get real-time alerts when the big institutional traders are trading high probability credit spreads. This simple scanner searches the universe of over 5,000 stocks for the setup. And it makes it possible to find the trades that you would never have access to without it. This is my simple, easy to use alert system that instantly alerts you to big institutional credit spread trades. You'll be following the smart money, so you never have to second guess yourself in the market again. You get password access to real-time trade triggers sent directly from the Chicago Board Options Exchange. I pulled some strings for you. I've negotiated a contract with the Chicago Board Options Exchange for you to get professional trade data that you can't get from any other source. You literally cannot get this from any other source. I, as a professional in this field, I pay for the data because not only is it expensive, it's about $7,000 a month is what I pay, but it's not available to non-professionals at any price until now. And the best part is it's all legal. When you sign up as yourself, a non-professional trader, and you can get access to these signals through this deal that I made with the exchange on your behalf. The closest thing to what I'm sharing with you today is what you might call an alert system. And this is what one person who used Credit Spread Genius had to say about his experience. I've used other alert systems before. Mostly those are alerting naked long calls or puts, mostly way out of the money and seem like a lottery ticket. I never gained any ground with those. This credit spread alert seems somehow different. Like it tells more of what the big dogs are thinking. So yes, what I've created, it is different. Even the few credit spread scanners that are out there, they brag about high probability, but they're only doing that simple professor math. They don't have a true high probability once you weigh it against risk reward. They don't have a true edge. So I've created a true high probability trading system with real edge that doesn't require constant attention along with the training to screen, set up, and manage the trades. I created something that actually works. Now, I talked to my friends at the CBOE about how to get this data. They built an algorithm just for me that scans the market every millisecond for trades the smart money is making and then pushes them out to our traders in a password protected browser window. Browser windows like, Chrome or Safari or Edge or whatever. Now, no one else on the planet has this technology. These alerts are truly different. You can't get these from scanning with your broker. You literally can't get them anywhere. But the other important part of this is that proofreading process and the training on how to manage the trade. So I created some bonuses for you. Let me ask you, when the plumber comes to fix a busted pipe for 30 minutes, you're not really paying him for his 30 minutes, are you? You're paying him for his 30 years of experience. So I decided to save you years of time and put everything you need to know from my 30 years experience into a few super short, quick, easy videos to get you up and running so that you can start using Credit Spread Genius right away. This training course reveals step-by-step exactly how the Credit Spread Genius system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, targets and risk management. Now, because every step is laid out for you, trading the Credit Spread Genius system removes the emotion from your trading, making it easier to get the results that you want. So what that means is, first, you're going to get these Credit Spread Genius trade triggers just popping up right on a simple browser window. And I'm going to make sure you can use it today, right away, with the Accelerator video course. Now, the bottom line is, we know that this can work for you because we're going to make sure you have all the training you need to make it work. Today, you will also get access to the archive of the Credit Spread Genius Bootcamp video course. You're going to get a complete drill down training video on every single aspect of trading the Credit Spread Genius system to even further boost your win rate and how to make all this really simple. Look, even if you have never traded an option before, you will understand a simple approach to spread trading so you can trade with a high probability of success right along with professional traders. The bootcamp is recorded for your convenience or just to review. It covers everything you need to know to truly master the system. The Credit Spread Genius Bootcamp is a $3,750 value. So what that means is, first, you're going to get the Genius trade triggers popping up on a browser. You're going to get up and running right away with the accelerator video course. And then you're going to get to drill down and really empower yourself and have a mastery of doing this with the bootcamp video. This is a $7,750 package. Now, this is the MTM spreadsheet trade tracker. This is my personal spreadsheet for monitoring all my trades. I put it into a template that now you can use too. Its formulas are designed to easily calculate all the trade criteria that you need to analyze, trade, and manage your credit spreads, as well as other MTM proprietary trade setups. I have made it so simple to track your trades in this sheet. It is like cheating. Now, this is a $500 value, and it's yours today as part of your Credit Spread Genius Traders package. This amazing value is not just because of the months of work that I put into it based on my 30 years experience. Not only that, but if you can manage your trades more effectively and make a couple extra hundred on your winners, lose a couple hundred less on your losers, and increase your win rate, this simple framework has the power to massively increase your bottom line. So what that means is, today you're going to get the Credit Spread Genius trade triggers. You're going to get the accelerator video course. You're going to have this mastered with the bootcamp video. And we're going to make sure you don't miss a single step in the process, because you're going to just go right through the checklist that is that spreadsheet. This bonus is designed to further keep you learning, keep you informed, and to keep you accountable. We call it Office Hours with Dan. The third Wednesday of every month, you'll join me online to check in, hear about the latest happenings in the market, what we're working on, and to get your questions answered on specific trades that you have on or are considering, or even questions about the Greeks, option pricing, the impact of macro events. Anything that keeps you moving forward towards your goals as a trader. So this means you're going to get the trade triggers. You're going to get the accelerator video course. You're going to get the boot camp. You're going to get the spreadsheet trade tracker, and you're going to be held accountable and get all your questions answered when you attend office hours once a month. The Credit Spread Genius, it works on all platforms. Open a simple browser window to deliver your trade triggers real time. There's no special software. You trade on your platform of choice. But do you know what the best part of this is? It's what I call the working leverage. And here's what I mean by that. Typically, more leverage means more risk. In this case, less work means more return. You're leveraging your time. So look, I spent probably a year on this. I've done 50% of your work for you. And the institutional traders, they do 48% of the rest of the work. You do just 2% of the work, and you get to keep 100% of the profits that you earn. By now, you can see why the Credit Spread Genius trading system is a steal, even at $8,850. If all this did for you was identify high probability trades, to take your trading from where it is now to boosting your win rate so that you can be consistent and not have the huge swings that all too many traders experience. Wouldn't it be worth it just for that? But today, this is not $8,850. Because you have made the investment of being here on this live training that Jeff put together, and for being one of my action takers, you are the elite. You deserve to be rewarded. Look, man, you're better than millions of other traders out there, and I want you to have the results that you deserve. Get started today for a small, easy investment of only $597, but you have to take massive action by going to markettaker.com/CSG right now. 1, 2, 3, go. That's market as in stock market, taker as in take what is rightfully yours. markettaker.com/CSG for Credit Spread Genius. Now, look, a lot of times I say this is limited to the first 20 people or something like that. In fact, my marketing guy says I should limit this to 20 people, but you know what? I don't think that's necessary. You're smart. I'm not going to do that. I want as many people to have this as possible. So why would I give such a huge discount? Well, look, admittedly, it's for a selfish reason. Every year, we strive to create 1,000 trader success stories. And in order for us to do that, I'm looking for the people who see a great deal and take action on it, because you're the ones that can become one of our great trader success stories. And when you do, you'll tell your friends, and we can grow Market Taker into the greatest, most powerful option trading education company there is. Now, I was not kidding. These trades come directly from the Chicago Board Options Exchange. In fact, as soon as you go to markettaker.com/CSG, you're first going to be taken to the CBOE subscriber agreement from the exchange. Again, that's because of the deal that I worked out with the exchange so that I pay for the data, and because you're a non-professional, only through me can you get this data. So they require everyone to complete this form first. This should be what you're seeing right now. If you are not seeing this screen right now, please go to markettaker.com/CSG right now. And when you fill out this form from the SIBO, use the same email you use on this form on the next form, on the sign-up form that comes after that. All right? That'll keep any problems from happening. Now, as a reminder, today, when you go to markettaker.com/CSG, first you're going to get the Credit Spread Genius trade triggers popping right up on a browser window. Super easy to use. Then you're also going to get the Credit Spread Genius Accelerator video course so that you can just get up and running right away. You can start using this right now. Then you're going to drill down and watch the Credit Spread Genius Bootcamp video, because I want you to have this mastered. I want you to be a great trader. I want to empower you. And I want to make it easy for you. So I'm going to give you the spreadsheet. So you basically just have a checklist. You fill in all the data, make sure you're not missing a single step, and it's going to be super easy. And then when you have questions, you're going to come to office hours once a month, ask them, and you're going to grow and grow and grow as a trader. Now, there's one bonus that's not on those slides, and that is access to the MTM community chat room. In order for you to succeed, I need to put you in a community of traders who are going through the same struggles as you. And some that have already gone through those struggles and made it through and are now massively successful. So as long as you are enrolled in Credit Spread Genius, you are going to keep complimentary access to the MTM community chat room. This is normally a $297 value. Just go right now or click the link. I think Jeff might have posted a link in the chat box or questions box. Click that or go to markettaker.com/CSG and get started right now. Now, one question that I get a lot is people say, hey, Dan, look, this is great. I've got a small account. I can see this is a way to grow this into a bigger account, but I don't have $597 right now. Is there a way to finance this so I can get started right now? And that answer is yes. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit. So you can lock in Credit Spread Genius today when you check out using PayPal and choose PayPal credit. How do you get there? Just go to markettaker.com/CSG, click the PayPal button, and let's get started right now. Now, before we go on, do you mind if I over-deliver a little bit? Would that be okay? I want to make this great for you. Well, when you go to markettaker.com/CSG and join right now, every single person who just joined, and I'm going to welcome you in a second, every single person who just joined, you are going to get a strategy session from our trader success team. So this is a 30-minute one-on-one phone call. They're going to literally call you on your phone, and you're going to have a talk with a member of our trader success team to talk about your trading, to see what areas are working for you and what's holding you back so that you can overcome what's holding you back. Together, you will develop a plan to get your trading to that next level. Now, look, on our website, this is a $500 value. But today, you're going to get that when you join Credit Spread Genius. So, with the trade triggers, the accelerator video course, the boot camp, the spreadsheet trade tracker, office hours with Dan, the MTM community chat room, and the extra bonus, the strategy call with our trader success team, this is a total value of $9,647. That's over 97% off the total value of this package. Now, I've got some time for questions. If you have a question about this, pop it in the chat or in the questions box right now. The first thing I want to do is I want to welcome some of our new Genius members. Welcome and congratulations to Megan from Evansville, Indiana. Welcome, congratulations, Megan. Welcome and congratulations to Blake from San Mateo, California. Welcome and congratulations, Blake. Welcome and congratulations to Malad from New York, New York. Welcome and congratulations to Jennifer from Charleston, South Carolina. Welcome and congratulations to Jerry from Austin, Texas. And welcome and congratulations to Eric from, and Eric joined us with PayPal, so I don't have Eric's city and state, but that's okay. All right. Now, before I answer your direct questions, I want to answer a couple of frequently asked questions. So first of all, what if I can't install it properly? Well, there's nothing to install. If you are watching this presentation right now, it's easier to do than how you signed up for this. You're literally going to get an email, and all you're going to do is click it and type in the username and password in that email. That's it. That's it. There's nothing to install. That's it. Is this time consuming? No, that's the whole point. I know you're busy. Many traders have a busy schedule. I've designed Credit Spread Genius so you can literally trade this system in just a few minutes per trade. What if I can't figure it out? You can. You're going to get both short videos in the accelerator video course for reference, plus the bootcamp video sharing everything you need to master credit spreads. Plus, you can ask questions in the chat room. You can ask questions in the monthly office hours. What if I have a small account? Well, that's a good question. Well, what do you want to do with that small account? You want to keep it a small account? No, you want to grow it into a bigger account. Consistency is the most important criterion for doing so. So I'm going to leave this up. I'm going to answer some questions that you have. Kathleen says, what are your thoughts on butterflies compared to credit spreads? Great question. Well, I mean, butterflies are, if you think about it, two credit spreads, right? Technically, a straight butterfly is a credit spread and a debit spread, but a debit spread is synthetically a credit spread. An iron butterfly is two credit spreads. So you're in the same ballpark. They're just a little bit different because butterflies can lose if it goes up or down too much, where credit spreads, you have that extra bias, and you can use some of the things we teach in the class to improve your odds of success on that bias. Next question. How big of an account do you need to have, and what's the cost of an individual trade? So this is great for people with small accounts so that you can just start growing it and exponentially grow it. I would recommend having an account with at least $2,000 in it, but I have had people start with much, much smaller accounts. A typical trade, I mean, some of the trades, I want to say that Citigroup trade, you could have traded a one lot for $79. So, I mean, if you had a $500 account, this would work. But I like people to be well enough capitalized so that, so that you can put on several of these if they make sense, put on the ones that are stronger candidates, bigger, and just to have that extra cushion. Another question by Tom. Do I have to install software? Nope, not at all. There is nothing to install at all. You're literally going to click a button. It's going to pop up a window on Chrome or Safari or whatever, and type in your password, and you're there. It's easier to get into than it was to get into this webinar. Kathleen, you are welcome. Robert says, do you learn to adjust trades that are going bad? Yeah, we cover that in the boot camp. That's important stuff. That's very important stuff. Every single thing, Robert, that you need is covered either in the accelerator video or in the boot camp. Will this work with my trading platform? Yes. This literally works with any trading platform. Like I said, it's just a browser window. These pop up live, real time to the exact millisecond. And then you go to your platform, do your final analysis. You go to MetaStock, look at the chart, see the support and resistance and the other things you need, and execute your trade on your platform. How many trades come through a day? Great question. So a slow day, you might see like 4 of these. A busier day, you might see like 15 of these. I don't put the trades out. It's when a professional trader somewhere in the world is trading one of these really, really big trades. That's when they pop up. Like, this is literally a window where we're scraping these trades off the web because they're coming directly from the SIBO. And then if there's 10 trades today, you're not going to trade 10 trades. That's what the accelerator video and the boot camp video is. It's for you to screen those so that you're only taking the best of the best. This is what a lot of traders call cherry picking. You're just, boop, oh, this one's a great one. This one's good, but oh, boop, this one's really great. I'm just going to cherry pick the best of the best. Somebody said, should I follow every single trade? Well, I just covered that. No. Can I access it from my mobile device? Absolutely. You can pull it up on your cell phone, on your tablet, on your laptop, whatever. It doesn't matter. What if I miss a trade? That's what's really great about this system. Those alert systems where it's like, oh, buy these calls because I think the stock's going up. I mean, first of all, those don't work. Second of all, those are very immediate trades, because if a whole bunch of people follow that and buy it, it drives the price of the stock up, thus the price of the calls up, and the trade's no good anymore. These are time trades. They're not time sensitive. You make money from time passing. So if you don't get in now, you don't see the trade for an hour, 2 hours, 3 hours. Sometimes I'll be doing trainings like this or doing one-on-one coaching. I might not see the trade for a couple hours. I still follow them if they meet my criteria in the that you'll learn about in the accelerator course and you'll see in the spreadsheet. Kathleen, thank you. Thank you. I put my heart and soul into this training and into creating this for you. I think I probably have time for about one more question. How long will it take me to learn the system? By the time you finish the accelerator videos, and I want to say there's only like 3 of them, and they're each about maybe on average 8 minutes long. When you get through those videos, you're going to be 95% of the way there. You want to really master it, and you want me to help empower you, watch the Credit Spread Genius boot camp as well, that's like a half-day class, about 3 hours long. But just break it up into bite-sized pieces and go through it. But how long will it take you to learn the system? About 20 minutes. I made it super simple, so simple that anybody, even if you've never traded an option before, you'll be able to do it. One more. I think I got time for one more question. I'll be quick. If it doesn't work for me, how do I cancel? Am I locked into a long-term contract? No. So this is $597 for the first quarter. Now you would think, oh, it's a trial. So then after that, if I'm making money, say I made $5,000 this quarter, well, then I'll renew. I'll pay the $3,000 and it's still good. I don't believe in that for me or you. So only with this deal, if you join today, after the first quarter, we're going to send you an email 3 days before the quarter ends and say, hey, do you like this? Do you want to stay? And if you do, if you're making money, you get to keep this price, $597 a quarter for the next quarter after that, as long as you choose to stay enrolled. There's no long-term contracts, cancel anytime. But when you join today, you get rewarded and you get to keep this for life or for as long as you want. And now, whoo, that was great. Welcome to all our new Genius Traders. I'm going to turn it back over to Jeff and to the next speakers that we have today.
Thanks, Dan. I'm going to find the mute button. All right. Thanks a lot. Really appreciate your being in here. Thanks for coming in.
All right. See you. Thank you for very much for having me.
All right. Very cool. Let me go ahead and do this.
For you here on YouTube, it looks like the last presenter accidentally closed out of the entire webinar, so it's going to take Jeff a minute to get that back up. So when we get back up, we'll let you know. Stay tuned, please. Talk again once, please, when I get this out of this. Okay, it looks like we got Jeff back, so here we go. Jeff, are you muted? Jeff, your mic's not on.
And that as well at $997. That'll include an accelerated video course, 12 months of monthly coaching, the red green knockout watch list, and a free trial of MetaStock if you need it. So if you want to find out a little bit more information about that, you can go to metastock.com/RGKO or go to metastock.com/saleschat. I'm going to see if we can get a message out to everybody that's registered that the room is still running. Thank you for coming back. It's good to see you. Greg, how are we doing in the control room?
So looks like we're all back 100%. You're here, okay, and about several dozen other people logged back in, and I've tried to tell people on YouTube that we had a brief break, but I think we're all good to go, and apologies for the delay.
Yeah. Yep. I tried. Okay. Without further ado, though, let's go ahead and we'll thank AAII for sponsoring the event today. We very, very much appreciate the work that you do, that they've done with us to help us sponsor the event. AAII.com. Thank you very much. We're, of course, MetaStock. You can get an extended trial. If you buy a month, you can get the second and third month for free. Go to metastock.com/conf-promo, metastock.com/saleschat, or give us a call at 800-882-3040. So without further ado, let me go ahead and make you the organizer so you can see the questions, Jody. Our next presenter is Jody Samuels. Oh.
Hi, can you hear me?
Yeah, we can hear you. Thanks for joining us today. It's good to see you.
Good to see
Jody
you.
Samuels is going to talk. You're going to talk about simple tools, timing tools for big profitable moves. So thank you for joining us. And apologies for shutting down the room. I'm glad you made it back in.
Yes, me too.
Here, I'm going to make the presenter.
I'll share my screen now.
Mm-hmm. There we go. It should have popped up a note to say share your screen.
Okay.
And I'll make sure that we can see it.
Let me know.
Yes, I can see it. It looks great.
Perfect.
All right.
Okay.
It's your turn.
Go ahead.
I'll get out of your way.
Okay. Hi, everybody. Glad you could come back in. Today, my name is Jody Samuels. As Jeff mentioned, thank you for inviting me here today, Jeffrey, at this wonderful MetaStock conference. And today I'm going to be talking about simple timing tools to find the trend, trading the market cycles. So my background is as an institutional trader on Wall Street. I worked for JP Morgan, trading currencies for 14 years, a little more than 14 years. Now I trade stocks and options, futures, and a bit of Forex. I've sort of shifted. So today I want to talk to you about, first, here's the disclaimer. Please read this to yourself. It's very, very important to understand that you can lose money trading. And if you cannot afford to lose money, you shouldn't trade. And this presentation is for educational purposes only. So today, what are we going to talk about? How to locate and trade the end of trend trades using a simple tool, using the market map to determine where we are in the market cycle. Now, the market map is something that I use and that I learned during my JP Morgan days. It's really to map out the market cycles to see where we are. And I'm going to do a lot of education today. So I'm going to teach you about the market map and really show you how you can get an edge from understanding the market cycles and how to get in near the top when others are buying and getting in when others are selling. And we're going to start out by looking at the indices and the spider sector ETFs in the market cycle. And then we're going to show you how we've taken our strategies and we've created an elite scanner tool and indicator suite to actually find the best trades, the best setups. And then I'm going to give you some special pricing for our elite scanner tool and indicator suite, which is on many platforms, not on MetaStock, unfortunately. Okay, so this is my book, The Trader's Pendulum. So The Trader's Pendulum Trader New. It's not a new book. This was published at the end of 2015. But what I wanted to share from the book is that there are 3 types of pendulums that I describe in the book: the market pendulum, the emotional pendulum, and the financial pendulum. The market pendulum is what we're going to talk about today, which is the market swings. So the market moves up, the market corrects, the market moves down, the market corrects. That's the market pendulum. And we're going to look at the market map to illustrate that for you. The emotional pendulum is about the emotions that we feel when we take our trades. And I like to look at the emotional pendulum on the like with fear on one side and greed on the other side. If you think of a teeter-totter, and the fulcrum is in the middle, and that's where we want to be. We want to get back to equilibrium. We don't want to be at one extreme or the other, because that can throw us off our game, our trading business. The financial pendulum, don't be mistaken. You can lose money, you can make money. Trading is not a one-way street. The important thing is to extend your profits and limit your losses and use risk management. So these are the 3 types of pendulums. What process do I follow to find trades, to have the confidence to pull the trigger and manage my trades with clarity? So this is just a 3-step process in my system. The first is the market map, which is the analysis. I'm going to discuss that. We're going to show you that in just a minute. And my strategy is called the Wavy Tunnel Pro tool. It's an Elliott Wave based tool. I'll show you that as well. I'll illustrate that, and you'll be able to put it on your charts right away. And then optimal risk reward. This is probably the most important thing, and trade management, because without trade management and first determining your risk reward profile and figuring out the size of your positions, and it's very possible that you won't be profitable. So this is the market map. When we start out with a trend move, this is the basic 5 waves up and 3 waves down. When we start out moving higher, when we get up to where it says greed, optimism, and exuberance, this is where traders tend to load up. And this is the time not to be loading up. This is the time to stick with your positions until you see a definitive turnaround point, so that you don't miss the end of the trend, but you don't start loading up at this point at point T. That's where greed kicks in, and that's what the emotional pendulum is all about. And then the market sells off in an ABC 3-wave fashion, and this is where the market tends to be market participants tend to be fearful, they're panicked and discouraged, they tend to bail. So I'm going to show you where we were in this market cycle in the indices. We're going to look at the SPY as an example, and I'm going to show you something very, very interesting. And then we're going to look at all of the sectors and see where we are in this market cycle. Warren Buffett said, be fearful when others are greedy, be greedy when others are fearful. That's the contrarian view. So up here, again, we want to sort of swap this and put fear up here and put greed down here. We need to train our brain to do that. We definitely need to train our brain to be fearful up here and greedy down here. Not too fearful, because the market can still continue to move up before we have the major correction. And that's sort of where we are today, but I'm going to show you that. So the idea is you can scale out up here, you can take profits up here, or you can sell if you have the indication that you can sell. You have the confirmation. And down here, you want to be priming yourself, training your brain, priming your brain to be greedy, to be buying down here. On the right, you see the wavy tunnel setup. These are moving averages. I'll tell you what they are so you can put them on your charts. This is the 12 EMA, the green line. That's the shorter term moving average. And then these purple lines, these are the 34 EMAs on the high, low, and close. And then this is the 144 and 169. It's called the tunnel. And this is the basic wavy tunnel setup. Down here, you have the awesome oscillator. So take note of that, and take note of how the picture represents what we have on the left-hand side. When the wave separates from the tunnel, we're in a strong uptrend. And as soon as the market starts to pull back and starts to go below this wave and starts to continue down into the tunnel, this is a time we want to be considering buying. And up here is when we want to consider exiting. So you can literally put this on your charts to give you some kind of roadmap, market map, we call it the market map, for your trading and for your analysis. So this is something really, really interesting. This looks like the market map, what I just showed you, right? If you can see that it's similar to this diagram, please type a Y in the chat so I know you're paying attention. Okay, type a Y in the chat, and that would be really important for me to see that you're listening and that you're understanding what I'm saying. And if not, you can ask questions. So let me see, do I see any Ys here? Okay. Yes, there are some. Good, you're paying attention. So this is the weekly chart of the SPY. And up here is point T, where we have this purple arrow. This is our indicator suite that we have, and it's really very handy. So the purple arrow indicates the end of the move in this example. And then the market comes down in a corrective fashion, and this is where it ends. And we get the gray arrow there. And this is called finding the end of C in the purple box. This is where we are right over here. Now, this bottom occurred in October of 2022. So our scanner at the time showed so many different stocks that were just lining up for buys. Like I couldn't take all of the positions. Like there were hundreds, literally. So many stocks fell into this category, came off the major uptrend and corrected to a major buying point. Now, we are not at this point in the market cycle anymore. It's gone. This happened in October of 2022. Now we're up here. So do you see this pattern? We're not there, which means we have to go down the time frames. Then the market started to move up, and then we had this other major correction. So I'm going to show you this on the daily chart momentarily. But the way we label this correction is a WXYXC. It's just a complex correction. Call it ABC. There are two ABCs linked here. That's why it's called WXY. So now let's go to the daily, and we're going to pick on this portion here. Same pattern. Why? Because the patterns repeat themselves over and over again in any time frame. So now in October of 2023, we see the same exact pattern. So on my daily scan, we had a lot of buy signals coming up for this buy. Well, what do you think? Are we at this point now? Again, absolutely not. We're up here. So what do we have to do to find this pattern? We need to go down to an even smaller time frame. And I wrote last week hourly. Okay, so I'm going to show you the hourly, but this is how we label this same pattern, WXYXC. So now that we're up here, let's look at the hourly chart. This is the hourly chart. So same pattern, but on a smaller time frame. So what is that telling us? That's telling us that once we find a top, let's just go back up here. Once we find a top and start to move down, then we'll have a correction. But for now, if we are going to find these setups, we have to look at the smaller time frame in order to find them. We will also find them on the daily charts on the laggards. So I'm going to show you that as well by looking at the ETFs. So let's move on. Let's look at the ideal market map, what we just showed you, some ETF and stock examples, understand the setup. So I really want you to understand the setups. This is from sectorspider.com/sector tracker. And this is a handy dandy, very visual way of looking at the 11 sectors of the S&P 500. So there are 11 sectors. Here they are. Here they are. So this is, I took this screenshot when did I take today's 2 days Monday night. Okay, so as of Monday night, the S&P was up 6.69% year to date, and the top performer was communication services, followed by healthcare, believe it or not, and financials, and then technology. The laggards, real estate, utilities, and materials and energy and consumer discretionary. So this is very handy to see which sectors are leading and if there's sector rotation. Now I want to just show you something else. This is what I took a couple of weeks ago to show you how the market has shifted. So if you look at this once a week and you keep track of this, you will see which sectors are performing better on a week-to-week basis. So 2 weeks ago, consumer discretionary was red, and now it's green. 2 weeks ago, energy was red, and now it's green. So these are the laggards. These are the laggards, right? 2 weeks ago, materials was red, and now it's green. Real estate, it hasn't turned green yet, okay? And neither has utilities. So these are the laggards. So I just keep that in mind. Now, what you can also do with this website, and I just took this about an hour ago, I guess, is this is the performance for the day, and this changes during the day. So as of an hour ago, the S&P was down 0.23%. Now, if I look at it, if I just refresh my other screen, it's down 0.1%. So it just changed. It updates all day long, and this is how the sectors are performing today. Real estate had a good day today, so it's making up. It has a lot of ground to make up. So that's a handy dandy website. Now, what you can also do is you can click on communication services and you can sort by the index weight. So that's what I did from the highest weight to the lowest weight. And what I also did was I set up watch lists for the sectors. So I was able to set up watch lists for all the stocks within the sectors so I can see which sectors are performing well. This is when I do, when I spend some time on the markets on the weekend, before the week. So now let's look at the XLC on the weekly on the left and on the daily on the right to see what's going on with all the sectors. And I'm also going to show you the top stock in the sector. Top meaning the highest weight, the biggest weighted stock. So on the left, we have communication services, XLC. And if I go back, let me just go back to my sector tracker. XLC is, let me just do year to date. Okay, as of right now, XLC is up 9% for the year. Okay, as of right now. And the year started right here. Okay, this is where the year started. So this has to be moved over here. So what is this telling you? This is telling you that the market, this is bullish. This is definitely bullish on the weekly. And now we are trading sideways a bit. And we can see it more clearly on the daily. We have some consolidation sideways. So what this means is, what I like to do is I like to be buying on pullbacks to the wave. Now, sometimes you don't get that. Sometimes you just, if it's very, very steep, you only get pullbacks to the filter, which is this green line. But if we get a pullback to the wave, then this might be a really nice time to buy. Okay, if we take out these highs, then we are going to accelerate higher. So this, you could literally draw a box around this daily chart to see where we're going to go. Right now we're trading within the box. If we trade above the highs, we're going to go higher. If we trade below, we will see the correction down to the wave. And this is a really, really nice way of containing price. This wave, it contains price. It's only when we have a significant correction and we go below the wave, that we have our major pullback into the tunnel. Okay, I can't predict that. I can't tell you that it's going to happen. I go step by step. My first pullback will be into the wave if we take up these price lows. Now let's look at Meta, since that's the biggest holding in communication services. Meta, same thing happening. Okay, earnings came out. Meta accelerated higher. It's been bullish. Look at this weekly chart. It's been bullish for a long time. This was the low. Oh, this is the weekly on the left, and then the daily on the right. Yeah. So this was the low back in 2022, when all of the when many of the stocks turned around and started to move higher. So same story for Meta. If we take up the highs, we will accelerate higher. Otherwise, we'll stay within the range. And if we go below these lows, then it's possible that we come down into the wave. But I'm not predicting. Now, XLK technology. So this is currently up. We're not going to go through all of these. We're just going to go through a few, depending on how much time we have. 6.85% as of right now, year to date. So I took this Monday night. It's up a little bit from 6.66%. Microsoft has the biggest weight at 22.91%. And this also tells you the percent change for the year to date. So this is year to date. So percent change for the year. And you can see that NVIDIA is the biggest percent change since the beginning of the year, up 59%. But we're going to have a look at Microsoft because right now it's the biggest index weight. So XLK technology on the left, you can see where we are in the market cycle. We're bullish. And on the daily, same story. Look at this. A couple weeks ago, or last week, I was giving a presentation and the price did come into the wave, and I said this could be a nice level to buy. We're in the wave. Low risk trade, meaning we don't get nervous until we go below the wave. And sure enough, what happened? It popped up. That was a good level to buy. Okay. We don't want to chase it. Markets tend to correct, and not always, but they tend to correct. And it's when they correct that you want to be adding on to your positions or taking a position. Here would be a nice options trade if you looked at some of the stocks within this, for example, or just buying the shares. Now, hang on a second. Did I miss? Okay. I skipped one. Okay, so this is, hold on, I missed this one. Okay, technology and Microsoft, they're exactly the same. Now let's move into healthcare. XLV, Eli Lilly has the biggest index weight, up 32% for the year. Healthcare up 8.42%. This is a very big surprise. It started out one of the laggards, but then it just really caught up. So healthcare is doing well right now. And you can see the bullish nature of this. When we had this consolidation on the weekly chart, every time the market came down into the tunnel or slightly below, that was that was a good level, level to think about buying. Now we have extended ourselves. And here on the daily on the right, we're extended. So we have to just be careful. That's what it means. We have to be careful. It's still bullish. But we are extended. And Eli Lilly, same story. We're extended. Still bullish, but we're extended. So what can happen is if we do break down below this filter, the next stop is the wave. So I go from filter to wave, and then I go to tunnel. It's as simple as that. As long as we stay above the filter, we're still bullish. If we go below the filter, we could potentially come down into the wave. If we go below the wave, well, that's when we'll get our trade down into the tunnel. It's as simple as that. And you can follow this as well. XLF Financials up 7.18%. Berkshire Hathaway biggest holding in it, followed by JP Morgan, my alma mater. Very bullish, very bullish. Again, looking at the daily, we want to, I'm checking the time. On the daily, we want to make sure that, yeah, I mean, price is extended. So if we just look back on the daily and we see various corrective levels, corrections, like right over here, this was a nice correction into the wave, a nice level to buy. This was another nice correction into the wave, another level to buy. When we've accelerated and prices stretched beyond the filter and beyond the waves, I get dizzy at fear of heights up here. Like, I would rather be buying on the dips. But of course, if we take out these price highs, then we will move higher. Berkshire Hathaway, well, this was buy on rumor, sell on fact earnings day, and the market took Berkshire Hathaway higher, and then on earnings it came off. And today, I mean, it came off a little bit more, and now it's up. It's probably, I don't know where it is exactly right now, but it's probably around here. So it came back a bit. So this is Berkshire Hathaway. So you see what happens when the market just accelerates. This is a good example. It's got to come back to the averages. It's got to meet the averages again, at least the filter. If there are any questions, I'm not seeing them. Okay, so if you have questions, I'm happy to answer the questions. Let me see. Okay, I don't see any questions. Okay.
No questions yet, Jody. I'll let you know if any come through YouTube. And if you do have any questions, feel free to ask, please. Thanks.
Okay, great. Good, thank you. Okay, XLP Consumer Staples. Biggest holding is Procter & Gamble, up 9.89% for the year. Consumer Staples up 3.82%. So you see, within XLP, you're going to have some leaders and you're going to have some laggards. So even though the index is up 3.82% for the year so far, you have individual stocks that are doing better, which is why it's good to have these on a checklist and just to scroll through them to see which ones you're interested. Like Costco doing very well, Procter & Gamble doing very well, Walmart doing very well. So that's what you want. PepsiCo, not so much. Okay. XLP Consumer Staples weekly chart on the left. Okay, this is a good example of down here where we had our nice buy area on the weekly chart, and then it started to move up. So when we see the gray arrow, this is our buy, and the pattern that I showed you earlier, this is our buy zone. And now we've started to break out above the wave. It's positive. We look at the daily chart. We had a nice pullback into the wave. Yes, I saw this a couple weeks ago. I was giving a presentation also there were lots of presentations this year. And I said this was one of the ETFs where I said, okay, I mean, this could be a nice bottom here. For a move back up again, and sure enough, we started to move up. Now up here, no, not so. We could come down again. I don't know. And let's look at Procter & Gamble. Same idea. Like, the market pulled back into the wave. That's what you need to be looking for in a bullish market. In a bullish market, you need to be looking for pullbacks. These are your best opportunities for buying, and you can express them by buying shares. You can express them by buying options, by doing bull call spreads, or however you want to express your position taking efforts, whether through the options markets or the shares markets. But this is what you want to be looking for, because the wave has your back. It has your back in a bullish market. And now we have the purple arrow. We're a bit stretched again. XLI Industrials up 5.47%. General Electric, biggest index, it all biggest holding, index weighting. Look at some of the performances here, up 20% year to date. Uber Technologies up 27% year to date. Honeywell down 4.33% year to date. Boeing down 23% year to date. Okay, so this is how you can look at how the sectors are performing and then drill down and see how the individual stocks are performing. Caterpillar doing very well as well, up 9.54%. So let's look at XLI Industrials. It's up for the year. And if we look at this, it's been bullish. Look at how the wave has separated from the tunnel and continues to track higher. We had this nice area in here, and this was in November of 2023. So on the daily, we would have had our signal on the daily that I showed you earlier, and then the market tracked higher. Now look at this. On the weekly, it's coming back down into the filter, and then it's moving back up again. So when it's a very strong trend, it's only going to correct to the filter. On the daily chart, when at this juncture, it corrected down into the wave. So this was a really nice area of consolidation where you take the stance where bullish, price is above the wave is above the tunnel. That symbolizes bullish, and I really only like to buy stocks that are presented in this way, where price is above the wave and the wave is above the tunnel. And when it pulls back into the wave, that's your buy zone. So your premise is that the market is bullish, XLI is bullish, and you're merely looking for places to go long. And you can express that through buying the shares or through the options market on the individual stocks, unless you just do the ETFs. So here is another example where price pulled back very quickly, not quite to the wave, okay? But on balance, it's bullish. Now the market is stretched a little bit, and it can continue higher. Just because it's stretched doesn't mean that it can't go up before it comes down, or it can turn around and come back down into the filter first, and then the wave. And then if it's really a significant retracement, it's going to come down to the tunnel. GE, that was the top holdings in this sector. Look at how strong this is. The wave is above the tunnel. Look at it's very, very strong on the weekly basis, very, very strong on the daily daily basis. Candle bodies are kind of small. The market is just chopping away, just buying this. Okay, so again, wait for a pullback. XLE Energy, a laggard. Okay, you don't see the strong gains. Well, you see some down here, but you don't see on balance all the strong gains that we saw in some of the other sectors. Now let's look and see why. Well, this is interesting. On the weekly, the wave has flattened out to the tunnel, so it's kind of flat. Okay, sideways market. We had a bit of a pullback, and on the daily, we had, the wave is below the tunnel on this daily chart. So I'm not interested. This is clearly a laggard. When price started to break above these highs and the wave started to turn upward, towards the tunnel, this is telling me that we could be coming off a bottom and we could be trading higher. Time will tell. We need to take out these price highs. But we could be turning around. The weekly is still bullish. So we could be turning around here. ExxonMobil, on the weekly, this was I think this is, well, maybe it's not. Okay, on the weekly, we had a pullback into the tunnel. So this was a bit of a buy signal, but on the daily, we're still not out of the woods yet. So I would like to see the wave to cross above the tunnel. But we are still we're sideways on the weekly, I should say. We're sideways on the weekly. Consumer discretionary. Amazon is the biggest holding, up 15% this year. Tesla down 22%. So this kind of earlier on pulled this market down. Let's look at the charts. Consumer discretionary. The wave is just, see, it's not as clean as some of the other indices that we looked at, ETFs that we looked at, where we saw that the wave was cleanly above the tunnel. It is above the tunnel here, so price is starting to come back, and we are above the tunnel on the daily as well. So price is looking much, much better after we had this correction down into the wave, and then we moved up and we came back down. This is looking much, much better. So this could be one that catches up. Looking at Tesla, okay, well, this was, I guess I wanted to show Tesla. I thought I was going to show Amazon, but I guess I showed Tesla to show you how this might have pulled down the ETF. So Tesla had a very strong correction here, and a very big correction on the daily as well. And now we're coming back. But it has a ways to go. The wave needs to turn around and start to trade above the tunnel.
Hi, Jody.
But we may have found a bottom. Yeah.
I promised to break in if we had some questions, and we have a couple of good ones from the audience.
Okay.
Hopefully it's a good time to break in.
Yeah, sure.
David, these are kind of related, so I'm going to read them both to you and kind of let you kind of answer them. David wants to know, what are the parameters for the wave? And Rick was wondering if you could provide maybe a better definition of the wave versus the filter parameters so he can understand it better.
Sure. So the filter is the 12 exponential moving average. It's the shortest moving average in the setup. So the 12 EMA. The wave is the 34 EMA on the high, on the close, and on the low. That's what the 34 EMA. So if you look at this as the short-term moving average as the 12 EMA, and the long-term moving average as the tunnel, and the medium term as the wave, that's how you can look at it. So many stock traders use the 200 moving average, the 200 and the 50 and the 20. I use Fibonacci moving averages because I come from an Elliott Wave background. We hired an Elliott Wave trader off the floor of the Chicago Board of Trade to join our team when I worked at JP Morgan. And now he is one of the, he has his own business, and he deals with all of the hedge funds and major corporate clients that we had at JP Morgan. So he's on his own now doing his Elliott Wave analysis. So that's why, I mean, I learned Elliott Wave from him while I was at the bank, and I've continued with it. And Fibonacci plays such a big part of it that I use Fibonacci averages and not the standard 20, 50, and 200, although you can use those as well. But I just like the way this works better. So I hope that answers those questions.
I thought it was good. Thank you.
Thank you. Okay, I think I want to move ahead now because we lost a little bit of time. Okay, XLB material. Let me just go quickly through these. XLB material. So again, bullish, but price is stretched, right? I'm looking at the daily. LIN, again, bullish, price is stretched. I'm looking at the daily. Bullish because the wave is above the tunnel and price is above the wave. Utilities, this is a laggard. So let's see why this is a laggard. Well, look, on the weekly, you can see the wave is below the tunnel. On the daily, the wave is below the tunnel. That's a laggard. It's not a strong bullish market. Now, could it move up? Absolutely, it could move up. But is it going to be a very, very strong, like if I had to choose between picking a stock in this sector or picking a stock in one of the better performing sectors, and I had a limited amount of capital, I don't think I would choose this sector. And I'm going to show you an example of what our scanner picked out in the sector, and you'll understand why it picked it up on the scanner. This is why, because this is lagging the other outperforming sectors. And this is NEE. You know, look, the wave is below the tunnel. Price is bearish, like it's bearish. Okay, real estate is the worst performing sector here. Look at the weekly chart. The wave is below the tunnel. The wave is below the tunnel. Okay, we've had a significant sell-off on the daily right here, but the wave is above the tunnel. So it could be that it could be that real estate will do better. It could be. We'll have to see. We have a lot of a lot of wood to chop. Like we have to take out these price highs, and then we have this resistance all the way up to the previous high. And the pattern looks very similar on PLD. Okay, looks very similar. So I'm going to show you some examples on the Elite Scanner Tool and Indicator Suite. And I'm going to show you some interesting things, hopefully. First, we're going to start with TradeStation. And these are the setups that we can find on our scanner. So there are 6 wavy tunnel setups. The PWFG is the price to wave fill the gap. So that would be the move down, price to the wave, and then filling the gap to the tunnel. That's our correction setup. Okay. Breakout 1, breakout 3. Breakout 3 is a trade when we are in bullish mode and price comes down to the wave and you want to buy all pullbacks. All pullbacks are buyable. The breakout 4 trade is the trade that we're focusing on today, talking about the end of the wave C. So after we have this move down, this is the breakout 4 trade. Plus we have automatic trendline breaks. It's difficult to watch all the pairs, all the markets, unless you can get alerted when there is a setup, and then you can go to the chart and take the trade if it meets your risk criteria. Now, so let's scan for the breakout 4 trades with the trendline break. We're going to do that. And we're not going to get a whole lot of breakout 4 trades on the daily and the weekly time frames like I discussed earlier. We're going to get a lot of them on the smaller time frames, on the hourly charts on down. Okay, so we have that's what we'll get. So we're going to scan for the breakout 4 trade, looking for the gray arrow, and there's more that goes into it, of course. And we're going to scan for automatic trendline breaks, and we're going to confirm the entry with a 1, 2, 3 reversal and the candlestick patterns. So this is the TradeStation, and I'm going to show you the top 2 trades, Exelon and Chevron. This is the weekly scanner, and down here we have the ready column and the signal column. So when we get low numbers in the ready column, that means that the trade is ready, and the signal is, I'll show you the difference when we look at a chart. If we look at the P&L column, all the numbers in the parentheses show how many profit targets were hit, and we have 3. So if you go down here for all of these long trades that set up all at once, this is the weekly chart, so this would have been in October of 2022, like I told you about, most of them hit all 3 targets. Okay, if you have a 3, it means that all 3 profit targets were hit. Means they were all good trades. So let's focus on Exelon and Chevron. Notice these are laggards, utilities and energy. So I'm not surprised that we're getting buy signals on the laggards. That's what I was trying to explain to you earlier. This is the trendline breakout system as well. So on these 2, CVX and EXC, we also had some significant trendline breaks. Okay, significant trendline breaks. And this is how it presents on TradeStation. EXC, the weekly is on the left, So notice how the wave separates from the tunnel. We get the purple dot, and then we get the gray dot or the gray arrow, depending on the trading platform. This is the setup right over here. And this is what it looks like on the daily. Again, a laggard, but this is what popped up. And of course, I mean, it's doing well. It's okay. It was a good trade, but I would be a little bit hesitant about this because it is a laggard. It's okay to take the trade as long as you get out of the trade once you're in profit. This is the 60-minute, and this is the daily right over here. Okay. Here's CVX. Here's the weekly on the left. So this was the trigger. The green arrow just it's automatically drawn, and these are the profit targets. And when it shows up on the scanner. And then this is the daily. So this would have been the area to buy it. And you can also see that we have trend. These are the trend line breaks. So we have trend line breaks kicking in as well, automatically drawn on the charts. Okay, CVX, but also a lagger. Now let's look at NinjaTrader. On NinjaTrader, you can get the same thing, the ready and the signal. Oh, by the way, the signal is what the ready is when the gray arrow or the gray dot appears. The signal is when price goes above the gray, the 12 EMA. It's like a confirmation. I want to show you Starbucks. We had a 7 and a 3. This was from a while back. So this was a sell signal. Now, I don't normally take sell signals. I like looking for the buys, but sometimes, like I know that a correction is coming when I see all of the sells lining up on the daily charts. Now, I'm not seeing that right now, but there have been times when, yeah, I saw daily sell signals showing up on a lot of the charts. So this was Starbucks, and these are the 3 profit targets that are automatically drawn. And I took this screenshot earlier today just to show you what happened. It actually hit all 3 targets, and it actually came down more, and now it's sort of consolidating sideways. Okay, so that came out of the scanner. So if you're long Starbucks, you want to pay close attention and get out. So you can on NinjaTrader, these are stocks, and these are all the trend line breaks, and you can set up the market analyzer as you want it. I have the dailies 4 trend line breaks, and the 4-hour 4 trend line breaks, and the hourly 4 trend line breaks. You can set up the breakout 4 with the trend line breaks, and we also have we also have alerts for the purple dots or the purple arrows and the gray dots and the gray arrows, which I'm not showing you today. This is the futures, okay? And I want to show, this is gold. So gold stood out for me on the daily. And this is the setup for gold. I mean, this could be very interesting. Is this the bottom for gold? I mean, I know that at some point gold will move higher above 2100. I don't know when, but we got this trigger in gold. This is the daily chart. So we got about 2 weeks ago, we got this trigger to buy gold, okay, below, at the 2000 level. I like gold, I don't know, but this was the trigger. So will it continue higher? Well, let's see. And we also had trend line breaks. Day trading time frames. I know some of you are probably day trading. If anybody is day trading, this might be good for you. So a couple of my students found these trades on February 5th, and I'm going to show you what I found today as well. On February 5th, I was talking to them, some young guys. Shout out to you if you're here. I don't think they are. So at 10:50 a.m., on the QQQ, this setup showed up. Now, do you recognize this pattern where we have the purple arrow and the gray arrow? Do you recognize it? I hope you do. And then the market went up. This was on the QQQ. Okay. This was on the SPY, on the 5-minute SPY. Okay, this is for day trading. And this was another setup that we have. It's called the purple gray gray. And this was noted on the NQ on the 1-minute chart by one of my students who and they're trading on their demo accounts. So they took these trades on their demos. currently, and this was on the 15-minute chart. Okay, beautiful setup. This was, you recognize this pattern, purple arrow, gray arrow, beautiful setup. And today, I noticed this morning when I opened up my market analyzer, I noticed that we got the 1 hour ready and the 1 hour signal. I opened it up earlier, but I didn't take the screenshot. This hadn't registered yet, and these numbers were lower, like ones, and these were ones, so it was just setting up. So I looked at it before the market opened, and I just took this screenshot a couple of hours ago. But let's look to see what I was seeing. So we had the hourly setup on the NQ. I said, oh, this is very interesting. And then I went down to the smaller time frame to the right, and that would have been right here. And this happened at the market open that we got these signals. Well, this is really nice because this was the low of the day, and then the market moved up 100 points, and then of course came down, but still it's for day trading. Okay, and this is the ES. On the ES, this showed up at between 4 and 5 o'clock in the morning. So when we came in, or when I looked at it, this had already hit. Okay, this breakout 4 trade was already there, established. But look, so the market moves up, and at the market open, we had a couple of opportunities to buy again. Okay, for day trading. And then this is the YM. Okay, this happened at the market open, and look what happened from there. The market moved up and gave your nice profits. So that was Ninja Trader. Motive Wave is another wonderful trading platform where we have our scanners, and I'm looking at the right side, the breakout 4 signal, and I'll just show you a few that came up. This was a sell. Okay, BIP. This is a sell on the daily. So we have the purple and the gray. This is a buy. Okay, ANTM, purple and a gray. Purple, gray. So these are the setups. This is on the 4-hour docu. Okay, and this, I looked at it earlier. It's, I don't know, it's still here, maybe a little bit higher. FDX. Purple, gray. So this is just a great scanner. Then of course you have to do your analysis and do a top-down approach. Just look at the bigger time frame. I like to look at the weekly, the daily, and the 4-hour. I just like to see how they, like we did earlier, looking at the weekly and the daily. So this is a great little scanner on Motive Wave. And then finally on MT4, for those of you who trade Forex, I didn't have time to do that today. This is from a week or two ago. And here we have lots of different trades that you can find on the scanner. The breakout 4 is, and the trend line breaks is what we've discussed so far. So these were trades that I took that day when I found them. I took them on a demo account because I was doing a presentation the next day, and I wanted to show, like I said, I'm not trading Forex so much these days. So I went into my Forex trading platform on demo. I saw the setups. I took the trades on demo just to be fair, and just from the setups, the breakout 4 setups, and that would be right here for the buy. Okay, we got the gray arrow, and then this is where I sold it out. I took the profits. And so the trade was taken around 5 o'clock, a little before 5 o'clock, and then exited the following day or overnight, because I left orders overnight. But this is another example. Purple, gray arrow, took the trade, left. I left this target over here. When I opened up my trading platform the next day, I just exited it. It didn't quite hit the target. And then here is the third trade on the Euro New Zealand. Again, I'm interested in teaching you these setups. so that you can see how this works. So this was also profited out. And you can get on MT4, you can get the indices, you can get the commodities wherever you are in the world. Like that depends on what you can see, what instruments you can see on your MT4 platform. So I like to look at three different setups. Oh, we have to get going. Let me show you the special pricing for the tools and indicator suites. The indicator suite and scanners are on MT4, so great if you're a Forex trader. This is the one you want to get. TradeStation, MotiveWave, and NinjaTrader. And then we just have the indicator suite on Wealth Charts. We do not have the scanner on Wealth Charts. We give you complete education to understand how the markets trade in cycles, and it works with all markets. If you can chart it, you can scan it. It works for day swing and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro. And this is the link, wavytunnelpro.com/elite. That's the link. Bonuses, you're going to get Elite Tool Scanner training, live training sessions on the key Wavy Tunnel Pro trade plans, dedicated Discord channel, one-on-one coaching session with me, and monthly office hours to discuss setups and answer questions. First month trial is $49. So you want to try it out, Set up a meeting with me. We can go through some examples. I can make sure you're set up correctly. $49 for the first month on MT4 or TradeStation or MotiveWave or NinjaTrader. And then it's $597 for a 6-month subscription. So try it out first and then see how you like it. Okay? And then Wealth Charts is the same, but there's no scanner here. It's $597 for a yearly subscription on Wealth Charts. So that's it. It's a great little package. You get a lot of great education. Even if you, honestly, I'd really love for you to learn how to read the market cycles. Most of our students say that they can just look at the charts and just in a whole different way because they can see the market cycles just jumping out at them. And that's what you get from using the Wavy Tunnel Pro. Now, to see the arrows, that's the Elite tools. So you have to pay for that. To use the moving averages, you can use that. I told you what they were. You can set it up yourself and get started with that if you'd like. wavytunnelpro.com/elite. Are there any questions?
I did want to make a comment. I think we caught the questions. If you have questions for Jody, let me know. Great presentation, Jody. I really appreciate you joining us. One of the things that I want to talk to you about this after seeing it is that I think we should make it available for MetaStock. So
I would love to do that. I know I'm sort of a new presenter, so that's why I didn't show MetaStock charts because I'm new with the MetaStock, but I would love to offer it on your platform. I know your platform going way back.
I have dropped you an email. We can, based on everything you showed, we can totally make it happen. Have one of the best scanners available, and let's talk about it. But next week.
Absolutely.
Okay. I also wanted to thank you for joining right back in. Sorry that the room got shut down. We have a lot of people coming back in, and I wanted to make an announcement that if you missed the first part of Jody's presentation because you got kicked out of GoToWebinar, my apologies. You can go to youtube.com/MetaStock and pick it up exactly from the very beginning. So for anybody that was left, I know that we lost a lot of people. We sent an email to get y'all back in here. A lot of you are rejoining us now. Jody did a great job. I don't want you to miss her presentation. Go watch it on the archives. That's all I have.
Thank you so much. It was really a pleasure. Great being here. Thanks, everybody.
Thanks, Jody. I'll talk to you. I sent you my calendar. Let's talk next week.
Perfect.
All right.
Okay.
Cool.
Bye-bye.
Bye. Let me go ahead and make myself the presenter. I'm going to show my screen. It does look like a lot of you came back. So welcome back. It looks like some of you came to YouTube and some of you went to GoToWebinar. Thank you for coming back. We usually don't run into a lot of audio issues or video issues, but I think that's the second time the room's been shut down in the middle of a big broadcast, and it makes me stressed. I'm not going to lie. So anyway, I do want to thank our sponsor, one of our sponsors, CMT Association, for sponsoring the event, cmtassociation.org. You can also call them at 646-652-3300. CMT is a very well-respected organization. Tyler will usually come on, but he's traveling. But he'll usually come on and he'll talk for an hour, and he does a really good lesson. But then he'll explain the benefits of doing CMT and having a CMT Association designation. I'll just say it this way: he does it better than I do. But if you want to work for a bank, if you work for a bank and want to have more assets under management or more responsibility, having that CMT at the end of your name can be very, very helpful for that. So if that sounds like something you want to do, go to cmtassociation.org. Very, very well respected, very, very well reputed organization. And we do appreciate all the help. So there you go. Thank you, Jody, for that presentation. Of course, we're MetaStock. We talked about MetaStock. MetaStock can help you scan the markets, find opportunities, test trading ideas, forecast. Scott showed the forecaster and the patented things that it can do for you today. Get real-time commentary, alerts, signals. Winner 31 years in a row. So 31 years straight, it's been rated the best software in its price category. If you pay for a month, we'll give you a second and a third month for free. So with all that being said, I'm going to move on right now to the next speaker. Our next speaker is Anne-Marie Baiynd. Anne-Marie has been working with us for a number of years now, and we absolutely love her. One of the things I love about Anne-Marie is somebody will always say, what do you think about this stock? And it's some stock I've never heard of. And Anne-Marie will be like, well, here's kind of what's going on with it. And she's so knowledgeable about the markets and so smart. And anyway, way smarter than I am. So I'm going to turn it over to you. Anne-Marie, I can see you. Let me go ahead and, how are you?
I'm well. I'm excited to be here. This is my favorite type of presentation where I get to show the actual stocks that I'm super excited about. Which screen did I give you?
I can see this really good news screen. I think it's part of Zenith.
Yeah. No, that's not the right one. I want to give you my other screen. So how do I?
On the control panel.
Wait, stop, show screen. Here we go. 1, 2, 3. Yes.
I love the fact that you've got Icon News loaded, though, or Zenith. I'm sorry, Zenith News loaded.
Yeah, it's so good. I mean, it's absolutely incredible. It's really one of the reasons that one of the stocks I chose this week is up here. So excited to be with everybody. I'm so glad you're here. I love MetaStock. Big fan of the platform for many, many years. And I have to tell you, just today, I was on the phone with tech support, and I called them and I said, hey, I'm looking to do XYZ. What can you help me? How can you help me approximate a VWAP? Or how can you help me with a smooth stochastic? I mean, these guys, they know what's going on. They're right there in the thick of it. And customer service is fantastic. So I'm just saying, just like you, I'm one of the folks that is all in on the platform. Absolutely love it. So one of the things I wanted to talk about, I was talking to Jeff about, hey, what kinds of things can we talk about? And I said, hey, I want to look at 10 stocks that I'm following. And so what I wanted to start with was, of course, my target rich trades, which is part of MetaStock, and it is an add-on. And what I wanted to do was show you how you can use this with just a couple of ancillary indicators to really keep you on the right side of the trade. So as you can see, the chart's really fairly clean. It has a standard error band, and I like to use that to approximate a volatility band like the VWAP might be. And so, the great thing about this standard error band is that it's continuous over time relative to an exponential chart, but it also allows you intraday to see price action motion. And so I really like it. And so what I wanted to do was just talk about the market for a little bit. And you'll forgive me if I start getting very excited because I love the market. I'm way into it. And what we're seeing in today's prices and today's moves, we could sit and say a couple of things like, hey, the tail is wagging the dog for some very big stocks like NVIDIA and Amazon and Uber that just moved to the Dow, which really is going to change. That Dow is the DJIA. And for many, many years, that's been the Dow Jones Industrial Average. And now we have two companies that are fairly tech-oriented, Amazon and Uber, and we've had Apple in there. So all of a sudden, the industrial anchor of what it is we've looked at is going to shift a little bit with that Dow. So we're going to see all kinds of super interesting things into the future. And so one of the things that I wanted to talk about is where are we as the SPY sits, right? So if you take a look, and I'm going to zoom in here, and I'm going to share with you a little bit about the technical indicators that we see here in MetaStock and tell you what I'm looking at. So here is my volume, and this is my stochastic momentum index. And I've got it on a reading that's only looking at the daily charts. But I want to tell you something magnificent. You can look at daily charts, and if you are keen on intraday trading, those daily charts are going to give you the best setups. And honest to goodness, that's what we've seen here, even just trading the SPY. And here's what I mean by that. The stochastic right now is positive. And so when the stochastic is positive, it's telling you to buy the dip. And so we have this giant gap up, and now we're sitting in this 1, 2, 3, 4, 5 days of sideways chop. The chart is really telling us that the market participants are waiting on a catalyst. Now, because of the way things are moving around, the NFP is not going to be until next Friday. It's normally the first Friday of the month, but it's not going to be this Friday. It's going to be next Friday. But we have consumer sentiment, consumer confidence, some sort of PMI or something. We've got a couple of things, plus the jobless claims on Thursday. And so the traders really since, what is that, last week, Thursday or Friday, Monday, Tuesday? Last week, Thursday, the charts have been sort of in this limbo, but with a positive stochastic and a support action event. Take a look. This is super important, folks. Old resistance equals new support. Now, I am so fortunate to get to be in a group of traders and presenters here that are making incredible products and incredible add-ons for MetaStock. And one of the big things you can do to get better at using their systems, and mine as well, is to employ this notion of where is old resistance and new support. And so you're going to look for peaks and valleys, but peaks and valleys that test each other. And so this line in the sand around 503 is a pretty nice test. And it's been telling us, hey, if this is a buy the dip, you want to wait until that dip to buy Otherwise, if you're sitting underneath this beautiful standard deviation band, and let me show you, I'm gonna let's just look at the properties so you can see what this is, and you can replicate it on your MetaStock platform. I've got 5, a standard error of 3, because I'm giving it width. Now notice what happens if I put it on 2. It gets tighter, so you can leave it on 2. And then I'm using an exponential, and I don't really have a smoothener, so it stays at 1. And I like them to be a little bit jagged. So what we know about markets is that they revert to the mean and then expand again. So charts will sit between areas of congestion and expansion, and congestion and expansion. And the beautiful way that the MetaStock charts currently open, you can see that they give you these gradations. And what's really nice is this edge here shows us a clear zone of when a chart is in a range and when it's breaking out. And so have a look. Rangy, 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 rangy. When you're looking at this and you're thinking about trend, which you should always be thinking about trend, if that trend is upward, you're going to say to yourself, hey, I'm going to buy my dip. And so this is telling us we are still in a buy the dip formation. If you read a lot of news, there's a lot of negative chatter about the world going to where in a handbasket. And the price action continues to ride up. And what we have to realize is prices are going to take a breath. It's just going to be time that gives us that opportunity. And so we really want to be cognizant of that and dance with the one that brung you, right? If trend is moving up, then when things get sideways, you say to yourself, all right, I'm just going to wait for the dip. And that takes a measure of patience. And what are we looking at right now? A measure of patience. It's putting us, the target rich trades is putting us in a buy zone setup event. And it's saying, hey, listen, as long as we're sitting above this area, come in close to the zone, and it's a buy the dip formation. And so this is really nice and clean. But what the standard error bands do is they sort of tell you, hey, listen, you're in a buy zone as long as price action is moving up. You're in a sideways zone if that volatility band is starting to move sideways. And so just think about that when you get your overall setups for everything, and don't be afraid to get back in a position when, if you get stopped out and your volatility band is sideways. So let's take a look at some of the very interesting charts that we have going on right now. Let's look at the ones that are entering the Dow at the end of the month. And this will be Amazon and Uber. So let's take a look at what's going on with Amazon. This I've got in a 3-day cycle because Amazon is very choppy right now. You can see, and this is a big thing, if you look at a chart and it's got buy and sell triggers that are very close to each other, you want to say to yourself, self, I think I need to go to a bigger time frame to see what's going on. So I've moved this to a 3-day and look at all the buy setups we've had in this particular space. Okay, so the first buy setup comes off of this trigger. So the next day, you're going to look for something that brings you a low into that area and allows you to buy. Here's what's happening in that volatility band. You can see that it's squeezing. And so what it's telling you is, listen, there's buying opportunity, but I might be in a space where I've got to sit tight for a while. And so if you're an options trader, you might look at that and go, I don't know that I'm going to buy a long call with a very short time frame because I've got this sideways motion. My suspicion is that it's going to take a catalyst for this to move. And again, what do we have coming up in March, right? The first Friday in March would be tomorrow. Would be day after tomorrow. We don't really have anything there. But on March the 8th, we have non-farm payroll. And then at the end of March, we have the FOMC meeting, the Federal Open Market Committee. And we see these Fed speakers talking every single day now. I think they're auditioning for their next job after the Fed, but that's just me. And so what we're looking at is traders with deep pockets saying, maybe I need to hang tight before putting a ton of money into the market, expecting that it's going to run north. A lot of folks are thinking if the interest rates dip, it's going to force people who have money market positions back into the market. I'm not so sure, but because we've moved up so far, I think what we're going to see is a little bit of congestion or new price digestion, and that's going to give us better opportunities. So the breakout zone is going to be about 176 for Amazon, but it's better to look at the pullbacks that give us the buy zones. The last place that we had a really pretty buy zone was right at the 150 to 160 area. So definitely keep that price number in your on your list to say, hey, if it comes into the 150 to 160 area, that's going to be a really nice place to get involved in the trade and watch it move up into those prior areas of resistance. Uber just reported maybe a week and a half or so ago, they are hitting it lights out. And so I know this because I travel all over Europe particularly, and there are Ubers everywhere. And I live in a little podunk town in Southwest Florida on the coast, and there's still Ubers all over the place. So these guys have got a ton of cash. They're doing really, really well. Go over here. Now I've got a 3-day chart. So have a peek and see this sideways motion. When is the very best time to get involved in a stock? In my mind, it's after it's been sitting sideways for a while and then it breaks out, because two things happen. When it's going sideways, people will short the top of it and they'll say, yep, I'm going to short it. And when it breaks out, those shorts have to cover. And the way they cover is they have to buy. And everybody else that's saying, oh, look, it broke resistance, they're going to start buying too. And that is a really beautiful trigger point to go after. And now what this chart is doing is climbing up. Notice, here's what happens. 1, 2, 3, 4, 5 3-day sessions. So that's 15 days of moving essentially sideways, dipping, but to the base of the breakout. 1, 2, 3, 4, another 12 days, and then it starts running again. Here, it's starting up for that same sideways space. 1, 2, 3, 4. So that's 12 days. It could give us a nice little dip and go 1, 2, 3, 4 again. And so the key zone, put an alert on your charts, somewhere around 70, going to be a nice buy area, because this chart likes to digest its moves for about 20 days, right? Sometimes 30 days. It likes to digest its motion while it's in a run to the north. And what these sorts of things tell you are, am I late to a trade? Am I chasing momentum? What's actually going on? And momentum has been solid, so you know it's still a buy the dip. What we see is a failure to hold higher. So we know it's not in an acceleration space because the standard deviation bands are going flat. And that tells you, hey, wait for the dip. So that's a really nice opportunity there to look for, wow, my fingers, in Uber. Now, here's another crazy one. You think to yourself, a big mover, you're not going to go, oh yeah, GE. But this one has been shooting lights out since October. I mean, it's been running like a house of fire. Really, the breakout in October, it pulled off of the lows where the whole market had the lows, and it began to move, and it's been grinding its way really north and doing tremendously well. And the last bit of motion has been quite extraordinary, and it is still moving higher. And so the question then becomes, how can I look at this after it's had a nice long run? Can it continue to move? And the short answer is yes, right? The short answer is yes. But what you want to do is position yourself in a way or in a space where the volatility has sort of given you a spike here, where you have a dip down into the lower edges. So here's another spike. It's a narrow spike, but that motion is, what is that? One, oops. Let's see what that number is. My standard error bar is stopping me from looking at that. This number is 153. Nice round number, 150. And then ease into this position as it's been running really, really hot. And it could come back into the 150 formation. So this is a great one to buy the dip while momentum is high and we've got magnificent trend. You can see the original buy formations. The first take profit event just came several days ago. So what we'd love to see is a little bit of comeback, stabilizing around that 150 place and just keep running. But GE is a beast. It's not a sexy name, right? It's like GE, but it's been doing tremendously. Here's the next one that's been doing incredibly is Eli Lilly, LLY. And Eli Lilly is in a moonshot because of weight loss, right? Big weight loss drugs. Who doesn't want to be thin except the person that's, can't put on any weight? And that's hardly anybody, right? Everybody wants to be thin. It's just, they partnered with Weight Watchers. They've just done a whole heap of things. Now, what came out a few days ago is there is another company, name escapes me, can't remember, but they're coming out as competition. And so this is the thing that's really going to bring Eli Lilly in so that we can take another run to the upside. And so what are we looking at? See, this has a short setup. It says short setup, but notice, when your momentum is high and you have a short setup, it is telling you you can sell into support, right? So the first measure of support is going to be a congestion level. Again, this is 3 days wide. So 3, 6, 9 days of motion coming up around that 735 area, and then the initial buy zone setup that came at around 700. So this chart is sitting in a space where you could go, you know what? I'm going to be patient. I'm going to wait for it to come into that round number of 700, maybe even the 690 area, and I'm going to re-enter in that space. Eli Lilly is a great place to also position with options, just so long as you're using a spread. Let it come back to its areas and then watch it move out. Notice, you see this sideways motion, sideways, up, down, up, down, up, down, up, and it finally breaks out. Those are the best places to look for a chart that are going to reward you for a long. If it's had trend and it stops and moves sideways and doesn't break, it means traders are in a space of price acceptance. They really want price action to hold for them. And as long as it holds, you've got a whole base of buyers that are really ready to break out and join the party. That's one of my favorite ways to look at charts. Okay, so let's go to two of the big monoliths. First, NVIDIA. Everybody's talking about NVIDIA. The market jumped. This is me being Shrek with my fingers. Yeah. This earnings event absolutely rocketed out of the formation and then has continued higher. Now, look at how long it sat sideways, right? May 2023. Sideways, 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 sideways. Get your mind used to looking for that. Get your mind used to looking for these channels, and you'll be able to see some incredible things. And when you're in a channel and you're looking at that big picture and you get a sell zone, look to the left, see where support is, realize that these cyclical motions are reading price and momentum and option volatility. And so when this sort of thing motions, you have to say, wait a second, if that's my sell zone, where is it going to? And if you look to the left, look for the last buy zone. That's where Target Rich Trades shines tremendously, because it can tell you, listen, if you hit a sell zone and you look to the left and you can see another buy zone, that sell zone is actually finishing at the old buy zones. And so that trade is not likely to run very long. So keep an eye on those sorts of things. Here's the breakout. The system catches it beautifully as it runs, but just the last candle, it said, listen, you got to take some profit. Momentum is beginning to flatten. And so what this chart needs to do to recover is get up and stay up above 800, or it's going to have itself a little bit of a problem. Okay, it's going to consolidate again. And so just be careful about that, because NVIDIA has so much of the market. We have to be careful about watching it and then realizing that it is the tail that is wagging the dog right now, and you want to be super careful adding to your position there. To me, it's a place to feed the ducks, right? If you've been long NVIDIA and you're saying, hey, how's that one going? It's going great, but it's time to take a little profit. All right, the next one that's doing tremendously well also is Netflix. So take a look. This is just a daily chart, right? And we can see that this is the current formation that it's sitting in. Could it break out? Yes, absolutely. Absolutely, it could break out. It is telling us, hey, I sell resistance, buy support, and now I'm in the middle of a buy zone, but it's also telling me, listen, you probably need to take a little bit of profit here, wait for it to break out, or better, wait for the fade that brings you into support where you know all these buyers have said, I'm in, and they also move to the upside. So this one, you want to take a look for any pullbacks into the 570 area, 560 area, and that makes for a really nice long that will give you cushion for risk, because that's the best way to keep your money in the market. We all know that we could sit back and make a great call about XYZ, but if we get in at the wrong place and we don't measure our risk or define that risk, we're going to get in trouble. All right? So now that I've finished the NVIDIA, I want to send you to this chart, which is Vertiv, VERTIV. And what Vertiv does is build the machines that make the chips. And if AI and the chip generation is moving, Vertiv is going to be a part of that behavior. Now, notice this one, big red candles, up and down. So what do we know about this stock when we first stare it down? Well, it's a little bit volatile. And so what you want to do in a stock that's volatile is don't buy the breakouts. Do not buy them. Wait for the pullbacks to come into view that will allow you to position properly in the chart. So I'm watching Vertiv here. It's giving us a buy zone, but the buy long setup for target rich trades here is down here at the 57 area. And, you know, right now we are fairly close to 60. And so, you know, that's a 5% move. So how about waiting, setting an alert for this area and say, all right, if I can come into 57 or even 55, which is a nice round middle of the road number, I can go long and really position myself to take advantage of this one. Notice the volume is low. And so what you want to make sure of is that you accumulate slowly and on the dips. But if you're interested in saying, how can I follow NVIDIA and that AI craze that's going insane? Look at the things that build those machines. And they are probably lagging just a little bit. And that's where you can find yourself some motion. Speaking of things that lag a little bit, I want to bring up Occidental Petroleum. Two reasons I'm bringing Oxy up. One, Warren Buffett owns a ridiculous amount of Occidental Petroleum. That's number one. He just put out his newsletter for shareholders, full of some very, very interesting things. But what we know is that because he has Occidental and he's sitting here, the chart is sitting in a massive consolidation space. And we just got a buy trigger on this position, okay, on the weekly. It's at the bottom of heavy congestion. and it's just triggered a buy. So at the very least, it is likely that it moves first to that 67 area and then into the 75 area, where you'd want to take a little bit of profit, because it has been sideways like that since, October of 22 and beyond, right? So my thought is Occidental is sitting in a sweet spot. Now, oil has been running off the rails lately, and I think it's because of that the Gaza ceasefire not looking as good, and X, Y, or Z. So this is moving up. Again, you want to buy on the dip if you can, but if you trade options, this is a beautiful space to say, hey, you know what? I am going to take out a calendar spread here, and I'm going to, I'm going to sell the 65s way out, and then I'm going to buy the 65s even further out. And that will give me an opportunity to position if it's choppy and get myself in a space that over the long haul, I could have unlimited upside. So Occidental in a very pretty place right this minute. Really like them, mostly because I think oil is going to lift. And then two, I think Warren Buffett's going to put a floor on that one. All right, so let's look at cybersecurity. One of the beasts in cybersecurity. I'm all over cybersecurity. I really think it's a very important space. Palo Alto Networks has been a barn burner of cybersecurity strength for many, many years. I have known folks that have been in this chart since, I don't know, maybe the teens, right? And so this thing was $50, and I think they actually also split, but I'm not for positive. Don't quote me on that one. But here is really a chart that stayed sideways forever and just exploded in 2020 and ran with the rest of the market. So it's sitting in a space where it had a really nice pullback. I mean, it's never had a pullback that sharp. And these guys know what to do. They are very good at what they do. I think an analyst has just walloped them. And notice where it came into. See, old resistance, new support. And so we just had a long setup after this fade. Now, my thought is when I come into a chart and I see this kind of price action, I'm going to immediately go, you know what? I'm going to nibble in there, because this is your typical buy and hold stock for many individuals, right? I've known people that really have had this since the 2000s, in the early 2000s. And so what it's giving us is another shot at a buy, but it's sitting in a really choppy space. So take a look. Here is the top of this area of chop, and here is the bottom. So one of the things traders have to do in general is temper their fear of missing out. And that's supremely important. This fear of missing out, really, it's terrible because it gives us very poor entries sometimes. And so when this buy setup shows here, what you want to do is wait for it to come down into the heavy congestion and confirm that it's doing all right. So two ways to do that. One, you want an alert for the close of the week above 315, or you want to watch it fade and come down and test that 280. to hold with the floor being 265. Okay, so that's really what you want to look for in that space. But Palo Alto, I mean, a beast. They do really, really well. Could you get in at CrowdStrike? Yes, that's really starting to catch its floor. A lot of folks have said, hey, what about Fortinet? Here's my thought. If you're a cybersecurity instrument and you are not running at a good solid clip by now, probably holding back for a reason. Okay, so that's it for me in terms of the questions, really open to them. If you want to look at another chart up in the space, super happy to do that. Just trying to get you to navigate how to look at charts. And here's an ETF. This is the XOP. Some of us really like to trade ETFs because it puts us in an area where we get the good with the bad and we don't end up stock picking and having a terrible time of it. The XOP is one of the best ones in my mind that tracks oil well enough. And this one has been in a range since March of 2022. The breakout action here has been almost non-event, right? And so if you're looking at this and you're going, well, where's the best time for me to get involved in oil? You want to watch for a breakaway outside of this space, but you could also buy the dip and sell into resistance. That's a fantastic way to work through these sorts of trades. So that being said, Jeff, all ears. What do you got? If anything, otherwise, that's me.
I would love to get your thoughts on the general market. Like if I'm looking at SPY, what do you think we're doing? And then when you're done with that, Barb wants to look at AMD. So
great. All right. So I suspect that we are in a holding pattern. Where's SPY? Here we are. I suspect we're in a holding pattern, and the reason for it is we're waiting on a catalyst. So my system says, hey, listen, buy the dip. And if I look at this formation, I have low, higher low, higher low, higher low. So the momentum formation tells me that buying pressure is sitting underneath these stocks, underneath the market in general. Now, what I've noticed is a fair bit of volatility. And frankly, if we lose this 503, we're probably going to go to 501 or even 495, right? So the question is, how do I perform here? And that is, dip buying is still going to get you the best bet. And so if you want to sit and say, all right, let me look at a weekly chart and let it tell me what's going on, I'm going to see that overall, I've got very bullish pressure. And it is telling me to hang on in the trade. And so this is the thing for people who are thinking to themselves, you know what? Something's going to happen. Something's going to happen. Listen, it might be the case. But if you're staring this down, and I'm going to move the standard error to 3 standard deviations here, so you can see the widening of the formation. What you can see is that the chart is stepping into the lower edges of the volatility band here and not really stepping into the upper edges. And so my thought would be, because of this, listen, wait for those dips and buy them. And right now we're sitting in a space of resistance. We've got very strong momentum. So you just wait for a cataclysmic kind of day, or a day where the Fed comes out and says something crazy, and then you go, you know what? I'm going to buy a little bit, because every single buy the dip has been rewarded with higher upside. And until it breaks, that's going to be what the traders are doing. So let me look at AMD. Is that AMD.O?
I don't think so. I think it's just AMD, but if it's not, it'll be
okay,
AMD.
okay. Yeah.
Oh, I guess it is AMD.O. I'm sorry.
Well, that's how we know. That's how we know. AMD.O. Ta-da! Yes. Now, oh, this is very interesting. So you can see, I got to tell you something else. SMCI looks just like this. SMCI has had a lot of weird trading lately, but
Yeah, I'd agree.
AMD is sitting in that classic range-based formation that I love to look for. Love it. So here's what it's telling us. Since the beginning of January, this chart has really not maintained any higher prices or any lower prices. And so it's had resistance up at 185, and it's had support down at 162. Until this pattern changes, I would wait to buy at 162 to 165 and take the profit when it gets 180 to 185. That's the only thing this chart is giving us. Now, what's it going to look like when it breaks out? Because it's been running in here for 2 months, it's going to be just like this one that ran from, November into December. It's going to do a stair-step climb on that breakout. And so I would set an alert for somewhere around $182. And if I am long then, because of whatever the chart's doing, I'm going to take some profit, just like here. It goes for 3 days, take some profit, and then when it pulls back, if it pulls back into a higher low, it's another run for the hills. And so that's what I would do. I would look right here, let it test that 182 to 185, let it pull back again. And then once it gets up and closes a day over 185, Bob's your uncle. It's going to be a brand new buy zone. And the range for the size of the move would be first half the size of the congestion. So 162 to 185 is, what is that, 23? So what are you looking at? 11 and a half points first to the upside, and then another 11 and a half for the second upshot.
All right, I think we have time for maybe one more if we're fast.
Sure.
Dell, from Peter, and go to webinar.
Okay, what is Dell? DELL.O?
I think it's either that or DELL.
Let's give it a whirl.
Yeah, I actually, well, never mind.
Nope, not it. So it must be Dell.
Yeah, DELL.
DELL, yeah. Well,
all right. And then the final answer is DELL.K. We're trying to give us the hard ones.
crud. Yes, it's DELL.K. Yeah, right.
There it is.
Oh, shoot, I didn't talk about Boeing. You know, they have this plan to get back on track for, they've been given 90 days. Boeing is just a heartbreaker, right? So it breaks your heart if you're a short, breaks your heart if you're long. All right, so Dell, look at what's going on with Dell. It just had itself a really pretty breakout event, right? Here's this sideways action, and it's very, wow, this is a very mechanical, this is a very, very mechanical chart. Number one, price should give you the impetus to move. Okay, so here's what happened. It's been sitting in this tight range, broke out, right? Here's the buy zone. It gives us the buy setup and the buy zone. Because it's sideways like this, we've got this fade, and it's the fade action into the old resistance that should give us the good upside pressure event. The one fly in the ointment here, and let me go to a weekly to make sure, because I did look at Dell just a little bit ago, and I want to make sure that I'm thinking the right thing. Nope, I'm not. This chart's in good shape, right? It's in breakaway, clear breakaway formation. It's had 1, 2, 3, 4, 5. On the 6th week, it broke out. And so the real breakaway spot was at the breach of that 86, and now it's trending higher. So what does this tell us? If momentum is up and my trend bar for uptrend is up, it's buy the dip. Don't buy the highs, simply because all of these charts come off their wicks, right? It comes off their wicks, and notice, just like the other chart we were looking at, they're piercing the lower edge of the standard error formation more often than the upper edge. So it's a wait for that dip action. Notice how different it is here. See how it's pulling back, but it never gets to the lower edge of the volatility band? It's telling you, hey, listen, you can buy the dips here. You can buy them. They look good. Here, it's telling us, yes, buy the dip, but the dip might be deeper than you think. And so if you're easing into this position, 80 to maybe 82 would be your better bet. It's in a breakaway, but the way I read the standard error channel here, the standard error bars are telling me, listen, there's some selling pressure sitting on the bottom here.
All right. And then I have a compliment, or a comment for you. It's also a compliment. Mark in YouTube says, that was really great presentation. I like your style. You speak my language. That was educational. I got value from you. I want more. What you got to sell, I'm in, whatever it is. So,
you know,
now, I'm talking about your add-on, but
I love talking about the markets, and whenever I get invited by Jeff, I feel it to be an honor to get to present to MetaStock owners,
we love having
because they're smart, and I think that I want to bring value technically so that you can go away and go, yes, I love this add-on, I have this add-on, but my technical strength in terms of how things move in the market, how a particular stock behaves over time, these are things that allow you to become much more proficient with whatever add-on that you have.
That's a great compliment, and I think a better way, the best way to end it. Anne-Marie, thank you for coming in. Thanks for joining us.
My pleasure.
Always great to have you. And Mark, I told you, somebody will ask about some stock I've never even heard of. She's like, yeah, here's 15 things that I know about it just from my brain. You do a great job. Thanks, Anne-Marie.
Well, you saw my cheat sheet when you saw that Refinitiv platform sitting open. You know where I'm getting my news.
All right. Very cool. Well, I'll see you again very soon. Thanks again.
Yes. Thank you. Bye-bye, everyone.
All right. And I will eject you. Here you go. Bye. All right. me go ahead and make me the presenter again. Anne-Marie does do such a great job. We had a chance to sit down with her, and everything that she showed in there was the stuff that we designed with her. So the charts that she was using, the trend ribbons, the analysis, all that stuff is part of an add-on that we call Target Rich Trades. And what I'm going to do here, it does have the real-time signals. It's got alerts. It's got triggers. She did an extensive job of just the commentary and just kind of giving you a complete checklist. And we went through it and we modified it, and we spent a lot of time just kind of getting it exactly where you can see those buying zones and those buying pressures and those support and resistance areas. And man, she's really, really great to work with. We do have her add-on. We're going to do a conference offer on it. It's normally $4.99. Here at the event, it's only $3.99. That'll include a free trial of MetaStock if you need it, white glove installation, training class that we'll do on MetaStock that's part of it, the Unleash the Power of MetaStock, and of course, unlimited technical support. I love the story that she started with, because we've been telling you this all the time. Our support team is great, but even she was talking about how she called support today, and I wonder who she talked to. But they're all really good, and just kind of helped her out and got her exactly what she needed. So to do this, you can go to metastock.com/sales chat. I'll chat with one of our sales reps. They'd be happy to talk to you, help you get everything set up. You can give us a call, 800-882-3040, and you can go to metastock.com/AnneMarie. Now, we're going to do something a little bit different between now and introducing our next presenter for the second time. And I'm going to give away this book right here, this book called Around the Horn. Okay. Now, what I want you to do, I'm going to pick somebody randomly that can answer this question. If you can tell me the author of this book in the chat right now, this could be your very own copy. So let me know. I'll give you a few minutes to answer that. Around the Horn, a trader's guide to consistently scoring in the markets. I'm on purpose covering up the thing. Who wrote this book? Do you want the copy? Go ahead and get it. While you're answering, let's go ahead and go to the next page. And we did talk about CMT just before that and a few times. And I've talked about AAII. What I want to do is actually highlight, I'm going to go ahead and unskip this one. One of our longest running sponsors of all time. Technical analysis of stocks. MetaStock, you can't answer. I know you know. Actually, Greg, if you want one, just let me know. I can set you up. Anyway, I want to say thank you to Stocks and Commodities Magazine for being long-term running sponsors of the conferences we do, whether they're the big long conferences like we're doing right now, or single day events that we do as well. They've been a great support of us, and we really appreciate that. They have 17,000 different articles. They've got 1.3 million subscribers. They've been making it since 1982. So definitely, if you're interested in checking out the magazine, go to traders.com, get it set up. Of course, we are MetaStock. 31 years in a row, it's been rated #1. Scanning, I've talked about scanning. I ran a scan just now. And so I didn't actually find anything that I liked in the market today, but it didn't take me very long. I was like, okay, well, let's run a scan. Let's see if anything comes up. I was able to look at a few charts. Nothing kind of fit something that I really liked. And you know what? That's all it took. I was able to also listen to the person speak. So scanning markets, testing trading ideas. The forecaster, Scott, did a really good job of showing the forecaster and how it works. Commentary, signals, alerts. Here in the US, pricing starts at $69 for our end-of-day version. It's $265 for a real-time version, and that includes the news platform that has all that Reuters news in it. You can get an extended trial of that if you buy today, or if you lease it today, it'll cost you 1 month, $69 or $265. But we will give you access until May 28th. Basically, it's 2 months for the price of one. And during that time, I think you'll be, we're going to sit down with you. We're going to help you run it. We're going to answer any questions you've got. We're going to give you training. We don't really just want you to subscribe once. We want you to join. We've had customers that have been with us for decades. We want you to join that list. So there's a couple of different ways you can do that. You can scan the QR code in the corner there. You can give us a call at 800-882-3040. You can do metastock.com/saleschat or metastock.com/conf-promo. Now, I do have a lot of people that have answered the question correctly. Dennis, Carlos, Niels, Linda, we all got it right. It's Adrian Mance. So this book is called Around the Horn by Adrian Mance. And what I'm going to do is, since Dennis was the first one to answer it correctly, I'm going to reserve this copy for you, Dennis. So thanks for answering. Thank you, everybody, for kind of participating in that. Congratulations, Dennis. Good job. All right. Our next speaker. I was like, okay, what do I do next? I almost forgot. Do I not? Okay, I do have a picture of Ed. This is a picture of Ed Downs. Ed does a great job. When I started, I told you a few years, I've told you a couple of times, I've worked for MetaStock forever. It's such a great company to work for. I love it here. I'm really proud to present the product. When I started, Ed was creating systems for MetaStock. He had this program that we were selling. There was a bunch of MetaStock systems. Actually, it's a combination of MetaStock and OmniTrader. And so we were very familiar with Ed. We've known Ed for a really long time. It was recently, but not too recently, probably within the last 10 years or so, Ed called me and he wanted to make the technology that he's been putting into and working on into MetaStock. And part of that was the AI engine. And this was before AI got to be quite the topic of discussion that it is. But he has a fantastic AI engine that works inside of MetaStock, and he's going to talk about it. So with all of that being said, Ed says my webcam's not working. Can I reboot? Here, let me try and turn it on for you, Ed. I think we can go.
Wait a minute. I got something here. I got a deal. Is it going to work? Yeah. See, I'm not seeing it on my machine.
I'm just seeing a black screen.
Exactly. So yeah. Messing with it while you were closing the last call, which is fabulous, by the way. Anne-Marie was great. But I can't get it to work, so we may have to go with that video today. I don't know, unless you want me to reboot and try that. I can.
No, I think it's okay. I'd rather just have you go.
Okay.
And we got plenty of chance to talk to you when you were or see you with the chart pattern engine. So I think we just go. I think it's okay.
Okay. All right. Well, we'll go for it. First time without.
All right.
They can use your imagination.
Turn off your camera on this side, and then I'll just get out of the way. Oh, wait. I need to make you the presenter first.
Yes, you do.
Let's do that. All right, so you should have that. We'll make sure that's working.
I do. You look really good, by the way.
Oh, thank you. It's artificial intelligence. No, I'm kidding. It's all you.
Nothing artificial about it, Jeffrey. Come on.
All right. Well, we can see the screen. Take it away.
Okay, we'll do. All right. Well, hey everybody. Ed Downs here, and I appreciate that intro from Jeffrey. Gosh, we have known each other like forever. Just I'm gonna give you the 1 minute version of me and who I am, kind of the stuff that I get into over here in Austin, Texas. So many moons ago, I was a design engineer for chip design and automated chip design, routing and placing circuits on chips. And I just loved automation. It was great. I loved the job doing it. I started trading in about around 1980, somewhere around there, 81 with my dad. And this idea came to me, that, gosh, why can't I automate this stuff? I should be able to automate most of the things that I'm running. They take so much time to do. So got the idea for that. I started my company, Nirvana Systems, in 1987, the year of the big crash. And right before it, actually, is when I did that. And I started working on a program that would run other software from the outside, like a user. It's called a software robot at the time. And it worked in DOS, and it would run any software. It could make it do stuff, read the screen, get files out of it. And so we applied it to different programs. And of course, my favorite was MetaStock. It had so many great things in it. They were already highly automated. So all we did was came in and said, well, run more system tests, more explorations and do, output that so people could review it later. And it came to, over to Equus International, which is the name at the time that they had. Steve Akalis, the founder, and said, hey, I got these utilities. What do you think? And he said, yeah, let's get them out there. So started working with Jeff, and people really liked them. They were great. Of course, those are the DOS days. DOS died a terrible death after that. And so we moved on to Windows software. But I kept automating stuff. And about 1996, got this idea for applying artificial intelligence to the market, studied it, and had some really great programmers on staff. And I said, let's just start doing this. And so we built, neural networks and genetic algorithms and different things to find stuff, indicator-based typically, that would find these trades in the market and then, show you where they are and all that. So it's been around a long time. We're probably, I don't know, the 10th revision of the AI that we have. And so back in 2019, I thought, this is really a generic product. I mean, we use it in our software, but it could be used with a charting package out there. And so I thought, aha, I'll call Jeff at MetaStock, see if he wants to do a deal with me. So we talked about it, and it's always so great working with them. I wish I'd called him, 10 years earlier with that request, but he was very gracious and said, yeah, I think our customers would like that. So we implemented it, and you'll see the implementation in a minute, how it was done and all that, and how it works. But really proud of just everybody, MetaStock, and of course our staff for making this stuff. And I'm especially excited to be here today to show it to you. But I also want to educate you about AI, because there's a lot of hype about it right now. And if you go on YouTube and you search AI for trading, you're going to find a lot of stuff, a lot of claims. ChatGPT maybe $10 million in one day, stuff like that. Those are kind of fun to look at. But so there's a lot of hype around it, and I'm going to explain to you, why a lot of it is hype and really what you can do with AI in the market. So 2 objectives. One is to educate you, and then of course show you what this thing does. Okay, let's go ahead and move on here to talking about, again, this presentation is about AI technology used for trading, how it can help you, and more important thing is how you can create your own AI that's completely personalized to you and how you look at the market. There is a report there on our website. Now, this company that has the AI is called Fulgent Technologies. I created a little LLC to hold it because it's really a generic thing that plugs into software. And so there's a MetaStock section in there. And if you go to that place, you'll find a report that we did where we used AI to trade options. It's pretty eye-opening. So that's there on the website if you want to go check that out. So it's fulgent.ai. All right. Very good. So let's move on. Oh, there's where you click. Right. All right. So the question is, can you use AI to trade with? Again, a lot of mystery about that these days. As I mentioned, if you go on YouTube and you search it, AI for trading, you're going to see all of these different things. Just tons of machine learning for AI. Today, this is a pretty old picture, actually. Today, it's ChatGPT and stuff like that, like it, beat the market and everything. So you look at those, and what I want to say about pretty much every attempt to trade the market with AI is based on neural networks. And it's kind of vague about that, but we'll talk about what a neural network is next. But they're all based on that technology, and there is a reason why it's difficult to get a neural network to actually trade the market or figure it out, which I'll talk about. But the thing that you will not see, and I challenge you to try to find this, is actual results of any kind. You won't see trades. You won't see, evidence that what they're promoting in those videos is real and actual. But you will, if you go into MetaStock and run the system tester, you can see that the artificial intelligence-based strategies outperform other strategies. And so again, you want to look for evidence in this AI stuff. And like I say, if you find it, please send it to me. Where there's somebody's actually doing it, using it, showing their trades. And of course, the theory is, well, they're doing so well, they don't want to show what they're doing. Well, people tend to brag about stuff. So it's just a hard problem to solve with artificial intelligence because of the nature of the market. Okay, so let's talk about what that is. If you look at classic AI, and this goes back to when we started, Neural networks are typically the thing that's used, and they are great for visual and audible pattern recognition. They're really, really good at that. So you look at a picture of something and you want to know, is it a cat, or another picture of the human body, is it cancer, your self-driving cars, is there an obstacle in the road? All those kinds of pattern matching, pattern recognition problems are really well solved by neural networks. And so sort of the way it works, this is a neural network here, and it has weights and nodes. And so you start on the left side with our little cat picture there. And what they basically do is they line up all the pictures of the cat, what are 5 million of them, and they feed them into this neural network. And what they do is so these are the values of the pixels, right? The actual pixel itself has that color value. So on the input layer, they feed those in, and then they start going across inside here. And just the way the math works out is they travel through this network, they end up outputting something. And so what they do is they adjust these weights over and over again until this says is very close to recognizing what you're trying to get. So you train it with a bunch of pictures, and then you show it another picture, either of something that's not a cat, like a dog or whatever, and you don't want to see a 0.98 here, you want to see like a 0.2 or something. But when you show it a cat, you want to say, it's seeing things in this picture that flow through the neural network and ends up with a 0.98 or a 0.99. So yeah, that's really, really likely to be a cat. So that's how it works. Now, we go here, there you go, there's the pictures going in, pixels going in. All right, forgot I had that. So if you go to the market then and look at that problem, it's a much more complex thing. And people try to feed price charts into neural networks, and it just doesn't work. Why? Because no price chart is the same. They don't have the same features. It's an infinite possibility of things that you would see in a price chart. So although there are similarities between charts, like we use indicators to detect that, you can't just feed a picture of the market. It doesn't work. And so that's like, no, you can't determine what's going to happen. People try though, they really do, continuously. And the funny thing about this is when you see people say, I got 65% accurate on trading whatever it is, the market is going up way more than it's going down. So almost a monkey could get just by saying, yeah, go long, could get probably a 65% accuracy rating looking at the market. It's not hard if you're saying buy. So in our world, we don't use this kind of thing. What we use is rules. We all use them. Every presenter that's on here in the conference has their trading rules that they apply. And so that's what we do with our artificial intelligence. Let's look at what a rule is. So a rule is you buy when something happens, there's a Bollinger Band contracting, and maybe it's above the 20 period moving average, the 20 period's over the 30, there you go, the blue's over the red, that's good for a buy decision. Momentum is positive, and maybe even MACD is above its moving average. And these are they're related, of course, they're correlated, but you have things that when they come together, you say, yeah, that's a really good place to buy that stock. It's probably going to go up. So that's an example of a trading rule. So all of us out here work with this stuff, and the typical way that you do it, that you create a rule, is by observing something in a chart and maybe something else that looks like it's compatible with it. That's a confirmer, that's what they're called. And maybe 2 or 3 more of those. Maybe it's a volume increase in addition to a breakout, that kind of thing. So we observe these behaviors, and we can combine them together into a rule. And so when you talk about artificial intelligence, what you would like it to do is to make these rules by itself. That's the idea. Well, there's a problem with that. It doesn't know anything. It doesn't know what a moving average is. It doesn't know what RSI is or anything else. And so there actually are over 100 different indicators in MetaStock. So if you're going to make a rule out of all those, where would you start? You have some ideas about that, but let's just start with one thing, relative strength index. If you take that one indicator and you're going to base a rule on it, you've got to look at the interpretations, because it's not only just like RSI 14 is the classic one that people talk about or use, but go all the way down to 5, RSI 5, or up to 30. And they all have different periods and different strengths based on the chart. But if we look at just RSI 14, forget all the others, you have the interpretations. It goes through 0. It's above or below a level, 30 and 70. It's accelerating. It's diverging. There's the price divergence. You have a crossover of RSI with its own moving average. Maybe it forms a peak and turns around. Momentum, and you can go on and on just that one value of RSI. Okay? So when you look at that, that's really an infinite number. But let's say you just took 100 of those. And let's say you get 100 indicators with one interpretation, or maybe a couple of interpretations. If you have 100 things with a true, false, and don't care, that's where you don't say some of them you don't care what they are, but maybe there's 5 of them that you do care. That's what you want the AI to figure out. If I combine these things, pick 4 or 5 that work well together. That's the idea. So if you have 100 of them, true, false, don't care, that is 2 septillion possible combinations. And there isn't a computer that can solve that in any reasonable period of time. Like, try every possible combination on a bunch of data, over all the data, looking at every place they happen and figuring out how profitable is that particular combination on average, and then still, getting the good rule and saving it off. So it would have to do all those permutations of the 5 things, to arrive at that. Okay, so the question then, we want to use AI to automatically do this job. So how do we do that? How do we search the space? And you know what I'm going to say, of course. It is AI. It's really the only way to do it. You can get pretty good manually with your brain, looking at stuff and finding rules. Obviously, there's so many people on here that have done that. I've done that. But we want the computer to do it, to actually do the whole enchilada. So what we use for that is not a neural network. It's something called a genetic algorithm. And I want to explain what that does really quickly and why it's superior to a neural network. So it's called a genetic algorithm because it's modeled after a gene and a chromosome. So there is this thing called a population. So each of these, let me make the next thing here. Each of these lines is a chromosome, quote, it's an analogy, right? But each of the little squares is a gene on the chromosome. And the gene is just a value, like RSI 14 less than 30. That's a single interpretation of RSI. That would be one of these. Maybe the Bollinger Bands are down to 2% of their range, or volume has increased by 8% over the last 5 bars. So you can have, I've only got 8 here, but when we do this, we have a couple hundred of them. And so you have this structure in the computer where there's a population of these chromosomes, and its job is to mix and match these genes across each other, so basically to mutate them and mix and match, and then it looks at each one over all the data, like all of it that you're testing, and says, okay, is that profitable or not? And if it's a little profitable, it goes, oh, we found something. Okay, it saves it off so it can cross it with other things later. So it's continually crossing over and mutating to evolve the population to find these rules. It does this extremely fast. Our software can find about 20 to 30 rules per second, and that's, again, looking at many years of data across many stocks. That's how fast it operates. So it's looking for individual rules that it can apply in charts. And so what that looks like, figuratively, is something called a knowledge base, which is a database that is inside there that has all these rules. They typically have a couple thousand different combinations of things which have been found to occur many, many, many times in the past on a lot of charts. And we actually have 4 in this version of the AI. There have these names: quick move, swing trade, and major reversal, things like that. But what happens is, on each bar of data, when the program is looking at a chart, it consults the knowledge base and says, okay, I have measured RSI. I've measured Bollinger Bands. I measured the 200 things that are in that knowledge base that create rules. And so, do you have any matches? And it just looks through the whole database and says, oh yeah, you got a match. There's a sequence in what you just measured that matches a rule or more than one rule. And then it looks at how often that rule was found in the historical training data, and if it's got enough hits, enough times that it happened, it'll put a signal on the chart. It does that really fast. Now, it does take a few seconds because it is consulting, thousands of rules with however many indicators are being looked at, but it's amazingly fast for what it's doing. But that's the idea. Okay, so we have this product called Fulgent AI for MetaStock, and really proud of it. I just love working with this stuff, especially MetaStock. And so the idea of it is running in the background in the system tray, and you've got the knowledge base that we created. And so MetaStock, when it loads a chart and brings up the expert, it goes over there and says, here's all my measurements, all the indicators. It passes all of them, 200, over here. It goes, do I have anything? Yep. That bar I've got one, that bar I've got one. So it does the whole chart. So what is that? As a user, you just kind of turn it on and look at it, but I wanted to explain what it's actually doing. Okay, so we will bring it up next here and just do a preview of what you're going to see. You can click anywhere in the chart and get the advisor to show you several things about the rule that fired that signal right there. It'll tell you a basic rating from 60 to 90 as to, it's kind of like a probability, not exactly a probability, but sort of like that. It's how many times did it see it in the historical training data. And you kind of want that to be in the 400 or 500 zone. Those are the really good ones. What is the average profit of every occurrence of that specific rule, that one right there, that fired across that data? And then we also have a stop. We have an exit mechanism in here, and that's what the dots are. They tell you, where the stop was hit. You have to follow that, but we just do it, and you can go in the advisor and see where it is on any trade you're doing or any historical signal. Okay, so let's go ahead and bring it up here. All right. Hey, Jeffrey, I'm finding it's easier to do this without being on camera, actually. It's quite, because I can just stare at the screen. It's good. So interesting phenomenon there. All right, so here it is. I just brought up this up in MetaStock, and so this is on Amgen. And really, there isn't a whole lot to say about it. I mean, you can just see how good the signals are. They're in the way I have the settings right now, they're going to be about 70 to 75% accurate. And that's really, I could stop the presentation right here. But let's go ahead and go through some more charts and just look at it real quick. And it's not perfect. I mean, it's like 70 to 75, 70 to 73 or so. If you see that delay, it's looking at the whole chart. So it takes, a few seconds, but it's amazing what it's doing. So volatility breakout, there's that exit right there. Volatility breakout, that exit. Volatility breakout, that exit. Swing trade, that exit. Quick move is like a 3 to 5 bar move. So you can't really see it in there unless you zoomed in, but those are really short little moves. So if you like those quick trades, like over a couple days, that's your dude. That's what you want to look at. So what kind of control do you have with this? Well, if I go to the system tray where it lives and double click the F, this is the interface to Fulgent. OneDrive is not connected. I really don't care. Can you please go away? Go away. Thank you. Yes, quit OneDrive. Thank you. So this is all of the products that we have built for the MetaStock platform. And there's, there's pattern recognition. We showed that on Monday. There's Wave Trader. So there are different strategy concepts, but this one, FT Stocks, is Fulgent Technology Stocks AI engine. And this is the one I'm using because I have this advisor turned on over here. And if I go into it, you'll see the 4 experts that we provide: major reversal, swing trade, volatility breakout, and quick move. And there isn't a lot to configure. They're just on, and that's it. Yeah, I can, if I don't like one of them, I can turn it off, whatever. And then we also, yeah, okay, never mind. I was thinking about another product. So yes, that's it really. It's just that's what it is. And there's another control you have that I'll show you in a second here. But so that is, yeah, that's down here. So we'll come back to that in a minute. Let's go through a few more charts here and we'll look at them. Okay. All right. Okay. So again, you can just see where these are firing like this. And yeah, now, so this one, a little quick move right there, quick move here. This volatility breakout, the exits took it all the way up to there. So, and really, I mean, so the idea of this is that what you're going to do is run it in the Explorer to find these signals every day, and then look at them in the chart. You always want to confirm any signal that you're trading, no matter what's generating it. So you see a volatility breakout signal. You want to look at the chart and say, is it breaking out according to volatility? Yes, sir, it is. Is that a major reversal? I think so. So you look at it and see if you agree, with the interpretation because it's not perfect. It's really, really good, but it's not perfect. So that's the primary use of this. I mean, you can look at charts and go ooh ah and all that stuff, but it really is to find these signals every day. And so that's what you would do. All right. It's a very long swing trade signal. They're not really a swing trade. That's more of a long-term trade there. But do a couple more. I'm just in the Dow, going through the Dow stocks here. All right. And so, volatility breakout this way, quick move up there. This one did not work out, so that really wasn't a volatility breakout. So like I said, it's not perfect. It will find things that it thinks it's seeing the indicators to indicate that there is this type of signal, but it's not always right. So you have a stop and you get out if it goes against you. Again, there's a swing trade up to there, this one up to here. Okay, let me see. Let me go back to this guy. Click here. And the other thing we do have with this is the system testing stuff, so you can actually test all these and get historical results. And you all know how to use that. It's great. You just activate you get these Fulgent AI systems in there. The four that I listed: swing trade, quick move, and major reversal, volatility breakout, and just turn them on and run them against other things that you may have access to in MetaStock. I had mentioned that today's signals are found with the Explorer. This is a picture of it. And we do some interesting things in here that I think are unusual. So the signals are not very often. I would run this on the Russell, the S&P 500, and it takes it maybe three seconds or so, 2 seconds per stock, 2 or 3. Depending how much data you load. You want to load the kind of a lower number, like maybe a year if you're prospecting on the right edge, because it is going to generate signals across all the data that you give it. So at about a year, it's about 2 seconds per symbol. And at the end, it'll say, okay, you have these new long signals, new short signals in the Explorer. There's none on this picture, but you double click them and see the chart. The interesting thing about this is you really probably don't even want to look at the longs and shorts. You look at the in longs and the in shorts. Because when a signal fires, you want to make sure it's confirmed that it is going in the direction of the signal, and that takes a bar or two. And so this is a 4 bar right here, 8 bars, 9 bars. And when you look at these that are in trade, they're often just obviously like, I think Anne-Marie was mentioning SMCI, for the last couple of months, just going straight up every day, and so you'll see that and you say, well, that's really, I'm glad I now know about that stock because AI flagged it and it is going up like what. So this tells you how many times that particular rule that fired that signal occurred in the historical data and how accurate it was in the historical data. So getting the ones that have more hits, like the 150s here, 173, that's really good. 75, that's a really good rule right there on Estee Lauder. And this shows you the average profit for each trade. So there's 5% profit per trade, 6%. So it's just a quick reference. And of course, you can sort on those things if you want to just get the really high ones and all that. But pretty simple. Just run it and double click the symbols that have signals or in trade signals, and then you can go to them and see what they look like. All right. This thing is highly customizable, and I think that is one of the strengths of it, really. It's not really a black box. You have a lot you can do with it. So you can set long, shorts, or both in the interface from that FT stocks drop down there. If you right click, it'll say, okay, what do you want? You want the, a directional bias here, long, short, or both. How do you want that? And some of them have short trades, some don't. So, but you can just kind of turn them all on there. And okay, there's our chart. And as I mentioned, you click anywhere in here, which I didn't do live, did I? Maybe I did. Let's see. Didn't show that. We have some more time here, so let me show that real quick. Go. Okay, so if I click in here, you'll see this changes and says that particular signal. I click right here, like let's say it just happened. So it has 75 rating, 200 occurrences. That's really pretty good, and 6%. That's good. Of course, the signal was awesome. and then the trailing stop. And that's it. I mean, there isn't much more really about it. It's just telling you those stats and what the rule says. So, okay. See, these could be half-hour webinars, probably, Jeff. I don't know, but there'll be some questions, and I'm sure we'll go through those. All right. So the thing though, the customizability of it really comes into play when you look at retraining, because it is actually very easy to do that, and I'll show you that here in a second. So you can actually build a custom trading system with anything that you have that you like. So for example, if I want to look at going long when RSI 3, that's a really good RSI, by the way, goes below 30 and goes back through it to the upside, like it's down here, it's oversold, you know, like there. So I can't do every one of them because it would lose. If you just trade every single reversal through 30, I want the AI to combine that condition with the stuff that is built into the expert. The expert has all these pieces, right? Like RSI 14, you know, greater than something, that's RSI, but different measurements of volume at a certain level. That's what they have in them. That's all those genes that are used to create the rules. So what you want to do is just say, well, take your thing and just retrain it against my condition. And that's what you can do really easily in MetaStock. And since I'm on a roll, I'm going to show you what happened in this case when I did that, and then I'm going to go do it in the software. So, okay, so I trained it, and the quick move, which is what we'll do today, is generated these signals on that condition. So it's firing one there and there and there, avoiding these, and firing one there. So this is an actual run, retraining it. And so I took a very simple thing that I know is pretty good, but not, I mean, maybe it's 55% accurate actually, and turn it into like a 70, 80% accurate system, just a simple condition. And you can do it with anything, you know, Bollinger Bands expanding, going through moving average, whatever you want. So let me see if I can remember how to do that. I'm sure I can. All right, go over here. I'm going to bring up Fulgent, the engine. And it's always, sometimes it's on the tray like that, on down here, but you can always get it in the tray. And you see these guys right here? These I did that. So you can retrain this thing as many times as you want and get as many experts as you care to have. This one was trained on RSI 3. It was a demo. I'm going to do another one here right now. This was retrained on something else, and you can see the accuracy was 71%. The average profit per trade for my training was 2%. That's really pretty good. For those short-term signals, it's really good. So let's see here. So if I say, okay, I click. All right. Okay, hold on. I am actually, this has not happened to me in a while. I am trying to remember what you do to say retrain it. Your training data. Well, I should consult the manual. I've got it over there. What is there's a very simple sequence that you say, okay, train. Oh, I know, that's why. Yeah, it's because I have to go to the indicator. All right, we have, the way we do this, there's an indicator, and let me see, this one. It's called Fulgent User Inputs. And let me just bring it up. Let's see, I believe that's edit right note. Indicator builder. I think it's in here. Is that right, Jeff? Am I going to the right place to get to it? Fulgent user inputs. There you go. Got it.
I was going to say yes, but I had to find my. You're in the right place. Yes.
It's all right. I do this so rarely. I should have done it before the conference, and I just didn't do it this time. But
hey, you're doing great.
I'm
question from Kenneth in the chat when you have a second.
I'm reorienting myself, but it really is simple. We provide this file, and the reason for this is consulted by the AI when you retrain, and there's the conditions right there. The RSI 3 less than 30, RSI 3 greater than 70, and you just edit that and save it. And so when you train, it will, actually make sure that every single place it's generating an AI signal has that condition as true. So you can call anything you want, any indicator, any formula, Doesn't matter what it is. These things down here are just data stuff that we have. So our indexes have the right data. We had to do that, so it needs that. But okay, so this is for training. So I can even, let me see. I'm going to take the leap of faith and change this to a 13. Let's just try it and see what happens. 13, there you go. And where's the save? I have to hit save, or is it just okay, Jeff? I just want to save it as is. You got to help me here.
Both will work. Both will work.
Both will work. Okay. And here's where my memory is completely jogged. You know, it just turned 70. It's still working, but it's just not quite as good as it used to be. So what you do is you go to the Explorer. That's how we train it, because it has to go through all the data. And so I've got to say, okay, well, let's train on the Dow 30. Give me those guys right there. That's, you know, not that many stocks. And let's train on, you know, like, that's enough for right now to run on it. The 750 records, and or you have to go here first. I gotta, sorry, I have to do that first. Sorry, I remember now. So, okay, and they're on, good. Okay, so explore these guys, and I have to pick my expiration, which is going to be the Fulgent. Find it here. Yeah. These are different products we have in here. There it is. Training. See, that wasn't hard. I just had to remember it's in the Explorer, dummy. That's where it is. Okay, we're all on the same page now. Okay, so I turn that, and that's it. So I picked the expiration that is the training expiration, because it has to get all the data over to the engine for all these stocks for 250 bars in this case. Yeah, that's enough for a demo. You want to do like a couple thousand if you're really doing it, but this is fine. And so there's that. There's all the symbols. Any more down here on? I don't want to overload it. Let's see what this is. No, I don't want that. Yeah, I do not want those. Okay, let's see if there's any more from a prior demo that I left on, because it'll take longer. I don't think so. Okay, awesome. That's it. I've got my training, the list, and the bars. Start. Please do your thing. I'll be so happy. Okay, here it goes. Now, what it's doing right now is it is measuring like 200 indicators across every one of those stocks over a year. And you can see it's really fast for what it's doing. It gets really exciting in a second. So go get your coffee right now. You don't want to miss this. You got about 15 seconds. Need the Jeopardy song playing here or something. Do 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 do. Oh, there we go. Okay, now is it doing anything? I don't know. Let's see. Let's give it a second. Oh, there it is. AI is initializing training for FT stocks. It's loading the different experts. Oh, I have them all activated. Dang it! I meant to activate just one of them. Can I stop it and do it over again? Well, because they take a long. If I do all of them, it takes a while. But let's just see what it does here. It should be fine. Okay. Yeah. So it's not going through.
Stall. I can help you stall, Ed. We have Kenneth wanted to talk a little bit about the AI you used for option trades.
Well, okay. So you think I should let this go? It's going to do all these symbols.
Hey, it's up to you. It's up to you. I was just going to help you.
Yeah. Well, how much time do we have? Oh, we're really good on time.
20 minutes.
Stop it and just, what the heck? We'll see. What I want you to see is while it's training, it does stuff, and that's what we're waiting for here. So come on, computer, go do it. All right. So yeah, options. What you're always doing is looking at the underlying, and so I've done a lot of option trading with this, where you just wait for the really good signals. And the way I look at options, and this may be controversial, I hope not, is they're just a stop if you're buying calls. So like you think about it, like say a $20 stock, you might pay $1 for a slightly out of the money option going out to the next expiration, like a month out. That's your stop. So I'm going to lose $1, but it may double or triple in that time if I've selected it properly. So that's just a simple way to trade them, where you're not worried about a stop loss. You just hold it, and then when you get an unusual profit, you take the profit off the table. So that's how I do it. And because this AI is so directional, it's, your hit rate is so high, in my experience using it, that it's fine. I mean, that works. What you just want to do is make sure, here we go, make sure that it is moving. I mean, it is a good place to go. Okay, so this is going to do like 1,000 iterations. So every one of those numbers at the bottom, so it's at 140, 160, is generating, let's see, you can see 250 rules found, 260, 370, 380, 390, 400, 410, 420, 430, 440. That's how fast it's finding rules that meet the requirements, which are like over 70% accurate and 2% profit per trade. And so it just does it. So you just let this run. And when it finishes, if you want to keep trading later, like overnight, there's a checkbox you can check that says continue training, and it'll just keep going. So you want it to get up to, 1,000, 2,000 rules. And so you have both the profit, which is 5% average profit per trade, which, RSI 14 is a wider, period. So that's very nice, 5%. And this is just how many rules it's found. And it is just going to town here. It's got 1,000 rules already. Isn't that fun to watch that? I just love it. It's great. So it's training major reversal here. I want you to do quick train. Okay, let's see. I think it'll do the next one if I say stop. Let me just see here. I think. Maybe not. Yeah, it's going. Yeah, it's doing stuff. Okay, we may want to. Yeah. Okay, so I just trained the one, and but what I would do to if I did that again to train just the one is I'd go into here and I'd say, okay, let's just do this one. Let's just do that one. That's all. And I'd say, okay. And then I go into the Explorer. So we could do it again, Jeff, if you want me to. And then we can bring up charts with a quick move. But it didn't finish. So it's up to you. I do want to show the strength rating. That's the last thing I want to show. So if that is good, I can do that.
I'll let you be the judge.
Well,
yeah.
Oh, we got 15 minutes.
Yep, about 15 minutes.
Let me show this, and then we'll just end on letting it train, and then that way we're good. If it doesn't finish, it's fine. But everybody got to see what that does. Okay, so let me close this, close Explorer. And again, the purpose of this is just to provide the training, the data over to the engine, which is huge in the background, and then so it can do this job. So that's that. All right, let's see. Okay, we used the Explorer. So let me see here. There was one of these charts that had quite a few signals on it. I'm going to try to find it real quick because I kind of need more. Nope, not that one. But more signals. Not quite. Nope. Nope. Not too bad. Well, okay. So the other feature here that some people want to use it, some won't really care that much about it, but because it's artificial intelligence and that we are measuring the accuracy of the rules, you can say, I do not want to see any rules that are under 75% of the rate on the rating. So you just check that. Oh, I see why it's not showing me trades. Jeff, you need to pinch me over here or something. I mean, geez. Come on, Ed. Wake up. Okay. Once it stops spinning, yeah, you kind of need to turn them on, put them to work. So you do that for the training, to just train to one, but then if you're going to look at them, this drives training and seeing them. So, all right, now I got it. I was wondering why there's so few trades out there. That's more like it. Okay. So if I go back into the engine again and select an accuracy rating, so right now I'm at 75. So these are the 75 plus accurate signals. You can see they're really pretty good. So any that I click in here, they better not say less than 75. I'll be really upset with it if it does that. But see, 75. So and you can see how good they are. I mean, they're all like pretty much. This one, 6% profit trade, 185 samples in the historical data that it found that. Now here's a swing trade here. What's it like? 75, 6% also. So that's what that is. So I can go back into it. Let's make it really tight. Like, oh man, just show me the Holy Grail stuff. That's what I want to see. Okay, so let's go to 80. Oh, all right. This kind of yes. I'm filtering out all the rules that are less than 80. Okay. This is where I need the Jeopardy song right here. Come on, let's go do it. There you go. All right. So close that. Let's refresh. And you should see quite a few of them go away. And hopefully, well, yeah, pretty much. You can't really tell. Let's go to 90 just to see the effect of this. So 85 plus. And then we'll go through a few charts. Go to the right. And then there's probably questions on this, so we can stop about 10 till or so and field those. All right. So we're on Amgen. And so I saw some go away, not very many, but let's go to the right here and just kind of go through some charts. So it will, tend to fire pretty much, it'll increase the accuracy by several points if you do this, by about 5%. It looks like there's more signals than there should be at that rating. So I'm thinking if I missed something. I don't think so. It should be right. So
you hit refresh on the chart, right?
Yeah, and then I'm loading new ones. So, and I know you've used this, Jeff. Am I missing something? I think that's it. It's just that. And yeah. So it is. Yeah. So your quick move is designed for very, very short moves like that. So yeah, go ahead.
Oh, I didn't have anything super constructive, but I did notice a lot of signals seem to go away when you charted out the 85%. So
yeah. Now I'm noticing though, see, I'm missing something. I need to go read the manual because that says 66. It should say it should only show the 80s plus. And so, that is strange. What am I missing? I'm missing something. What is it? It's training, 85 plus. Let me just try this real quick.
Do you have the retrained expert or the other expert attached?
This is the one that's distributed with it.
Okay.
So yeah, I can try.
Sure, it's something. We're gonna get done, and you're like, oh yeah, that's.
I know. Right after it's gonna be.
That's what always works.
I know. Let me try this one. We'll just activate that expert. So I've got 3 here. I've retrained these 2, and so let's just see here what we get with 80 on that expert itself. That was retrained for a demo. I'm not sure. It wasn't trained for very long, but let's just go and click at some of these. One of these here, like this one. Not there, like there. Nope, right there. 82. So I may have messed it up by retraining and stopping it. Maybe. I don't think so, but maybe. But yeah, now it's just showing the ones above 75. So and only quick move because that's the only one that I trained. So there and there. Yeah. Right. Everybody sees that. There's that set of experts. I just turned on quick move and trained it for a demo. And so here's the outcome of that. I only trained it for like 5 minutes or something. So you won't get many rules. You have to let it run for a while to get enough where you'd see signals across the chart. But a couple more little tests here. I can take the questions. Yeah, 81. Okay. Again, just to be clear, this was a demo. This is not the actual product that when you open it up that you get. 82. So yeah, we'll go back to the original here. I'm going to have to figure out why when I click this one, I don't see that. And I just don't know right now. Let's try 75. So if you get any questions out there from our audience, folks. Oh, the one, I got one more slide to show because this is a question I always get. Well, that's finishing there. Okay. And this is that RSI3 system basic versus just the RSI3 without any AI, just firing every signal. So obviously it's going to be better because that is a losing system just by itself. So you can retrain the experts on any market, any time frame. If you're trading Forex or futures, it just doesn't matter. It doesn't care. It's looking at volatility, gaps, volume, technical indicators, the relationship between them, one moving average above another. All these genes in those rules, the chromosomes, are very generic to charts, and so it doesn't really matter what you throw at it. You just retrain to that chart, and it really works pretty well in real time, honestly. And it's fast enough. You just don't want to load a lot of bars in real time. A couple hundred's fine. But if you're looking at the right edge and trading it, you would want to limit that. Okay. So for my summary for Fulgent AI, it is integrated seamlessly, runs in the background, four powerful experts, and you can retrain it on your stuff, your indicator that you put in that little file that I showed you, for condition, your symbols, and your time frame, and it just works great. All right, so I think that's well, I do have a summary package, but I know you're going to talk about this, so. Are we still on? Are you there?
Yeah, you're still on. You're still on.
Okay, didn't hear you. So yeah. All right. So any questions from anybody?
I don't have any questions. What I do really like about this package, it's so interesting to me, just in general. I'm just going to talk a little bit about it.
Yeah, sure.
Is now that AI is kind of all the rage. Everybody's slapping like this AI logo on things, and just because they have like a little simple algorithm doesn't necessarily do any artificial intelligence testing. They call it AI, and it's not. What I like about this is I like the way that you explain it, the fact that it goes through and does genetic rule testing and all of that kind of stuff. I love the fact that you can go in and train it on those stocks that you want. If you're using a MetaStock system and you want to be able to kind of AI your MetaStock system, you can take any MetaStock formula and plug it in, and it'll use that. And you did just a fantastic job on this. And I'm going to talk a little bit about how people can get it.
All right. Awesome. All right.
Thanks for coming in too.
Hey, I really enjoyed it. First time off camera, it was kind of fun actually, but we'll get it fixed.
Yeah, it kind of takes. Yeah. It's less stressful, I'd say, when you don't look at yourself while you present.
It's much less stressful.
For sure. All right. Thanks a lot, Ed. I'm gonna boot you out now.
All right. Take care.
You bet. Okay. Very cool. Let me go ahead and make me the presenter. And speaking of being on camera, let's do that. All right. Very cool. So yeah, let me go ahead and show my screen. I assume that if there's any issues or if I'm sharing it looks like the right screen is sharing, I just like to take a second extra to just make sure it works. But I do really like the way this is working. If you're kind of new to MetaStock and you don't make your own systems and you want to do AI, this is a great way to do it. If you want to create your own systems, but then also have them enhanced by AI, Fulgent AI, just the engine that he builds does such a great job. And I love the way that he explained how artificial intelligence works when you're doing artificial intelligence backtesting. And Ed's been doing it for a number of years. It's gotten kind of popular, and a lot of people have slapped the AI label onto things. But this does a genuine artificial intelligence backtest. And it does a really, really good job on it. So with this, normally the Fulgent AI would be $19.95 as a one-time cost. It's $7.97 here at the event. You can do this a couple of ways if you want to get that, if you want to try it. Like I said, if you're new to using MetaStock, you just want to use some of the built-in systems, that's great. If you want to use AI to kind of test your own trading ideas, it's great for that too. So $7.97, we do back that with a money-back guarantee, so you can try it. If it's something that works well for you, if you like it, go ahead and keep it. Otherwise, you can get a refund. And so with every product we sell, we try and make it as low risk as possible. So there's a couple of different ways you can do that. You can go to you can call us. You can call us at 800-882-3040. You can, if you have more questions, you can go to metastock.com/sales-chat. And you can also go to metastock.com/promo. All right, very, very good. Let's go ahead and kind of just I talked about stocks and commodities last time. Maybe I should just stay with that. Yeah. So I do want to thank all of the sponsors that have helped us make this event possible. AAII, the CMT Association, and Stocks and Commodities Magazine. Stocks and Commodities Magazine has supported us ever since we started doing the event. I remember we called them up and we're like, we got this idea. We're going to get all these instructors together. We're going to talk about trading. And it's worked out really, really well. And they've supported us every step of the way. They've been publishing magazines since 1982. They've got 1.3 million subscribers, 1.226, done over 17,000 articles. If you want to find out more about Stocks and Commodities Magazine, just go to traders.com and they can kind of help you get set up. And it's a great magazine. We appreciate their support, their help, all the stuff that they've done over the years. So, and then I'm going to go here. We're going to give away the final prize. And so I'm going to kind of outline the rules for you again. I know I've kind of gone through them a few times, but I know there's a lot of you that have joined us on YouTube and a lot of you that have been here all day and all that kind of stuff. What I'm going to actually have you do is type in a number in the chat box, anywhere between 1 and 9,425. You're going to give me a number. That number is going to interface with like a registration sheet that I've got here. I'm going to take one of those numbers just kind of at random, and that's going to be the person that wins the prize. What am I going to give them away? Okay, go ahead and start typing the numbers. I'm going to give away 3 months of MetaStock Real Time. Our MetaStock Real Time has been what we've been using today. Everything we've shown is showing you how to scan markets, test trading ideas. Scott showed the forecaster and how it works. Gives you real-time commentary, alerts. I'm going to give you 3 months of Zenith. Zenith was created at the cost of over $1 billion. It was initially made by Reuters, who then became Thomson Reuters. They actually made it as Thomson Reuters. Blackstone bought it, and then now it's part of London Stock Exchange Group. But the thing about Zenith is it's a it's a great news service that is very comparable to like what we'd say with Bloomberg, which is almost $2,000 a month. It compares very well to that. I'm going to give you 3 months of our what we call our MetaStock Zenith program. It has all that news, all the fundamental, all the macro, hundreds of news bureaus, thousands of reporters, just probably some of the best news in the business. So I'm going to throw that in. Of course, we're going to give you 3 months of a product called Learn MetaStock as part of it. Learn MetaStock, Kevin's going to come in. I think he talks tomorrow. He's going to talk about a strategy. Oh, shoot. I just, dang, why am I just trying to Kevin teaches how to use MetaStock. He runs a service called learnmetastock.com. Great guy. We're going to give you 3 months of that service. That's worth $300 there. And so let's go ahead. Let's pick a winner. That's what you're going to get. Lots of people. Sandra said, Sandra, Mike, Reed, Vincent, Dennis, Andrew, Lowell, Alicia, Andrew. Thank you, everybody, for putting out some numbers there for us. I'm going to go ahead and go with 2343. So thank you for the numbers. 2343, let's figure out who that is real quick. And you win the MetaStock package. So, okay, 2343. Okay, and that is Clark W. In the USA. So Clark, I'm basically going to make a record of you. I'm going to go ahead and put you down on our prize list. I'll get in touch with you next week after the whole big conference is done. And we might need to get a little bit of data from you. We need stuff from the exchanges, or to make sure that we have the right stuff for the exchanges, because they're a little particular about things. But I'll reach out to you next week. I'll contact you about your prize, and we'll help you get set up. So if you want to get that same special, get in touch with us. You can scan the QR code here. You can go to metastock.com/conf-promo. You can go to metastock.com/sales-chat. You can give us a call, 800-882-3040. Now, our next guest, I'm very, very excited to introduce. It's his first time here. He runs a company called Passarelli Research. Here's a picture of him. And it's his first time. I'm very, very interested to see. I will say this. He's super nice. Like, I've talked to him several times on the phone. He does a great job. He sounded really smart. So, John, how are you doing? I'm getting no audio from you, but I'm going to send, I think that fixed it.
Okay. How are we doing now?
Woo-hoo. We have 2 thumbs
All
up.
right.
All
Hey,
right.
listen, we got a picture and we got some noise, so that's a good start.
Very cool. If we get some questions that come in through YouTube while you're presenting, I don't know if you have the stream open, but I will pass them along towards the end.
Sure, that's fine. The next thing is to get my screen showing here.
Yep.
So
I'm sending it over to you. It should pop up and say, hey, do you want to share your screen? And I'll make sure I can see it before I let you go. Better returns, less risk. Sounds good to me.
all right, cool. So I think that works. Let me see if I can move some of this over so I can see. I've got a few windows to adjust here, and I'm all ready. So I'll begin whenever you want me to.
Yeah, I'm ready for you to start. Mike C in YouTube says, I listen to your podcasts. You're awesome. So there you go.
Thank you.
What a way to start, right?
Yeah, that's. I think I'll quit now while I'm ahead. How's that? No, that's good. Thank you very much. So many thanks to MetaStock for the opportunity to participate here. I've actually been using MetaStock for close to 30 years, if you can believe that, along with other charting software. I've been doing this all my life. I still use an older version of MetaStock for presentation purposes, and you'll see that here. It's kind of like this old Chevy that I have that I'm real comfortable with. It's very easy to import data series into. I look at a lot of, let's call it not your mainstream data. It's not just, stochastics and MACDs for me. Over my career, I've imported all kinds of Fed data. And I was able to use MetaStock for that early on. So I still have an old version that you're going to see here. So we actually just bought our newest version. My son, Jack, he works with me, and we're anxious to get our new updated MetaStock loaded up so we can start to use it. For the record, I'm not being paid by MetaStock or affiliated with them in any way, but I've been using the software for a long time, and I could tell you that they're the guys that have helped me over the years, the technical support guys, have gone above and beyond the call of duty. So, kudos to those guys. Finally, the purpose of what I'm going to show you today, this is actually kind of a version of a report that I do for our subscribers, our clients every month. And the report works really well, I think, for this kind of a presentation because it shows you the approach to markets and the kind of system that I've developed to systematically look at a lot of different data and then try to assimilate it into some kind of an actionable plan for either trading or investing. I've been doing this for a long time. Let's see if we can get this to work. How about that? Yeah, so I've been doing this a while, like I said. I spent the 1980s and most of the 1990s on the floor of the Chicago Mercantile Exchange in Chicago, the Futures Exchange, back when open outcry was its heyday. And I left the floor in the late 90s because I felt like I was on the Titanic, and I saw what was coming. I saw that it was everything was going to move electronic, and I had been on the floor for 20 years and kind of a younger man's game. So I got off the floor. I started Asbury Research, my company, in 2005. We're an RIA, and as I mentioned, my son Jack works for me. We're a small family firm, Jack has been helping me build models for years. Like some dads might go fishing, or go play golf. Jack and I like to build models together, so it's been really nice to bring him out of the business. Basically, what we're trying to do is look at a lot of charts and just get some hard answers. So we look at markets kind of broken down into two questions that we're trying to answer. The first one is, should I be in the market? How aggressive should I be? Or should I be defensive? Should I be risk off and trying to pull back equity exposure, maybe participating in parts of the market that are going to help me play defense. So that's the first part, is should I buy? And then the next part is what should I buy? Where should I be involved in the markets? So we've built some models to accomplish this, and we look at a lot of relative performance to see what's outperforming. Seeing what's outperforming oftentimes can tell you what the market's thinking, and you can see it easier than you can if you're just looking at a chart of the S&P or a chart of the Dow. So 2 questions: should I be invested? Yes or no? And what should I be buying or selling? That's basically what we're trying to, distill down to. It's really easy to get caught up in a million indicators, right? And you can make your indicator tell you the answer you want. All you have to do is change the time frame. So we're really strict about what's a tactical indicator. Tactical for us is 21 business days. That's the thing that tells us when to get into a trend and when to get out of a trend. Strategic for us is a quarter or farther, a quarter or longer out. So for our strategic indicators, we use the 63-day moving average. So we're never confused as to what we're looking at. Strategic is the trend we're trying to catch. Tactical is telling us how to try to get in and out of that bigger trend and maybe walk away with 70% of that trend. The tops are hard to get. The bottoms are hard to get. If you can get the 70% in the middle over and over and over again, that's a really disciplined approach to trading markets as I see it. So we've built some models. We're going to look at these as we go through. The correction protection model is for wealth preservation. As you can tell, I'm not 35 years old. Many of my clients are of my generation. And these guys want to know how to play the game with less risk. When I was 30 and in the pits, I was taking shots, right? I was a young guy. I had the rest of my life to dig myself out of whatever error I might have made on the floor. It's different now. I trade differently. It's like football, right? When you're in the first quarter, the team's taking chances. You'll take a couple shots downfield, maybe some trick plays. If you've got a lead in the fourth quarter, you want to keep it. So you play the game differently, right? You run the ball. You make sure you hold it with both arms. That's kind of where the correction protection model fits in. So we'll take a look at that. Our Asbury 6 model is really an indicator. I looked at probably 20 different tactical tools that I liked and found useful throughout my career, even going back to when I was on the trading floor, started to put them into groups of 3, groups of 4, to try to discover what the internal health of the market is on a day-to-day basis, just like your doctor does. When you go for your annual doctor's visit, he sees you come through the door. He maybe will make a visual guess or an assumption of what your health might be, and then he sits you on the table and he's taking your pulse, and he's checking your reflexes and listening to your heart and lungs so he can see what's going on under the hood. That's what the Asbury 6 does for the stock market. The reason that I put it together is, again, I've been doing this a while. Over the past 10, certainly 5 years, you're seeing a lot more situations where the market's up 40 today. Tomorrow it's down 30, and the next day after that it's down 30 more. And you're starting to second guess your research, right? Should I have bought this thing? What's wrong with the market? What aren't I seeing? And you start doing what we all do as human beings, and we start letting our emotions take over our brain. And that can be very, very expensive. So I kept this internal for years. This helped me to make sure that I wasn't making mistakes that my clients might make. I was keeping really objective in watching the facts, so to speak, watching the data and not getting wrapped up in this, computerized trading algos. By some accounts, it's 80% of the volume every day. So I'll show you how we use this to keep us focused on what can't be manipulated or controlled on a day-to-day basis. Our SEEK model sector rotation. I had a great sector rotation model 10 years ago, but it was based on a lot of it was based on the observation of looking at the charts and seeing the relative performance between those 11 sector spiders and the S&P 500. What happened was that market sped up. Anyone that's been doing this for a while has seen that. The sector rotation used to be a quarter or two for a given trend. Now, if you get 6 or 7 weeks out of them, you're doing great. So what does that mean? That means you got to get into these trades faster. You got to see them faster, and you got to be more agile to get out of them faster. SEEF model helps us do that by following asset flows rather than performance or relative performance. We'll look at that. Our CARP model, CARP is cross-asset relative performance. It's an acronym. We'll take a look at CARP. CARP just looks at 9 different equity-related relative performance relationships: stocks versus bonds, growth versus value, small versus large, high beta stocks versus low volatility. It's stuff like that. That can tell you not only where to be during a trend, but it can tell you when a trend might be starting to change, where these offensive relationships like growth over value might start shifting into value over growth, which is a way that you'll often see the market start to lose its mojo going higher even before you can see it on the price chart of the S&P 500. And finally, our U.S. versus the world model is global asset allocation. It looks at 25 different foreign equity markets versus the S&P 500 in 3 different time frames to try to determine where the opportunities are overseas. So I like to start these out. This is a few days old, right? We actually prepared this over the weekend based on data through the end of last week, but because the market is waiting for PCE tomorrow, it's flat as a pancake here. So really nothing has changed since I put this together at the end of last week. So briefly, S&P 500 remains in a November 2nd tactical advance within its larger strategic bullish advance that began back in October of 2022. Since the second week of January, the tactical trend has been driven by a very narrow group of mega cap names that have to do with tech and particularly AI. We've got names here. About a week ago, I just kind of looked at some of these names that were driving the bus for the market. Microsoft, $3.1 trillion in market cap. Amazon, 1.8. NVIDIA, 1.7. And Meta was 1.2. Together, this is about a week or so old, but when I just did a little back of the envelope, that was 19% of the market cap of the S&P 500. So that's what's been driving the bus. I think everybody knows that. So one of our key areas of focus this month or during the month of March is going to be the current asset expansion and relative outperformance by the NASDAQ 100 or the Qs. We're going to look at that chart because assuming that you're not going to have a new group come to the rescue of those 3 or 4 names when they ultimately will roll over and have a correction, it's imperative to understand. It's a key focus of mine to watch relative performance and asset flows that are going into the Qs, because that's going to be a heads up for me on what's really been the engine, at least since the second week of January, as far as iData shows us. Size, large cap, has been in a January 25th trend of strategic relative outperformance versus the S&P 500. That trend has been choppy, but it's still intact. Growth stocks, SPY-G is what we use for that. It's an ETF. They're in the midst of a January 17th trend of strategic relative outperformance versus the S&P 500. So where to be? Right now, since the beginning of the year, it's been growth and it's been large cap. So if you're a private investor or if you're a money manager and you're looking at this giant universe of stocks, the first thing that you want to do is filter it down. So you're looking for specific places to look for opportunities. So right now, at least since the beginning of the year, large cap and growth is what's been outperforming. Next, domestic asset allocation, that's the CARP menu that the CARP model rather, that I had just talked about a moment ago. 4 of the 6 domestic relative comparison relationships in CARP remain in a strategic, which again is a quarter or larger, according to Asbury Research. It's been on a risk-on alignment for effectively since the beginning of the year. Everything has been tilted towards offensive. What does that mean? Like growth versus value, or technology over broad market relationships of that kind. Global relative performance, according to our U.S. versus the world model, just one of the 25 global equity indexes that are represented in the model happens to be Japan, is currently outperforming the S&P on a tactical, monthly, and a strategic quarterly basis. So what does that mean? It means right now is not a good time to be investing overseas because the U.S. is outperforming the world, except for one outlier, which currently is Japan. Sector selection, sector rotation. Our CEF model currently favors technology, financials, and consumer discretionary. That's XLK, XLF, and XLY are the tickers. We're going to take a little closer look at that in just a moment. And finally, U.S. interest rates. After bottoming near 380, that's the yield of the 10-year, bottoming near 380, those yields have made a positive major trend change that targets a potential rise to 460. If we get a rise in rates from here, that's more than just a few bits. I think that could potentially put some pressure on the stock market. So at the very end of the presentation, we'll take a little bit of just a small look at rates, just a few charts. So let's begin with the process. Again, this is how, for me, if you're going to be effective as an analyst, if you're going to be effective as an investor, you have to have a certain process. I almost think it's more important to have a process that you could follow every time than to have the best process in the world. Just swinging the club the same way is kind of how I like to look at it, to use a golf metaphor. You start big and you work small. So this is my process. This is Asbury Research's process with a lot of our own models interjected in to try to look at, I probably look at 200 charts before I actually put this together, and it gets distilled down to what we're going to look at today because the market changes. It's like building a house, right? You don't always use a screwdriver to build a house. You have a hammer and a wrench and a saw and other tools. The markets are very much the same way. So as the market conditions change, as the environment changes, different tools tell us what we need to know about the markets. That's why I go through this sifting process. So we start very big, and we're going to start with price and trend. Semis continue to lead, tech testing major resistance. So here we've got this Phillips Semiconductor Index, the SOX index, going back to the fourth quarter of 2021. So simple takeaway here is SOX is leading. It's very, very strong. It broke out to a new all-time high back in December 26th, broke out before the rest of the market started to catch up. And you can see that the 200-day moving average in orange, which is the major trend proxy that you can't really watch CNBC for more than 10 minutes and not hear someone talk about the 200-day. So we don't look at the 200-day because it has any magical features to it, but it's what the market's looking at. I want to see what the market is looking at rather than try to tweak my moving average so they're a little faster than the market. I don't use them like that. I want to see what the market's thinking. Like I've got financial TV on right now. Of course, I've got it muted because I'm talking to you. But when I was in the pit, I always had that sound in my ear. I can hear the roar. I can kind of get a sense. I can walk around the floor and get a sense of what was happening. There's a lot of emotion in the market. And by having the TV on for myself during the day, it kind of replaces that. I hear the buzz. What are the sales guys talking about? What are the analysts talking about? What are the talking heads seem to be focusing on today? And then that and looking at like a simple 200-day moving average, the major trend is up. The 50-day is the minor trend, that's up. So very simply, the SOX is in charge right here. And then if we go to the right, we've got the NASDAQ composite index. That's the larger, more broad of the two NASDAQs. This looks a little different, right? We're bumping up against this major resistance level at 16,212, which the high from the end of November or the end of 2021. It was November 2021. So I've got my eye on the comp all week, especially knowing that we have PCE coming and inflation gauge, right? That's the Fed's favorite inflation gauge is going to be tomorrow at 7:30 Chicago time. And so it's important to know that the stocks is off to the races, but the comp is got a barrier here that we need to be aware of. So we move forward, price and trend 2, and now we've got the Russell 2000 on a weekly basis. This goes back to 2018, and interesting chart to me. Look how long the Russell has been kind of parked in neutral. It came down in May of 2022, and it tested its August 2018, January 2020 highs here. Let's just call it around 1730. We've had 1, 2, 3, 4, 5, 6, 7 bottoms there, and then we had 6 tops at the August 22nd high here of 2030. So it's been kind of like a ping pong. It's kind of like Pong. If you're as old as I am and you remember Pong, it's playing Pong here, right? Between 1730 and 2030. Until we come out of this range, there's really not a lot to be gleaned, from Russell. So we're not going to focus on that right now. The Dow's a different story. This is the Dow weekly going back to 2019. So major support here at 29,569 from the high that we made back in February of 2020. We came down and tested it twice in June and October of 2022. We came back up, failed to take out the previous January 2021 high, came back down, loosely held the 200-day moving average here in orange. Now we've got a pattern. This is a symmetrical triangle pattern. If you're looking at chart patterns, I've been a CMT since, I have to look up on the wall, since 1999. One of the first things we learned about was chart patterns. I don't use chart patterns on a short-term basis anymore. Why? Because I think a lot of the short-term trade is controlled by day trading, algorithmic trading, a lot of the computerized trading, kind of trying to push our buttons, shoving the market. And I saw this happen in the pit, right? I mean, when I was working in the pit in the 1980s and 90s, the locals would get a sense of where the stops might be. So they push the market through the stops, and then they'd run them back the other way. We get the same thing going on. It's the same game, but now you're doing it with a computer and a lot more stealthy and a lot more size. So the little patterns, to me, I look at them with the jaded eye. These big ones can't be, they're too big to manipulate. It took too long to make these patterns. This pattern took, 3 years, to actually come together. Anyways, we broke out of this pattern. It targets an eventual move up to 41,500. That's 6% higher, give or take, of where the Dow is trading now. The flip side of that is we could correct all the way back down to the top of the pattern here, which is roughly where the 52-week or the 1-year moving average is at 34,875. This means we can have a correction here. Market's due for one. I don't know if it's going to come next week or next month or next quarter, but we can have a correction in here. And as long as we don't take out this bigger support level on the Dow, targets 41,500. Why do I care about that? Is because bigger picture, if we do go into a corrective phase, I want to have a sense going in of if this is the big one, right? And this is a huge bear market, or if we're going to have a decent correction. We can correct 10, 11% in the S&P 500 and still be above the 200-day moving average. So this gives me a bigger picture sense of the small part of it. If we do get a correction in here over the next month or two, what do I think it might be? As long as you don't break down through 34,000, let's call it 900, we're still looking at an unfinished target up above the market. This is just the S&P 500. I want to know where the support levels are. So do my clients, so do our subscribers. So we've got some minor supports here at 50.48 and then at 49.20. The most important support, and when I look at support, I want to look at confluence of several different support levels all kind of coming together and pointing at the same area. So we've got the January 31st low. We've got the January 22nd old high here at 48.19. And then we've got the 50-day moving average kind of coming right through the middle of them. So basically 48.50 to 48.20 is where what we would call primary tactical support. If that's broken, you're looking for a bigger move down. And again, 4,500 effectively is where major support is at the 200-day moving average. So this is my playing board, so to speak. So I can look at this, then I'm going to look at some of the indicators that we're going to look at going forward. And this gives me an idea of how to manage expectations. If we get if the Asbury 6 turns red, turns to negative, how low can we go? Which levels do I need to pay attention to? Which levels should I be buying off of if we hold one of these support levels and I see our model start to turn higher again? So enough said there. Relative performance is really important to me. This is the SOX ETF, iShares Semiconductor ETF, and here's its relative performance down on the bottom versus SPY. It's been in a trend of quarterly, 63 days in a business quarter. That's our strategic time frame for Asbury Research. It's been in the trend of outperformance to the quarter since November the 10th. Bottomed right around the 200-day moving average, about a week or 10 days or so just before that. And this outperformance has been driving the market. It's been a major driver. Interesting that we made a new high here in the index. We haven't in relative performance. So is this something to be really concerned about? No, but these are little nuances that I watch to try to see what the market's thinking on a day-to-day basis. This is the NDX. This is one of the most important charts I'm going to show you today. I made a reference to it in the beginning. This is NDX, which is NASDAQ 100, the 100 biggest names, and this is NDX versus SPY. So basically, since late January of last year, it started outperforming SPY, NDX did, on a quarterly basis, our strategic time frame. And look how many times that it was tested. August 18th, minor bottom. August 26th, more important bottom. December 5 and Jan 4, two little bottoms here, and now we're testing it again. If this starts rolling over and underperforming on a quarterly basis, that tells me that that big driver that we've had since the second week of January is starting to sputter a little bit, starting to underperform. So this, if I had to pull out 5 charts and show you in an elevator ride, this definitely would be one of them. Let's look at some more relative relative performance rather. This is IWM, which is the iShares Russell 2000 ETF. And what we have here is relative underperformance versus SPY from mid-August to Thanksgiving, let's say, of last year. We had a little bit of an outperformance spurt here, and now look what's happened. Since January the 16th, relative performance line drops below its 63-day moving average, comes up, retested a couple of times here, and is starting to resume that outperformance trend. What does that tell me? It tells me not to be buying small cap here. If I'm buying something, I want to buy something that outperforms the S&P. I don't care if it's a commodity, if it's gold, if it's crude oil. When I'm buying stuff for my account or I'm making recommendations for my clients' accounts, I judge everything by the S&P 500. If it's not beating the S&P, why not just buy the index and save yourself all that hassle? So this tells me I shouldn't be in small cap right now from a relative basis. This is the Dow versus the S&P, which can be a very good indication of what the market is thinking. When I talk about the Dow, I talk about the Dow as kind of a burro, right? That's the sure-footed, slow animal that you want when you're on a slippery track. When you're on a racetrack, you want to be in the NASDAQs. So right now, well, you can see here underneath, this is the Dow versus the S&P 500 underneath here. From Jan 7 to August 4 of last year, the Dow was outperforming the S&P. Look what the S&P did. Had a really nice move higher here. Then it started sputtering here. The S&P lost some ground. Now it's starting to underperform again. that is tactically bullish for me, because even though the market's overstretched, you don't see any money going into the Dow right now versus the S&P. It's still underperforming. When we go, ultimately, whenever that may be, whenever we go into a correction, you're likely to see the Dow start outperforming the S&P 500. That isn't happening yet. Let's look at some individual stocks, since kind of that's where the action is right now. That's the game right now. This is Microsoft, number one in market cap. This is Microsoft down here versus SPY, versus the S&P 500. Look what's going on here. It's starting to edge below its 63-day moving average. What does that mean? It means that Microsoft is starting to underperform the S&P 500 on a quarterly basis. Is that a huge deal? No, because this trend is really still being tested. You know, this quarterly trend of overall outperformance is still being tested, but it is starting to lose some of its mojo. So I want to keep an eye on that one. This is Google, or Alphabet, number 5 in market cap. It's bumping up and failing at its November 2021 and February 22 highs. That's important to me because it carries a lot of weight. At number 5, it carries a lot of weight. So as long as it stays below 151 spot 85, I'm a little concerned, because that's one of these big drivers that, again, has made this quarter thus far, it's made the rally happen. Number 2 of key stocks, Amazon, bumping up against its March 2022 benchmark high. It's eking above it a little bit. I didn't see what it did today, but again, another big name, number 4 in market cap, that's negotiating meaningful resistance level. Number 4 is NVIDIA. The reason I put this in here is just to show how strong this has been. Since there was a news story out, my work focused a lot of this big jump in the market to the second week of August, or the second week of January, rather, specifically around January the 8th. So I started Googling around and looking for a news story. I don't have it in front of me. I don't recall exactly what it was, but it was a news story about some new situation in AI stocks. And it talked about NVIDIA and MetaStock, I believe, specifically. And since then, so I don't have to know what drove the market higher. I just have to know that it's going higher and jump on board. But when I see something happening on a certain date, I usually dig around for it just to say, hey, is this something here? Is this something that's in the news? And it definitely was. For anybody who wants to know, I'll even dig it up and try to send it to you. But if you Google around and put those names out there, you'll see it. NVIDIA, since January the 8th, up 59%. NVIDIA versus SPY, versus the S&P 500, up 38%. I just put this in there, just how important it is for these big stocks to continue doing what they've been doing in order to hold this rally up. Our CPM model, CPM is Correction Protection Model, CPM. It's an acronym. I built the first version of this probably around 2009, 2010. I had a bunch of RIA clients that didn't know each other, all kind of call me within a month or two period and say, listen, we had customers that got murdered on the way down during the financial crisis because they didn't want to get out. We stayed too long or whatever. We stayed too long. We finally got out. It was near the bottom. The market was down 30% plus. And then the market started to turn up. You remember we had the situation, it was early 2009. We had the situation with the auto business that the government came in and tried to correct that. And then we were off to the races. So now those same investors are mad, right? They're saying, oh, you got me once, but you wouldn't get me twice. The market came back almost all the way back, and they were still kind of folding their arms and, saying, you're not going to fool me this time. So they asked if I could just build a model that was simple, binary, risk on and risk off, that would limit downside risk for older investors and not let their emotions trade them out of their retirement. So this is the CPM. It's been risk on as of November the 2nd. when the ranges are small, the signals are small, they tend to be closer together when the ranges are big. You can see August 23rd of 2022, it caught the top pretty close, caught a nice bottom here, October of 25th. We were in a real tight range here in April and May and March of last year. Signals came tighter, but generally it does a pretty good job of picking out the tops and the bottoms. And here's November 2nd. We're still on this long November 2nd signal. It's data-driven. It's a number of different metrics. It's kind of a secret sauce that we have put together and built some rules around to be able to do this. It was meant to be a wealth preservation tool, play the game with less risk. There's no options involved. There's no hedging involved. It's binary. It's risk on, it's risk off. Averages about 5 round turns per year. I was trying to build a model that would have 1 every quarter. So I didn't quite get there, but I got close. Annualized return very comparable to the S&P 500, according to and significantly lower risk according to standard deviation, beta, maximum drawdown. If you don't know what all of these means, Investopedia is a fantastic resource for this. Better risk-adjusted returns according to Sharpe ratio, Sortino ratio. And we also built a way to make this into an alpha-generating model by using leveraged ETFs. I never, ever recommend using leverage to people that I don't know. But if you go to asburyresearch.com and go to models and go to CPM, there's some details there. Basically, it is pretty close to the S&P 500 since the last quarter of 2017 through the end of last year. It's on average, it trails the S&P by 0.2% a year, but with a beta of 59 compared to 1.0 for the S&P. Maximum drawdown of only 20% compared to 34 for the S&P. Standard deviation 12.4 versus 17.7. So if anybody says you can't time the markets, what they're really saying is I can't time the markets, so I don't want anyone else to either. Can we do it all the time? No. Is it difficult? Yeah. But there are ways that you could quantitatively reduce your risk by just putting together a repeatable process that keeps you from taking big hits that can really affect how well you do over your investing lifetime. Here's what the chart looks like. CPM versus SPY or via SPY, the CPM signals, the 5 round turns a year. That's the green line. The blue line is the S&P 500. You can see it stayed pretty close. It really doesn't deviate from the index too far, but with a lot less drawdowns. This is just the year by year. All this stuff is on the website. I'm not going to spend a ton of time on it. Our Asbury 6, as I mentioned, that's an indicator. It's meant to be a lot more volatile. We have done some back testing with it by wrapping some rules around it. That's on the website as well. But for our purposes here, all that is it's a metric to tell us what the condition of the market is. The analogy that I use for going to the doctor's office. You can see a bunch of arrows here since the beginning of January. Why is that? It's because while those 4 stocks have dragged the market higher by its hair, the internals that we look at, and we're going to look at them in just a moment in the Asbury 6, have been kind of blinking back and forth between green and red and green and red. That's because if you're not just looking at those 4, the market looks a whole lot different than it does, when we look at the S&P and say, my God, that S&P is strong. It's really not. Just as a little side note, shares outstanding in SPY have contracted by 8 or 9% since 2 days after Christmas, while the S&P itself has risen by about 7%. Why is that? It's because there's a lot of redemptions going on as the S&P 500 goes higher. The NAV is keeping the AUM in the S&P 500 about where it was right around Christmas time. But the reason that's flat is because the NAVs are jumping higher, but there's actually selling going on. There's redemptions. They're actually redeeming these. There are less shares outstanding now, 7% less shares outstanding now than there were right after Christmas. So hopefully that wasn't too much in the weeds. So here's our Asbury 6 right now. We've got all 6 are green. These are the dates that they've all turned green. Let's look at them individually. MetaStock has a bajillion different indicators, anything that you could think of. So you could consider building your own metric like this. Your favorite indicators that work within the time frame that you're comfortable with, that will tell you internally how the market looks, instead of chasing the S&P's tail every other week, where it runs, it forces you in and then it takes you out and then it forces you back in again. So here's the 6 that I use for the A6. I use the monthly rate of change in the S&P 500 along with the 21-day moving average. Why the 21-day? Because it's a tactical tool for me. It's a tactical tool for Asbury Research, so we look at it through a monthly lens, a 21-day lens. You can see it's positive, but just barely eked above the 21-day moving average a couple of days ago. You can see it really hasn't, this was strong, big, strong monthly rate of change here, which gave us all of this. This monthly rate of change here has been sloppy at best. So it's positive, but it could turn negative very easily. It will be especially negative if it goes to the 0 line, because that will really change the indicator for more of a broad sense. This is the relative performance of stocks versus high yield bond prices. For that, we look at SPY versus junk, the ticker SPY versus the ticker junk. When stocks are outperforming high yield bond prices, the market goes up, as we have done since November 6th, right here. So this is solidly in positive territory. That's number 2 of the 6. Number 3, ETF asset flows. This is what I'm talking about here a couple of slides ago. S&P 500 has risen by 7% since the end of December. But look what the AUM has done. We're still trying to get above 486 billion, which is the all-time peak that we set on December the 29th. How can that be possible with such a strong market? Again, shares outstanding. There's redemptions going on. There's selling going on of SPY into this rally. Is it positive? Yeah, it's above the 21-day moving average, but it wouldn't take a whole lot to knock this into negative territory. This is volatility via the VIX. I look at the VIX with the 21-day moving average for the purpose of the Asbury 6. And you can see it's edged below the 21-day moving average, which indicates investor complacency. But look how flat it's been. It would only take a couple days, a couple of bad days, to push the VIX back up through. This is about 1440 up at these recent highs. It gets above there and stays there. That tells me the market is afraid enough to have a sustainable move down. Volume. I like to use cumulative volume. I think it's a lot more revealing than trying to look at the raw volume, which to me is like looking at the EKG of a man having a heart attack. So this, you can see, very smooth cumulative volume index on November 2nd, which is incidentally when our CPM went to risk on. On November 2nd, it got up above the 21-day, had a little stutter step here about a week later, but all this volume strength coincided with a nice move higher in the market. But look what's happening here. We're sitting right on that 21-day moving average. If this rolls over, it's negative. What happened the last time it rolled over? September 18th to no 1st gave us this decline on the S&P 500. So again, positive, but looking at this thing a little bit closer, it wouldn't take a whole lot. Bad PCE number tomorrow, I don't know. I have no idea. I can't see the future. Nobody else can. But these indicators tell you what's, this is the pulse and the blood pressure and the heart and the lungs of the market as far as I'm concerned. Market breadth, the NYSE AD line. Interesting, well, really not interesting if you know where the strength came from. Peaked at the end of December, and while the S&P 500 has gone up, market breadth has been sloppy again because you got 4 mastodons that are dragging the market higher. So this is what this looks like right now. It's above the 21-day moving average, so it is positive. So there's your Asbury 6. ETF asset flows. I talked about how important I thought that chart of NDX relative to SPY was with a 21-day overlay, because that's the tactical time period that we use. This is the sister kind of companion chart to that. We've got the Q's total net assets in monthly expansion since November the 2nd. NDX has risen by 21% since then. Touch the 21-day here on D6. That was another minor bottom in NDX. Jan 5, same thing. Jan 31, same thing. Look where we are now. We're struggling to stay above that. When this turns, and one day it will, and we start getting monthly contraction, well, that means the index that is housing those 4 dominant stocks as a group, there's asset contraction going on there. That's a big red flag. So again, this is probably the second chart. If I had 2 minutes in an elevator to explain to you what to pay attention to, this would be another one. Relative performance, SSO versus SPY. SSO, to those who don't know, is the ProShares Ultra S&P 500. It's 2 times the S&P 500. So I look at that relative to SPY. Why? Because SPY, if you buy SPY, it means you're bullish the market. If you buy SSO, it means you're really bullish the market. So I want to see the relationship between those two. If the really bullish investors out there are overwhelming the bullish investors, and again, I'm oversimplifying this, look at this outperformance. SSO started outperforming SPY on November 2nd. Look what happened. Beautiful rally here. We're testing that. If SSO starts underperforming SPY, that's another red flag in my office. Alarm bells start going on around here that I need to pay attention, because we're losing that enthusiasm that we had since November 2nd. Options volume. This is the simple CBOE put-call ratio. I'm going to speed it up here because I'm running out of time. Put-call ratio, typically, and this is reversed y-axis here, but typically when you're at a least bearish extreme in the put-call ratio, and under normal situations, it coincides with peaks in the S&P. This isn't a normal situation now. Why? Because these 4 giant stocks are dragging the market higher, but it's something that I want to be aware of. Options premiums, this is the IBD options premium index, and you can see here that February 16th, we have all these peaks here in this particular index. You go to IBD and get this right from them, and you can see that typically when we're at this extreme in the index, we're near some kind of a peak, and you can see previous peaks going back to 2018. Overbought, oversold, not going to spend a ton of time here. We're overbought on a monthly basis. We're overbought on a quarterly basis. Again, that doesn't tell us what to do. It tells us the environment we're in. The environment that we're in is historically overextended according to these metrics. These are breadth metrics, market breadth, near-term negative, intermediate-term neutral. This is the NYSE stocks, percentage of NYSE composite stocks trading above the 40-day moving average. Typically, this will tell us where the near-term tops are. It hasn't this time for that same reason. Very narrow group of stocks is dragging the market higher. This is that same metric looking at it through a 200-day trading lens, which is more of an intermediate-term move. It's dead neutral, right? But this, again, this is the process that I go through. So we're looking at breadth and volatility and asset flows and all these things all the same way. And if you do that for yourself, whatever indicators you use, you will have a sense of what is out of the ordinary, and it will help you make better decisions. Investor sentiment, 2 different investor sentiment metrics here. This is futures trader sentiment, and it is overextended, too bullish. And typically when it gets to this level, we're at some kind of a peak. This is the II data, the investors' intelligence data. Asbury Research is actually one of the inputs for II, which is great because we get all their wonderful data. And you can see that the percentage of bears is down at a 23-year low of about 14 to 16%. Previous instances of this have picked out or gotten in front of some pretty important market tops. Seasonality. Seasonality annually since 1957, March and April are good months. They're the fourth and the second seasonally strongest months of the year. This is that same data, but now we're looking at the first quarter via 13 columns that represent the 13 weeks that are in the first quarter. And what you can see is you've got some weakness here mid-February to early March. And then March is all over the place. We've got the last, the month of March is what I'm trying to say. It includes 2 of the 4 weakest months and 2 of the 3 strongest months or weeks. The 4 weakest weeks is what I mean to say, and the 3 strongest weeks during that entire period. So what does that mean? It means that March is typically bumpy, so be ready for a bumpy March. This is size, as I mentioned, large cap outperforming the S&P 1500, which is SPTM. S&P, which is the S&P 1500, which of course is the sum or total of the S&P 4, 5, and 600. Outperformance here, it's not lighting the world on fire, but that's where the quarterly trend is. Small cap and mid cap also have been underperforming since January the 17th on a quarterly basis. So right now, the trend is still towards large cap. Until that changes, when I'm looking for assets to buy, I'm trying to stay with these bigger trends. Growth. This is growth over the S&P 500. SPY-G is what we use. SPY-G has been outperforming SPY on a quarterly basis. Again, quarterly because that's the strategic trend that I want to be in since January the 17th. This is our CART model. So 4 of the 6 domestic relative relationships in the CART model, which are the top 6 listings here. Stocks versus bonds, high beta versus low vol, large cap versus small, broad market versus blue chip, broad market versus tech, growth and value. And then we have at the bottom here, U.S. versus developed markets and U.S. versus emerging. But 4 of the top 6 here are in a strategic offensive or risk on alignment. Why? Because stocks are outperforming bonds. The broad market is outperforming the Dow 30. Growth is outperforming value and so on. So right now, the tilt here is still towards risk on, according to CART. Here's one of those that it mentions, SPY versus AG. On a 63-day basis, it's been outperforming, stocks have been outperforming bonds. SPY has been outperforming AG since 11.3. That's what it looks like on the chart. There's 11.3. AG is the iShares Core U.S. Aggregate Bond ETF. Many analysts use this as just kind of a general indication of the corporate bond market. And you can see the breakout from a lot of sideways relative performance. SPY really started outperforming on the 3rd, it's outperformed by 13%. So that's a relationship to what we see on the chart and what we see in the CART model itself. This is U.S. versus the world through the week ending February 23rd. Just one of the 25 global equity indexes represented. Japan is currently outperforming the S&P 500 on a tactical and on a strategic basis. Last year, or in 2022, during the bear market, or the major downturn, let's call it, of 2022, the first 4 months of the year, you saw Chile and Brazil and Peru light up here. So we allocated some money there. Why? Because our work told us that the S&P looked like it was going into a correction, so we're looking for other places to invest. This, which is arranged geographically, like we have South America here, we have Asia Pacific down here, Western Europe here. This told us that we were getting some emerging trends, which gave us a place to diversify to during that down period. This is our SEEF model. The SEEF model tracks the S&P, it tracks the acceleration of assets moving into or out of the 11 sector spiders in 3 different time frames: trading, tactical, and monthly, and it ranks those fastest assets in. Over the past week, we're going to technology and energy, fastest assets out. Over this previous week, this is updated once a week on the weekends. Industrials and utilities were the fastest assets out. We do the same for tactical. We do the same for strategic. We add up the scores for the ranking. The top 3 ranking are the ones we invest in. So right now it's XLK, XLF, and XLY. Money is coming out of primarily utilities and also materials. These are the rainbow charts that go, they're the accompaniment for the SEAF model. So you can see technology. We had strong January 5th, right around that time that I told you things started to shift. On January the 5th, technology started to move into a void territory, but quickly did an about face. Look what happened down here on the relative performance chart. XLK outperformed SPY by 6%. We saw the same thing here. There was money coming out 2 weeks ago in front of the NVIDIA. It's clear to me it was in front of earnings for NVIDIA. As soon as that came out to be positive, right back up in the favorite territory. Here's the flip side of that. This is utilities. It's been in a void territory according to SEAF, according to the rainbow charts. Since January the 17th, it's underperformed the S&P by 7% since then. This is another way we display all of our signals. It's outperformed the S&P, hypothetically back testing this, and this has been in real time. I've been trading this for my account for 2 years. But it's outperformed the S&P 11 of the past 16 quarters. All this is on the website, by the way. I'm going to breeze past this. We're getting a little bit late on time. Feel free to interrupt me if you have to, Jeff. But all this is available. Just go to asburyresearch.com, go to models, and all this is there. And it's done it with a little less risk than the S&P 500. Maximum drawdown a little less than the S&P, a beta a little bit lower, standard deviation a touch higher. This is what the chart looks like. SEAF since the beginning of 2020 in green versus SPX, which is down here in blue. There's the quarter by quarter representation. All this is on the website. Finally, TNX, double bottom here. TNX tracks the yield of the 10-year note. As long as we stay up above, basically this is 419 in yield. It targets a move up to about 457, 458. So with that disclaimer, please read the disclaimers on our websites. We're very careful about wanting people to know what the risks are. This is not fun and games. This is a very dangerous business. So this is how to get a hold of us. If you're interested, you can go to our YouTube channel. There's a lot more videos and information about us. So with that, I'm going to turn it back over to Jeff if I can, and hopefully he's still here.
I'm still here. Yeah. Where would I go? I've been taking notes. We do have a couple questions if you got a second.
Sure.
Dinesh wants to know, do you offer trade alert services?
Well, as part of our research, yeah, we have a research service for money managers, and then we have one for individual investors, and they both include branded emails that go out whenever there is a new signal or our models make, like if you go from risk on to risk off. So yes.
All right, cool. And then let's see. Mike wanted to know if from YouTube, are you using the AD volume line or the AD issues line? So the advanced declines volumes or advanced decline in terms of issues?
Volume. I think it's the former. You know what? It comes off of a chart package, just like MetaStock, right? So sometimes you forget which one you're looking at. But yeah, I'm pretty sure it's the former.
Okay, very cool. That's it in terms of the questions. Want to thank you, John. You did a great job. I've put the link into the chat box, and then I'm sure MetaStock's about to get that link into the YouTube chat box as well. But great job. Really appreciate you coming in. AsburyResearch.com, everybody.
Thank you. And I don't know if you guys are going to give a copy away of the PDF, but if anybody wants one, I would be more than happy to share that with you. Go to AsburyResearch.com and go to the contact tab, and I will get one to you. Thanks for your attention. I hope this was of some value in how you're trying to determine how to build a nice procedure for yourself.
It was great. And the other thing that was really nice is it's a lot more broad than we usually talk about. And I like to try and get, so thank you for coming and sharing that with us, John.
Thank you. Thanks.
All right. Very cool. Let me go ahead and dismiss you. All right. And we'll just go ahead and wrap up for the day. Big thanks to John for coming in. And then let me go ahead and make me the presenter. I guess I am. And then I'll show my screen and we'll just wrap up. Thanks for coming, everybody. I want to say thank you again to our sponsors, AAII, CMT Association, and of course, Task Magazine. Very, very good. That was another great day. Here's the website for Raspberry Research. Just wanted to kind of, as we kind of normally do, just kind of talk a little bit about what we've got coming up tomorrow. Another great lineup, really. Let me go ahead and kind of load the schedule real quick. Well, I guess we don't have to wait for it to load. So tomorrow we're going to start with Daniel Sinig. Daniel is a really, really good system designer. He's going to talk about some of the new stuff that he's been working on and he's designed in MetaStock. And it's really a do not miss. Martha Stokes, CMT member. We always love having Martha, and she does a really good job. So come to that one as well. We've also got Melissa Armo. She's going to talk about stock trading gaps and looking at gaps. We've got Alex Kuhl. He's going to talk about his go no go methodology for looking at stocks. Peter Delaw's coming in. He's going to talk about his ingredients that he uses to find a successful trade. We've also got Rob Booker. Rob is going to talk about pivot points. And we've had Rob on, and I'm excited to have him back. Jerry Allison's going to come in. Jerry always has some very, very interesting topics to discuss about your trading in general. If you're here in the US, should you be trading as a business? Should you not be trading as a business? Is it helpful? All that kind of stuff. So great lineup tomorrow, and going to be very, very entertaining. Of course, we are MetaStock. If you haven't tried out MetaStock before, you should. You can join our list of growing customers. I'll answer your question in just a second. That have been with us for decades. So if you buy a month, we'll give you the second and the third month for free. You can go to metastock.com/conf promo, metastock.com/sales chat. You can call us. We would love to talk to you at 800-882-3040. Joss, to answer your questions about when the recordings will be available, they're available now. You want to go watch today? Go to youtube.com/metastock. Click on the video for today. You can watch it right now. All of the videos that we do here are streamed straight to YouTube. And so go up there, youtube.com/metastock. Here, I'll type it out for you. MetaStock. Subscribe to the channel. We're trying to get to 70,000 viewers. We're up at 68,000 viewers right now. And we have tons and tons and tons of really good content. Just tons. We've been putting content up there for years, and that's where we put it. So, okay. And then somebody is asking me to share my webcam. I've got the lights on. I guess I might as well. So, youtube.com/metastock. Make sure to like and subscribe. It helps a great deal. It helps us get the word out about MetaStock. And if you haven't tried it, you should try MetaStock. Metastock.com/conf promo. Metastock.com/sales chat. 800-882-3040. For those of you that are left, thanks for staying all day. It's good to see you. I'll see you again tomorrow. Thanks for being here. And also, thanks to the sponsors, the speakers, the everybody that helped me. You for coming. Everybody. It's been a great event. It wouldn't be possible without you and the speakers and everybody else. So we'll see you again tomorrow, guys. Thanks for coming. And thanks. See you tomorrow.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.